Bitcoin MENA 2025. We are here at the Bitcoin Magazine news desk, powered by Crypto.com. Super pumped to be here. My name is Frank Corva, Bitcoin journalist, joined to my left by Aaron Von Weerdum, former editor-in-chief at Bitcoin Magazine, and none other than Obi Nwasu, CEO of Fedi, and Nolan Bowerly, a man who needs no introduction, host of The Great Awakening at Roxham TV. Gentlemen, very excited to be here with you. We're here not only celebrating the second year of Bitcoin MENA, we're closing out 2025. It's been an exciting year for Bitcoin. Nolan, let me go down to you first. What's the first thing that comes to mind when it comes to Bitcoin in 2025?
Well, I've been seeing everything through this American lens and what's going on with the Federal Reserve and the American Republic. And I've said from the very beginning, from Inauguration Day with you at the same news desk at PubKey, where I said the story was about the subordination of the Federal Reserve to the Treasury, how America was originally architected. Now, I had that subordination vocabulary. I saw Arthur Hayes really spice it up with the BBC.
He's a spicy guy, that Arthur Hayes.
He's a spicy guy. Yeah. I prefer his framing of it, you know, the BBC of Besant and all that stuff. So just watching that story play through, and it's really weaved its way through this area as well. We saw at this event last year the beginning of what our people are calling the sovereign game. We saw an acquisition by the sovereign wealth funds here. And that story's really progressed until now. We've seen that. It's what we've been saying as Bitcoiners for 10 years, and here we are, unbelievably on schedule.
Watching it unfold, absolutely. Let's get a little bit more of an international view here. Obi, big year for Fedi, lots of rollout. I've been speaking with lots of members of the Fedi team, lots of communities beginning to adopt eCash. Can you give us a little bit of an overview of what's going on with Fedi in 2025?
Yeah, it's actually been a crazy year. The price has gone up, it's gone down, it's gone sideways, but for us, that's been completely irrelevant.
Okay.
What's been relevant is what's been happening on the ground in communities around the world. We've been seeing incredible adoption in a number of places that are living under the yoke of authoritarian regimes, and we're also seeing a lot of stuff happening in the global south. So we just came from another event in Africa, where we saw, we built together many of the communities from across Africa to showcase of what they've been doing with Fedi this year. And we're really excited to see some of those things. There's many stories I can give you examples of. Do you want me to tell you
Maybe
some?
one. I was going to say, we got time. Let's go.
I'll just give you one.
Let's go.
They're actually many superstars themselves, because they were recently on BBC,
okay.
AfriBit.
Oh, AfriBit, Kibera. Amazing project.
Yeah. Kenya. And they have... it was a slum in Nairobi, for anybody who doesn't know, and there's a very enterprising, incredible, inspiring leader called Ronnie, who decided to take the slum and clean it up and use that as a mechanism to generate money. So the youth there who have challenges finding jobs and work were employed as effectively refuse collectors, and they've been cleaning up this slum but being paid in Bitcoin. And what's happened is that's led to this revenue earning opportunity in Bitcoin, which is then spread across the community. And so merchants are starting to accept Bitcoin, and you're seeing this circular economy grow. And we're going to see a lot. I'm giving a hint now over circular economies in 2026 to be a hint.
Let's go.
What we've done is we've added on top of that a project which we haven't been talking about. We prefer proof of work over proof of talk. But he's one of the examples where we're bringing satellite internet paid for in sats. And this is much lower cost and much higher quality internet than the internet they will normally have access to, but they have to pay for in sats. So what that's doing is the first experience of Bitcoin is not as a store of value, which is where many people think it is. It's actually as a medium of exchange. We don't explain what sats are. We don't talk about Bitcoin. We don't talk about the theory of money. We just let them get a necessity for lower cost. With those savings, they save money. And over a while, they themselves decide to use it as a store of value.
Love that. Amazing.
And so
work.
We're really excited to see that and many other things happening over this period of time.
Amazing stuff. I actually got to visit Kibera myself, and it's what Ronnie's doing. I want to give a quick shout out again. So AfriBit Kibera, please check it out. It's truly, truly stunning work. One of the best stories in Bitcoin, if you ask me. Aaron, you were going to add something to that?
No, I was just going to ask, so this sounds a little bit like the Bitcoin Beach project as well, right?
Yeah.
So maybe you mentioned it, but Bitcoin Beach had like an anonymous donor who sort of funded that. Is that the same here, or like where's the money originally? Where's the Bitcoin originally coming from?
So that's something that we'll be talking about more in 2026. But yes, there is. But it's key. The key difference is and by the way, there was an incredible event. Also, the first African Bitcoin circular economies event occurred in Mauritius.
The day after the African Bitcoin Summit, right?
And the guys from Bitcoin Beach were there, and it was an incredible event, really inspiring. But the idea is that there is a lot of philanthropic funding available if you can invest in projects which are self-sustaining, and that's the key. So you don't have to keep putting in new money. Every time you put money into this project for a given community, over time, above a certain amount of usage, the costs you still have to pay for the internet. It's just lower costs. It becomes cash flow positive, and so therefore there is no ongoing cost. So it's a difference between teaching someone to fish or giving them a well versus shipping in water every day. And that unlocks way more philanthropic funding. So that's a separate parallel activity that we're working on to be able to fund the rolling out across many communities. And there is a lot of communities who want this. We're just working with the first few to show that it can be sustainable, and that's key.
Yeah, appreciate that work, Obi. Nolan, yeah.
And just important that it's not focused, like you said, on the philosophy behind Bitcoin. It's
right.
just meat and potatoes, practical exchange, give and take, and let the market figure it out.
Yeah, I think people in the West, they often see, you start with education, however that comes, and then people understand Bitcoin, and then they buy Bitcoin generally to see as a store of value or to get rich or so on. And after a while, they start having two brains. They have their day-to-day expenditure brain, which is the local currency, and then they have their I want a number go up brain, where they want more Bitcoin, which means that it's now a unit of account, at least for long-term wealth. And then finally, at some point in the future, they might start using it to make a few payments, and then hopefully in 10, 20, 30, 40 years, they might actually start buying necessities with this.
Yep.
The problem with that is that doesn't work for most people in the world, because for two reasons. One, in order to have value to store, in order to use it as a store of value, you need value to store, and most people don't have disposable income, so they cannot store value as a non-starter. And also, if you're living in that sort of state, you don't have the bandwidth and time to be able to be educated on Austrian economics and the theory of money and so on.
What blockchains are. And
what we're seeing is something I say is BTC, backwards thinking, is correct for the vast majority of people. And you start with the necessity, food, water, electricity, power in the case of people like gridless and so on. Give them a necessity, but make sure that you can only pay for it in Bitcoin or in sats. And so you start with necessity, you go straight to medium of exchange. As a medium of exchange, you naturally start thinking, at least for that expenditure, in the unit of account. And then what we're seeing is, even without being prompted, within a few months, we're seeing numbers like 25 to 30 to 40% are starting to realize with their savings, those savings give them the money to now disposable income.
Love that.
And they themselves decide to store it as Bitcoin.
Yep.
And a few people may want to understand how this thing works.
Yep.
Over time, and then we give them the education when they want. But just like your microwave, your car, your TV, your mobile phone, you can use it for the rest of your life and not understand how it works. You don't need to
no
gain the
inherent need.
benefit.
100%. I love all this. Aaron, I want to come over to you. You've been covering Bitcoin now, I'm going to say, for over a decade, if I'm not mistaken, right? So working as the editor-in-chief of Bitcoin Magazine, covering Bitcoin, educating people about Bitcoin. We're seeing Bitcoin sort of, I think, as Obi was alluding to, sort of move in different directions. We have the financialization of Bitcoin. Then we have things like what Fedi is doing, getting people to use it on the ground, not even thinking too much about it theoretically or philosophically, but just using it practically. Where do you think we go? Do we just see these two things sort of diverge? Do we see Bitcoin eventually be thought of as money by a broader swath of the population? Where are we going, and what trajectory are we on right now?
I think there's competing narratives in Bitcoin in that sense, and that's been the case for years and still the case. So on the one hand, indeed, you have the financialization, institutionalization of Bitcoin. You see in the US even with the strategic Bitcoin reserve. On the other hand, and these are more the values that I care about, are like the cypherpunk values, right? And I think it's important for Bitcoin that stays alive. So that's, aspects like decentralization, privacy. Actually, I'm hosting a panel on this also today with Obi is going to be on it. This country is also interesting, I'm using the word interesting, but
Liberally.
It's a good example of that. On the one hand, they're adopting Bitcoin. I think recently there was even a law passed that you can pay taxes in crypto, I think. I don't remember
broadly.
which ones exactly. But at the same time, you also see laws being rolled out. Like, I believe it's now illegal here to offer self-custody wallets.
Is that right?
I believe, there was a law passed fairly recently. So, again, you see this very clear divide of, sort of the two faces of Bitcoin.
Yeah.
But I believe it's actually important, not just on an ideological level that Bitcoin retains these properties. I think it's also Bitcoin's actual value proposition. It is what differentiates Bitcoin from fiat or from PayPal
or at least digital fiat, right? PayPal or Venmo or something like that.
Yeah, so I think if Bitcoin would lose sort of these cypherpunk properties, then I think Bitcoin would lose. I think it's fundamental to keep that alive and keep that culture alive as well.
Yeah, understood. Nolan, I want to go to you. A lot of people think Bitcoin has won. I think this sort of, in the wake of, let's say, the Trump presidency, people think, the United States got a pro-Bitcoin president, and that can be debated for sure, whether or not that's, he's fulfilled all the promises he said he was going to fulfill. Do you think are we in the then they fight you stage? Are we getting past the then they fight you stage? Has that stage not even started yet?
Well, clearly we're in the they'll fight you stage because of the amount of manipulation of the price. The whole thing is a scam right now. The up and the down, it's nonstop. The incredible timing of Wall Street to offer all these products right when the market has a crash. So it looks like we're swimming with the sharks. We're on the main stage of this conversation. But to tie the two ends here, Bitcoin was always on a sort of double trajectory. It was there to change the money, and it was also there to fix these privacy issues and to remove that kind of censorship, the panopticon, the constant surveillance. I've always believed it's a two-step process. You get to the banking and the Wall Street section first, you change that configuration, and then eventually you start to realize that privacy has this importance. So we're still in a murky stage. We're still in a liminal stage because we're a bunch of people tearing down an elephant. We got the hooks and we're pulling it down, and looks like it's coming down. But there's a whole nother problem after that, and that is this cypherpunk realization. So it is a long trajectory to get to there, but it looks like the biggest obstacle we have is this Federal Reserve and is the legacy system that we all grew up in and inherited. So it looks like we're on schedule.
I appreciate it. I'm
actually comment on that real quick.
I want to have you both comment because I know, Obi, you also contributed to the piece to Bitcoin Magazine, but I just got word we do have to head over to commercial break just for a moment, but we're coming right back here to the live desk after this. We'll be right back. ...2025. We are here getting the day started. We have a star-studded lineup over the next 2 days. We'll be hearing from the likes of Changpeng Zhao, founder of Binance, Saifedean Ammous, author of the Bitcoin Standard, and of course, Michael Saylor, chairman of Strategy. But first, we were talking a little bit about the Bitcoin ethos, the cypherpunk ethos, and why this is important and why it's important that it doesn't get overshadowed by the financialization of Bitcoin. Aaron, I think you wanted to jump in to piggyback on something that Nolan was saying before the break about why it is important that right now, in this moment especially where we're engaging with banks and this financial industry, why is it so important that we keep this ethos alive?
Yeah. My comment was probably going to be shorter than your question right
there
now.
There we go. Let's go.
I just wanted to, because I mentioned the UAE example, right? But you see something similar in the US with, on the one hand, the Trump administration, as the obvious example, is sort of embracing Bitcoin. on the other hand, samurai developers are going to jail right now, or sitting in jail right now.
Yeah.
So
not in jail yet, but sentenced. They've been
well,
sentenced to jail.
Okay,
Yeah,
fair enough.
Yep.
But so to your answer, to your question, are we in the fight? Fight stage?
Then they fight you.
Yeah. Then I mean, I think it's it's happening simultaneously.
Okay.
Like on the one hand, they're embracing aspects of Bitcoin. On the other hand, and by they I mean government, or and on the other hand, they're fighting it actively also still.
Yeah. Yeah, it is kind of two things playing out. It's been kind of very tough to cover both of these when I was doing so for Bitcoin Magazine. But Obi, I want to go over to you. You published a piece for Bitcoin Magazine just a few weeks back around, I think it was Eric Hughes, cypherpunk ethos, why privacy is important. Can you talk about, especially in the context of what you're doing with Fedi, how you're offering people privacy and why it is so important, especially in the context in which you're serving people?
Yeah, well, first of all, I want to comment on something. And my view is that these things do happen in parallel, but you have to have a zero tolerance on letting go of privacy on Bitcoin. It's one of these things where it may not be possible to get back once you lose it. So that process has to be this constant. I did an article recently on that, and we'll be discussing it later on today, in fact. But there's something called the Cypherpunks Manifesto. And many people who are in Bitcoin now may not even be aware of this.
Please teach us a bit about
and
it.
this was the Cypherpunks were this group of incredible people who, very early on, they were very prescient. They understood that even in the early days of the internet, that it was very important to maintain certain values to protect this incredible resource that had been created for the world. And one of them, Eric Hughes, decided to take a collection of different conversations and summarize it as a manifesto of certain terms. And it was called the Cypherpunks Manifesto. It's often, if people do remember it, as this famous line, cypherpunks write code.
Code, right.
Which is true, saying that code is the way to help solve an action change in the world. Whatever world you want to see, proof of work versus proof of talk in code.
Yep.
However, that wasn't actually the main message of the manifesto, even though it's the one that's often cited. It was mentioned 3 times. And in fact, 3 years later, 2 or 3 years later, he even corrected himself on that line.
Eric Hughes did?
Yes, Eric Hughes did. But what was mentioned 22 times in the manifesto was the fact that privacy is extremely important. In fact, it's essential. The first line is that privacy is essential in an open society in the internet, for an open society in the internet age.
Yep.
And he went on to explain what privacy is, which is not the same as secrecy, and so on and so forth, and repeats this again and again and again and again. 2 or 3 years later, he even said, okay, cypherpunks write code, but without a general acceptance in society of privacy, so he doubled down, code is not enough.
Yep.
So it's all about privacy. Now, this document, this treatise, inspired a number of people around the world. And it led to things like WikiLeaks, it led to things like Signal, the messaging client,
app, right?
And it inspired Bitcoin. In fact, it was mentioned, cypherpunks ideologies and so on were mentioned by Satoshi Nakamoto on a number of occasions. So that's a clear basis. It's not a non-negotiable. We have to have that. So in Fedi, we use a protocol called eCash behind the scenes to provide people cryptographic privacy while for their monetary transactions, custody, and so on.
The same way giving cash from one person to another provides privacy.
Exactly.
Right.
And we use a protocol called FediMint, originally created by my co-founder. It was the first Bitcoin eCash protocol. We also use other protocols to provide private communication as well. And we allow people to access the web, browse the web, with a curated set of websites that effectively use Bitcoin and also protect your privacy. The point with this, though, is with privacy is that today the average person doesn't care. So it has to be something which is
can I
as
clarify
easy or
there?
easy.
Is it that they don't care or they don't think about it a lot?
There's a really crazy paradox. When you actually ask them, they really care.
Okay.
When you look at their buying behavior, they always choose convenience over privacy.
Right, okay.
So the lesson is you have to meet people where they are. They need privacy, they just don't realize it. If I'm a child, they need certain protections, for example. They may not realize it. You just have to give it to them.
Yep.
You have to give them the medicine with the vegetables or whatever it is.
Yep.
So we give them privacy, but the user experience has to be as good or better than what they have now.
The normal apps,
so
right?
So it just that's why in my first statement I didn't mention privacy. It's just you just get it. It should be privacy should be considered a human right.
Yep.
And you just get it as standard. Just like you have your program uses code, it should just have privacy built in. And separately, the way we describe it is private is key. We talk about private keys. Private is key.
Love it.
And what's really exciting is we're seeing more and more, and I'm hoping to see a lot more of that over the next year. More and more Bitcoin companies are starting to add privacy by default into their apps, which is reversing a trend, which was of less and less privacy in Bitcoin companies over the last few years. So I'm really excited about that.
Okay, amazing. Please, Nolan.
That's exactly why I see it as a two-stage process, but not as a. They can't be separated. I agree, privacy and the financial side, but. Like you said, humans are not logical. Even Bitcoin has proved that to me. If it was just a question of IQ or access to information, we'd be on a Bitcoin standard today. The truth is, and large language models have sort of taught me this, we're sort of a sum of our wants and our fears. We make decisions based on our wants and our fears.
We're emotional creatures.
Yeah, and then we call intelligence the sort of reverse engineering and explaining it to ourselves of the decision we've already made. But that's why the financial side, recalibrating our wants and our fears so that we understand what the value of privacy really is. We're just not there as a society now. Even myself, if there's something I have to sign up to, I have to scan my face or something, I don't think twice. And we're just not there to value and really want this privacy thing yet. And we don't really understand essentially why it's so scary to not have it.
Yeah.
I expect that to change a lot in the next 6 to 18 months.
I agree
Why,
with you.
if you don't mind me asking?
AI.
Yeah.
Okay.
Because everybody talks about, right now, your information has probably been hacked or exploited on multiple centralized databases over the last however long you've been on the internet.
Yep.
So if you've been on the internet 15 years, it's been exploited. There are sites you can go to, put in your email address, and you can look very depressingly at how often your details have been shared. The problem is, billions of people this has happened to. But you haven't been affected by it. You don't see yourself being hacked or exploited by this.
Yep.
And the reason why is it wasn't scalable to do this. So hacking units and so on and gangs will focus on a subset of people because of the effort they need to hack and a certain wealth level. So it wouldn't make sense below a certain amount. So most people think it's not going to affect me. But now you talk about vibe coding. We're seeing already, and Anthropic did an article recently about the first instance of vibe hacking, where someone just speaking to Anthropic, right now it's only the centralized AIs are good enough to do this. But the open source decentralized ones are only 6 months behind. So they were able to see people using Anthropic to vibe code hacking software, which would automatically check these databases, attempt to hack these systems, and actually successfully hack and exploit. But this would now cost people pennies, and they had no skill, no coding skill needed. So once people can see that works, that's going to spread. And when every mischievous kid at at school can hack all of their friends and teachers, every disgruntled employee can hack their boss, and it starts happening way more frequently, and it becomes real. And now the amount that you want to get from it, also you don't even have to hack for money. Yeah, you could just hack for information that's valuable for you to keep private, but for no one else. And someone will pay $20, $30, $50 to keep that sensitive picture or so on private, even though no one else values it. They value it.
Of course.
And so when that happens more and more frequently, people are going to start thinking, this is happening not just to some random person far away, but it's happening to my friends, it's to my colleagues, or to me, again and again and again. Maybe I should start thinking about taking my information off centralized databases. Maybe I should start, but then where do I put it instead? And that's when solutions where you can take control, or your community can take control of your money, of your data, your communication, becomes significant. So I think in a weird sort of way, AI is actually going to accelerate adoption of privacy-preserving tools.
Appreciate that. Aaron, I want to go to you. Again, you've documented this for a while now, over a decade. Do you feel like we are getting to a point where people are going to experience this vulnerability? Is it inevitable that basically pain is going to become a teacher for a lot of people, right? They're going to see something's going to stop being theoretical, like, oh, this could happen. They're going to experience it. Is their behavior going to change as a result? Do you agree with everything that Obi's saying?
I mean, generally speaking, people do care about privacy when it's like very tangible, right? Like people close their curtains, or they will close their bathroom door, or like in these aspects is very, people understand why they care about privacy. So yeah, the more tangible it becomes, the more obvious it will become to people why it matters. And I think also right now, you know, in some countries it is already much more important, you know, to protect your privacy. But yeah, what Obi is doing is very interesting, you know, because you're using eCash, which is in itself, you know, one of the predecessors of Bitcoin, which, by the way, which camera are we on?
I think we're on one of those two over there, right or left.
The Genesis book.
Just one
Get
of
it
these.
in stock today. I wrote.
Aaron von Weerdem, author of the Genesis book.
But yeah, no, it's very cool that, you know, you're using one of the predecessor technologies of Bitcoin now on top of Bitcoin to get these same benefits. That's
and like super predecessor, 1980, I think it was developed, right?
1982, the white. It's about 25 years older than
Bitcoin itself, right?
Bitcoin itself.
Yeah.
It provided incredible privacy. It was very, very easy to use, very intuitive. If you ever use an eCash wallet, it actually fulfills the promise of cryptocurrency. With one problem: it required a trusted third party, and we've reduced that trust by making it federated, and backing it, instead of backing it by a fiat currency, we backed it by the most decentralized money the world has ever seen, which is Bitcoin. So it was actually an idea before its time, and I think it works way, way better on Bitcoin. And but just going on to, you say certain parts of the world, there's certain parts of the world where they need privacy. We work with people, activists
authoritarian regimes,
or journalists who are working in these areas where, if they were to communicate in those regions, their conversation could cause them to have significant issues, or their families. If they were to transact in those environments, they could be at significant risk. And so they are effectively living in that future where, as Aaron said, they understand that private is key. And so I was at this in Africa just last week, and a statement from one of the keynotes was that if you're thirsty, you know what water looks like. And it's the same with privacy. If you start seeing the impact of not having privacy every day, you'll very quickly understand why you need privacy.
Appreciate that. We have to go back to the main stage in about a minute. I just want to maybe close with Bitcoin in 2026. What are you looking forward to? What do you hope happens? Nolan, I'll start with you.
Well, I think it's exactly on the theme of this, right? We're seeing more or less this conversation about the macroeconomic situation take shape globally. It looks like we're entering a new financial system. It looks like Bitcoin is front and center in this, but indeed passing the narrative to this privacy thing. So I think it's actually, in a way, I don't wish this terrible responsibility on the Samurai Wallet folks, but it is kind of weirdly coincidental that their story in America is now starting to push its way into the national consciousness.
For sure.
It's starting to come main stage as well. So it looks like 'twas written in the stars, and 2026 is going to be, like 2025, exactly what we need and want.
I like it. Appreciate that. Obi, prediction, or what do you hope to see happen?
Three things. One easy prediction that's very personal to me and to us at Fedi. We promised nearly 18 months ago that on January the 3rd, 2026, which is a very key date in Bitcoin history, January 3rd, that Fedi will go completely open source. And so we're on track for that to happen.
Amazing.
And so watch this space. But the difference is we're a highly resourced company who's built a very commercially strong product, fully security tested and all this sort of stuff. And we're giving it away fully open source, so we're excited about that.
We appreciate
the other two things are privacy. We already discussed that, so I don't need to discuss that more. I think that's going to become more on the agenda next year. and also communities. It was really exciting to see all the work from Bitcoin Beach, Cassie, and Bitcoin circular economies around the world.
Yep.
And I think you're going to see the expansion of the idea and the lessons coming from the global south on how to do this right, expanding to the west. I think you're going to see some very exciting projects happening in the west, which are going to be very innovative in using Bitcoin circular economies and community and using that as a superpower.
Yeah, I'll add quickly on that. I was just at the La BitConf in Argentina.
Yep.
That was a big theme down there, and I'm already getting people saying I want to talk about the whole circular economy thing in 2026. I got people saying, hey, can you put me in touch with the Bitcoin Magazine organizers of the event? I want to talk circular economies. I hadn't seen that before.
Okay.
I hadn't seen people pitching that,
I
and
like
now
that.
it's here.
Appreciate that, Aaron. We got to go back about 15 seconds. A final prediction. What are we looking forward to in 2026?
15 seconds. Oh my God.
Let's go. Pressure. Yeah. Let's give you 30 seconds. I'll hold off our producer. You go for it.
I mean, it's a completely different topic than what we discussed, but I think we might see a contentious soft fork attempt in the new year, right? It's possible.
Let's just go into that.
15 seconds, we're done.
I'll summarize it. Yeah, no, I mean, I think that will be, or maybe it's not going to be interesting. Maybe it's just going to go absolutely nowhere. But
yeah,
it is a story that I've been following that sparks my personal interest, at least. You know, it's like protocol level development and how that will play out. It's at least something I'm going to be following and watching.
Okay, yeah, so again, Bitcoin Core versus not, it's highly contentious. If you're on X, hopefully you've taken a little bit of a step back from it, got emotional this year, 2025, Bitcoin Core versus not. Hopefully we won't see too much more fighting there. We like to see unity within the Bitcoin space. I think we are headed back over to the main stage, the Falcon stage. The event is about to get underway. We're about to hear from His Excellency Dr. Mohamed Al Kuwaiti. We're headed over to the Falcon stage. Stick with us. We'll be right here at the live desk all day from Bitcoin MENA 2025.
Yes, that's the spirit. I'm Maria Vovchok, and it's my pleasure and honor to be your host today here for the next 2 days on Falcon Stage. If you're still feeling the energy from yesterday's Formula One finale, you're in the right place. Because today, we're shifting from horsepower to hash power. And we gather here at the moment that truly matters. Across the world, people are rethinking money, value, and economic freedom. And Bitcoin sits at the center of that shift. Today, we are here in the region that truly understands better than anywhere else. We are in the capital of sound money. We are at the very beginning of a new era in which Bitcoin is reshaping how we perceive and exchange value. Bitcoin MENA brings together here for you the most influential voices in Web3 space, all of them here under one roof. We're joined by a remarkable lineup: Michael Saylor, Dr. Saifedean Ammous, Dr. Mohamed Al Kuwaiti, CZ, Yatsu, Anthony Scaramucci, and many more. We also want to say thank you to all of our partners, and especially to our title sponsor, and Alpha, for making this event possible. Before we begin, just a few quick notes. Make sure that have you downloaded BTC MENA app? Have you done it? Who hasn't done it? Raise your hands. Definitely download it as soon as possible, because it will help you to navigate the space. Also, make sure that your wristbands are visible, because they give you the access to all of the sessions and all of our stages. And don't forget, as always, connect, collaborate, and share your experience on socials using the hashtag Bitcoin MENA 2025. All right, are you ready to make history together? Are you ready? That's the spirit. So let's start by welcoming our first speaker. When I said that we have a remarkable lineup, I'm so happy to welcome on the stage, and please give him a big hand. His Excellency Dr. Mohamed Al Kuwaiti, Head of Cybersecurity for the UAE Government, Cybersecurity Council. Please be louder.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, everybody. Thank you for coming. Thank you for becoming part of this great journey. And welcome to UAE, welcome to Abu Dhabi. And I hope you're enjoying your time yesterday. Yes, Formula One. MashaAllah, great, successful stories there. And today, the Bitcoin MENA, I'm sure you will hear great things happening as well. It is our pleasure to welcome you all and to send the message of safety and security. We in the Cybersecurity Council under the government of UAE is focused on the UAE visions of moving towards an AI nation. With that, AI nations will definitely need every one of you to help and support in building that great nation. Here in Abu Dhabi, capital of capitals, working in many of those investments aspects, and I'm sure you've heard as well about the Abu Dhabi Financial Week, which actually focuses on as well so many of those investment. And there is another event happening as well, which focuses on basically called Bridge, and the content creation of so many of these great aspects. We have 5 main pillars in our national cybersecurity strategy. One of it is governance, and this where comes the Bitcoins. Laws, legislations, regulations, policies, procedures, many of those things are needed and always will help how we navigate this new era of AI. Second pillar is to building that relationship, building technologies, building great supply chains, and working together in order to actually build that message that we send to everybody, cyber security culture. And this brings us to the third pillar, which is focused on our main mission, to protect and defend. I'm sure you walked through many of those great partners outside there, be it in the mining, be it in the supply chain, be it in, again, content creation, or be it in many of the cybersecurity and things that they're actually working on. Many of this need that umbrella pillar of to defend and to secure. And that's what we are actually sending the message of. That UAE is #1 in safety and security across the whole, alhamdulillah, world, based on the United Nations, as well as many of the competitiveness rankings. And we are #1 in cybersecurity as well, based on the Global Cyber Index, which actually, again, sending a great message to so many of our partners who want to invest, who wants to come and build their startups here in country, or who wants to actually bring their companies, again, and their great small or big startups here in country. The fourth pillar is what UAE is well known about because of this great 200 plus nationalities that we have. It's the innovation. We innovate in order to ensure that sustainability is actually across so many of our perspective. We innovate in order to continue that resiliency as well as creativity across many of the things that we have. And I'm sure you've seen so many innovative ideas in that perspective. And that brings us to the fifth and last and main pillar, partnership. We cannot do any of those things without that partnership. We need you all. We need to partner. We need to build up that engagement with everybody. And that's what we are doing here. Bitcoin MENA is really sending that message across so many of, again, global platforms. Bitcoin MENA is helping us in many of this aspect to send those messages. Cybersecurity culture, safety and security, working together with you all is our goal, is our message, and that's what we are actually doing here together with you all. I hope you will enjoy your times here. I hope you will, inshallah, find a great momentum here in Abu Dhabi, especially going through so many great things and events, as well as National Days celebrations. And I'm sure, inshallah, you will find great partners in this, again, venue. So again, thank you very much for coming. Thank you very much for being part of this. And let's engage. Thank you.
Thank you so much. I truly believe that it's also, as His Excellency Mohamed Al Kuwaiti said, about building relationships and about building the right technology. I'm so excited to welcome on the stage, and please give him a warm welcome, His Excellency Mohamed Al Shamsi. Please welcome him on stage and be louder. Louder, please.
Assalamu alaikum. Good morning, everybody. I'm so glad to be here with you, and it's a very good opportunity to announce about Mazoon Company, investment company, belong for His Highness Sheikh Mohammed bin Isa bin Zayed. We just start months ago, and it's a very good start to be from Bitcoin MENA. Today, we are living in historical phase in which future of the world economy are changing at unprecedented speed. Bitcoin is no longer just a digital asset, but has become a key pillar in the future of financing. And with it comes the rule of mining as the beating heart that maintains the strength, security, and continuity of network. Today's mining is not just 24 hours devices. It's integrated industry that relies on energy efficiency, accuracy in calculation, and ability for scale. Abu Dhabi, with its strategic vision and advanced infrastructure, has today become one of the best environments in the world for growth of this sector, whether through direct investment in mining farms or through cloud service that have allowed everyone the opportunity to participate without need to operate device. Cloud services are not a luxury, but a smart step to enable companies and individuals to enter this field safely and transparently, while reducing operational risk, increasing the ability to expand quickly, and taking advantage of latest cooling and energy efficiency technology. As the world enters a new place based on artificial intelligence, big data, and web technologies, it has become clear that those who have the ability to process and compute, whether in data centers or mining platforms, will have the key to the future. Here is come important question. What required from us today? Investing in knowledge to understand technology deeply before investing financially. Collaborate between the public and private sector to build an infrastructure capable to supporting computing and clean energy interests. Embrace innovation, whether in mining, energy efficiency solution, or in cloud platform. Move quickly, because the future will not wait for anyone, and those who are late today will pay for being late tomorrow. In conclusion, we have a golden opportunity to be a part of the next wave of transformation, an opportunity to establish a new economy based on transparency and innovation. I'm confident that the UAE, especially Abu Dhabi, is capable to being a global center that leads this future with all its strengths. Thank you very much.
Thank you so much, Your Excellency Mohamed Al Shamsi. Up next, we have also another exciting keynote. So please welcome for the opening remarks, Durar Islim, PhD, Chief Operating Officer and Alpha Platform Holding Company and CEO, Americas and EMEA, and Alpha, the title sponsor of Bitcoin MENA 2025. Please give him a warm welcome. Be louder.
Assalamu alaikum. Good morning, everyone. I'm Durar Islam. I'm the CEO of Ant Alpha. I'm very excited to be here today for this amazing Bitcoin MENA 2025 conference. Thank you very much for being here. I would like first to thank the Bitcoin conference team and management for putting this amazing conference together, and for all our partners, clients, and miners, and all the individuals who are interested in the space. And most importantly, I would like to thank the UAE government for creating the vision, the environment, the strategy for innovation and for crypto and for Bitcoin to be here to scale and innovate and build together. Why are we here today? It's not a coincidence that we are in Abu Dhabi today. It's not a coincidence that we are in the UAE. This country and the capital has been the center of gravity for innovation, AI, and energy, and one of the most important hubs globally for innovators and Bitcoin creators to be here. This is a very unique also region for other reasons. It's a neutral area. It's a country where people have the resources, have the infrastructure, and have the solutions to be able to incorporate their companies, to get the licenses they need, and to be able to focus on innovation, while everything else is being taken care of. It's really a unique intersection between energy and Bitcoin and AI, and I'm very excited to be here today with all of you. Where do we stand today as a Bitcoin community? We have been advanced a very long way in the last few years. On the institutional side, we have more regulation, we have more institutions, we have more products, and we have more solutions to be able to execute. It's a very different landscape from before 2022. And that spans the globe. It's not just about one country or two. We have the United States, Hong Kong, Singapore, UAE are leading the efforts into that expansion. And on the infrastructure side, we have very amazing solutions around custody, liquidity, execution, and into a lot of services around that. It's, again, a very different landscape from a few years ago. Now we can focus on building the applications, focus on building the use cases. We are able more to focus on how do we create more utility for Bitcoin and for the ecosystem of Bitcoin. And on the market structure advancements, a year ago or 2 years ago, it would not be imaginable that we will have a Bitcoin ETF. It's not going to be possible to think about we can now do prime brokerage and margining, and we can actually be able to build structured products and convertible notes and do lending at this scale. Now we can. We can with the efforts of the governments, the regulators, having clearer laws and regulations, again, all the way from the US to Hong Kong, but also because of all your efforts. People in this room, and even the ones outside, have been working hard for the many, many years to advocate for this space. And that's why we are here today, because of your efforts. And it's very important also to talk about the Bitcoin and the AI. Bitcoin mining and Bitcoin ecosystem become actually a critical and strategic components of the AI infrastructure. A lot of Bitcoin companies are building hybrid models, utilizing their energy and infrastructure to build data centers, are actually working as stabilizers for the energy grid. More and more, that makes Bitcoin and Bitcoin mining more integrated part of the strategic mission of governments and companies and beyond that. So it's a very exciting time. Now, what about Ant Alpha? We are a fintech risk management system for Bitcoin mining and Bitcoin. And we offer financing solutions around that. We are probably one of the most established Bitcoin maximalist companies globally. Our mission is really focused on supporting the miners and the Bitcoin community to be able to secure the network and drive the space forward. In addition to that, in addition to the financing products and lending products around mining facilities, energy loans, Bitcoin-backed loans, and beyond, we also, I would say, start doing more and more macro products related to that. We are the first one actually who participated in building the first digital gold public company in the United States that we launched a few months ago, early on. So we think about the world as how do we democratize finance? And that starts with enabling the infrastructure, enabling people to access digital assets safely and enable them to scale, and also adding products over time that supplement that, including digital gold. How do we think about the future in the coming few years? We already, as I said, advanced a lot, but there is still a lot to do. In our opinion, the main thing is to continue on enhancing and normalizing the global regulation systems. Bitcoin was created to be able to move money seamlessly between people globally instantly. And we cannot do it now without having a compliant and a clear paradigm globally. So the more we have clearer laws, the more we have more advanced regulations, like what's happening here at ADGM and at VARA, and what's happening on the SEC side in the US and the Hong Kong Financial Authority, the more it's going to be easier for us to be able to move money seamlessly and democratize finance over time. So we continue to focus on that aspect. And we need to continue adding services. We are mainly operating out of Hong Kong and out of Singapore and the US, but actually we are also creating a presence here in the UAE by next year. That not just because of the clarity of regulation and the savvy and friendly business environment, because a lot of our clients are here. One probably out of 5 clients I speak with, they say they are in Abu Dhabi or Dubai and they are very happy. And we want to service those clients. And we need to be closer to them. So one more thing. We cannot just service Bitcoin out of Hong Kong, Singapore, New York. We have to go everywhere. We have to see where clients are, where people are, where miners are. At Ant Alpha, we service clients everywhere, in Oman, UAE, Ethiopia, Uzbekistan, Texas. You need to be where people are. Bitcoin is for everyone. It's not just for the top tier 5 cities in the world. And this is what we want to focus on. A few market trends and observations, just from us working and being very close to the core ecosystem of Bitcoin, and especially for those companies who have been emerging recently and building new products. We really need to be mindful of strategy against agility. If you have been in this space for enough time, it's great to have a vision. It's important to have a mission, but implementing an agile strategy is critical for survival and for scalability. The asset class is, I would not call it volatile. It goes through cycles like any other industry. And to be able to be long-term builders, it's very important to manage risk and think about your products more long-term. Risk and compliance continue to be a core integrated part of what we offer and what we like our clients to do all the time. We are no different from traditional finance. We need to be integrated in the global ecosystem. We need to help increase the capital flow to the Bitcoin ecosystem. This is how we reduce volatility, and this is how we stabilize the Bitcoin ecosystem. And to do that, we need to keep working with our partners. We need to keep getting more systems and infrastructure regulated and licensed. And we need to keep that flow going and scale it. When it comes to liquidity and credit, one of the greatest things, of course, about Bitcoin is the decentralization part. And that has that decentralized ownership. However, we continue to be very centralized when it comes to custody, when it comes to ownership concentration, when it comes to the accumulation strategies. That is not very good long-term for Bitcoin. We need to see more competition, we need to see more providers, and we need to see more decentralization of Bitcoin allocation and accumulation globally. So it's a great thing when we see more and more Bitcoin treasuries. We need to see more Bitcoin treasuries with clearer mandates and better strategies around how they like to execute. But I think the space is moving in the right direction. And lastly, we have a lot of companies joining this ecosystem, the Bitcoin ecosystem, but a lot of them are focusing on creating new products we really need to focus more on what the demand is. We need to solve more problems. We already have big problems that we have been tackling for the last few years around liquidity, around access, around on-ramp, off-ramp. And all those problems are still not very well solved. So we are really encouraging our clients and even ourselves to be able to create more regional solutions so people who have access to Bitcoin or wants to trade Bitcoin or have access to Bitcoin products to be able to do it more in a local fashion. That is something very important to increase adoption. I cannot be more excited and honored to be here. I'm very thankful for you being here. It's an honor for us to be the title sponsor for Bitcoin MENA. This is just our commitment for building a long-term value for our investors, for the Bitcoin community. And I really appreciate you listening to me. And please enjoy the coming few days and all the Abu Dhabi Finance Week. And enjoy the rest of the day. Thank you so much.
Thank you so much, Durar. I truly believe that Bitcoin is for everyone. Is that right? Isn't that right? That's the spirit. We'll be back shortly. Stick around because we have something very special for you in just a few seconds. All right? We'll be back.
Bitcoin Magazine News Desk. We're here at Bitcoin MENA 2025, warming things up. I'm Frank Korva, Bitcoin journalist, joined by two legends, Linda Kariuki of BitSavers and Trezor Academy, and the one and only Luthando Nabambi of Bitcoin Akazi in South Africa. Linda, I want to go over to you first. You've been active in the Bitcoin scene for a few years now. You're a graduate of Bitcoin Dada. Shout out to Bitcoin Dada, African women learning about Bitcoin. We love it. What has it been like? What sort of work are you doing now? And what is it like building community in the Bitcoin space?
Yes, thank you, Frank, for having me.
My pleasure.
So, just because, just as you mentioned, I am a beneficiary of Bitcoin Dada, and it only makes sense that I can carry the same thing and I extend it to the larger community. So, having had the honor to host Trezor Academy Kenya, I have been in a position to build a community rather of over 130 people.
Ooh,
yes, I have
like
my own project. So, we've graduated 120 people so far.
Amazing.
In 3 cohorts. And our project is based on embracing Bitcoin as a store of value.
Okay.
Why Bitcoin? Because when it comes to Africa, we have so many currencies and also some of the most unstable currencies. And also unemployment is on the rise. The youthful population is also having to work so much so that they can just stay afloat. So it is so unfair for them. After working so hard, then they can no longer enjoy the fruits of their labor and see their money or whatever they have put into savings slowly erode in value, and they can no longer have what we could call financial sovereignty. So why not embrace Bitcoin? That's why I do what I do.
Why not embrace Bitcoin? Linda says we appreciate that. Luthando, you have helped many people, many shop owners embrace Bitcoin. You have built a tremendous community in Bitcoin Akazi. Tell us a little bit about what this has been like.
Okay, like to onboard shops in our community is not easy. So at least now we have 63 shops on board.
63 shops?
63 shops.
Amazing.
Yeah. So like I did see that I did do a lot of work in that township. And also like we are helping the kids to learn about Bitcoin as well.
An education center that you've built as well, right?
Yeah. And then next year we're going to build a Bitcoin community center. So where we're going to help the residents as well. They can hire our building, but they have to hire it with Bitcoin.
Okay.
Yeah, we don't accept fiat.
You mean all the people that are going to build the physical community center, you're going to pay them in Bitcoin to do that?
Yes. Like construction that is going to build our community center, we're going to pay them in Bitcoin.
Okay.
So they can spend their Bitcoin in those shops. Yeah.
Okay. Are people open to this? When you talk to construction workers and you say, hey, we're an economy that runs on Bitcoin, do they like, hey, this Lutanda guy is a little bit crazy, like what's going on here? What do they usually say to you in response?
Yeah, like our project special is going to talk with the construction.
Yep.
So I'm not going to do that work.
Okay.
So I'm busy with the township only. So the guy is going to organize and then he's going to tell them what we are doing in that township.
Okay,
So.
appreciate that. Linda, just a final thought. Maybe we have to actually jump back to the live stage, or I'm sorry, the main stage in about 30 seconds. Why is community so important when it comes to Bitcoin? Maybe just a few thoughts on that.
Absolutely. So I have volunteered for AfriBit Kibera, and after volunteering there, what made sense the most was to start like a circular economy in my local area, whereby I've educated people through Treasure Academy.
Yep.
And with the community, you're able to carry forward what people learned in theory. So they are able to transact and accept Bitcoin as money. And I can tell you that I have very creative people. So we have Bitika, which is an on-ramp.
Yep.
So these guys have been using Bitika as a point of sale. How crazy is that?
I like it. It is very crazy, ladies and gentlemen, but Linda Karaoke, not so crazy. Wonderful human beings that we have here, but we're headed back to the Falcon stage to hear from, we're going to hear from, I believe, a talk on the past and future Bitcoin adoption in the UAE. Stick with us. We'll be right back here at the live desk after this.
I met Dr. Marwan 13 years ago when I first came to UAE because I was doing some Bitcoin business in the state of New York, and the state of New York came out with the Bit license, which was basically a de facto prohibition against Bitcoin business. And after investing already a lot of Bitcoin and a lot of time and energy to have my business shut down in New York, I started thinking, where can I go that they would welcome economic innovation and freedom in currency transactions and such? So I had never been before, but I booked a flight to Dubai, and when I landed, within 48 hours, I basically put on the internet a post saying I'm looking to buy or sell Bitcoin, which was my line of business. And within 48 hours, I was on the phone with Dr. Marwan here, who at the time, it seemed, was probably one of the only people in this entire country who knew what Bitcoin was and was actively trading Bitcoin, but it's been a long time. So how do you remember that, Marwan, in the past of Bitcoin in the UAE?
I think when I started back in 2012, and it was basically, I was a forensic investigator for Dubai Police, and I attended a law enforcement conference here in Dubai, and somebody was talking about Bitcoin and how it was used in illicit activities. And from there, I literally jumped into the rabbit hole and learned mining straight away. And I was very fortunate that I discovered ASIC mining very quickly, and I jumped on that bandwagon very aggressively and literally stopped everything I was doing. I wasn't sleeping, I wasn't eating for 2 months or so, and literally just mined and started mining very aggressively, travel wherever I have to travel, buy whatever I can buy, go on forums, be very active in buying as much as I could, mining as much as I could, and then also reinvesting that again in Bitcoin and making sure that I advocate for it locally and internationally as well. And then we met, and then the rest is history.
Yeah, well, you've been doing a very good job for a very long time of advocating for Bitcoin locally. And I remember a few weeks later, I kind of joined started consulting with the first ever Bitcoin exchange in UAE, which will go unnamed because it had a disastrous failure. But then they hand me the list of the top clients, and right on top was Dr. Marwan, and then the next ones down the list were the same 4 people who were going to the meetups that Dr. Marwan and I were setting up. So it came to find that basically in the entire country, there was about 5 or 6 people who seemed to be doing anything with Bitcoin at all. And but Dr. Marwan's the real deal, the largest trader of the first exchange ever in UAE. And a lot has changed since then. Well, Paul, maybe you can say, how do you, just broadly speaking, how do you see the future of this industry from your perspective in UAE?
I mean, let me destroy all my credibility first, because we've given Dr. Marwan all not even the fraction of the kudos he deserves. This man is the godfather of crypto in this region, and of gaming and of AI, all the things I'm passionate about.
He's all right.
So I'm honored just to share the stage with him. Now, my 2012-ish story is much less glamorous. I was a gamer, a hardcore PC gamer, and a tech nerd through and through. And when I heard about this Bitcoin thing, I realized I could mine it with the PCs I had laying around at home. And I ended up mining quite a bit just with the equipment I had in my house. But this thing was sort of worthless. I was like, I'm creating fake money here. How do I do something with it that's actually useful to me? And I ended up buying a huge number of Counter-Strike skins.
Oh, perfect.
So invested basically every Bitcoin I mined in buying Counter-Strike skins, which maybe isn't the greatest investment story of all time. Hopefully destroys all my credibility here, because the sheer dollar value of what I spent on Counter-Strike skins in today's dollars would make anyone blush, I think. But that was my start here. And I would argue, just look around the room today and look how far the industry has come in this region. I will say, compared to other crypto conferences, you see many more people in ties here. And when we're thinking about the future of Bitcoin, I'll go just to the recent past. I think we've seen this adoption based on speculation. Now with Bitcoin, we've seen institutionalization. I think where the future is going is really all about utility. We heard it in the previous keynote, but utility has to be the future, I think, if we want to see this be successful in the way everyone thinks it should be.
I disagree. But I love your origin story as well, and I have one of my own as well. So I bought a T-shirt actually for 1 Bitcoin, and with Bruce Fenton, who's one of the early visitors to Dubai as well with Bitcoin. He helped organize the first conference, but what people don't know is that we used to organize pizza nights as well, where you used to pay in Bitcoin, and we convinced the person who was running that pizza shop to accept Bitcoin. So Dubai and the UAE has a pizza Bitcoin story as well, and it originates with some of the cool people that visited us and really wanted to use that utility of Bitcoin. But I think right now, and I think moving forward, Bitcoin becomes more of a store of value rather than a medium of exchange. The utility of Bitcoin becomes more about its longevity, and it's really, for me, it's very kind of not the vision that I envisioned Bitcoin for, but I think this is where we're moving towards. I think this is the thing that we're trying to escape when Bitcoin and the financial crisis that happened in 2008 was spinning off this idea of Bitcoin with Satoshi Nakamoto. It's going to be a very interesting time, this convergence also between Bitcoin, crypto, and AI. We're going to either go one way or the other, but I think having an in-between kind of society where you have Bitcoin enablement, privacy enablement using blockchain, but at the same time not having that much concentration of power, whether it's in the cloud compute kind of companies and big tech companies and AI companies and data center companies, where blockchain can at least nudge that kind of ecosystem towards more kind of equal playing field for the normal person, because your data is more concentrated. If you're worried about the internet with the privacy, now you're worried even more about your privacy with AI. And crypto provides a safe haven somewhat, for that, but Bitcoin is the ultimate kind of safe haven for pseudo-anonymity. But again, the world is changing, and we need to really be wary of those privacy concerns, but at the same time, the spread of wealth concerns as well.
So it seems the UAE's been very successful, in the very least, in attracting like crypto influencers that like to go on Instagram and Twitter or whatever they do. And for a time period, though, there was a point, which you remember, Marwan, where people who were actually trying to build Bitcoin businesses were actually leaving the country because, in my experience, it was mostly related to the basically the prohibition from the banking system here for you know, until basically 2022 or so. I don't think there was a single company who was open, except for one, which was mine. I don't think besides that there was a single company that was openly banked as a like Bitcoin or crypto company. And that was probably the kind of weak link in terms of developing here and building here. And I've heard that same story and same complaint many times. I mean, how many? Dozens probably. But it does seem to be changing. I think recently there's the names escape me specifically, but there's been a couple banks that have they've opened up direct Bitcoin sales to their, I don't know if they're allowing withdrawals, that's another story, but at least some exposure in their native banking app.
Yeah,
so
custody solutions with crypto. You can have crypto in your portfolio and directly exchange between.
So no doubt there's some people who are going to come to this conference that are on the fence of like, where should I go to UAE to try to do some unorthodox business, some novel business in the industry. What is it that, do you think UAE is finally ready to attract those types of businesses when nowadays for these types of businesses you can go to the US and you have at least for the time being, a pretty transparently positive regulatory environment. You can go to Singapore or Hong Kong or a number of other places on earth. Why should somebody seek UAE out as a venue to build their business?
It's regulation clarity, regulatory clarity, and choice as well. So in the UAE, you're actually spoiled for choice when it comes to regulators, and all of them have passporting rules with each other, which means if you're licensed in any emirate, you can operate in the whole UAE. And in Dubai, for example, we have a made-for-purpose regulator, which is VARA, Virtual Asset Regulatory Authority. In Abu Dhabi, we have ADGM, and Ras Al Khaimah as well. Paul can tell us the regulations over there as well. So you are actually, no matter what virtual asset service you provide, you can actually get licensed in one jurisdiction or the other, and no matter how your business or your activity is, we're regulating you on the activity, not on the underlying asset. So we don't fall into this trap of utility versus security. We have really clear and straightforward regulation that's staying for a long time, and also regulators that are willing to listen to the industry and also to the consumers.
And Paul, I think maybe the rack setup has gone under the radar. Could you shine some light on what the plan is there, or what makes it attractive?
Look, at Innovation City, we have more crypto companies registered than any other free zone in the UAE. And so on the banking point, you're right, historically it was difficult. I think we've gotten exceedingly good at solving this problem, and now the landscape here has changed significantly. The banks are much more open to banking crypto clients. I don't think it's nearly as much of an issue anymore. I think if you're looking at the UAE as a whole, the argument is almost infallible, meaning that you can compare it to any other geography. There's no other geography that has this perfect mix of regulatory clarity, lifestyle, taxation, ability to hire people from anywhere, ability to do business anywhere. Like, you go anywhere else in the world, there's always some issue. In the US, it's taxation. You also, if you have a great Russian developer, forget about trying to getting him a visa. So you have constraints just about anywhere in the world except here. Now in Ras Al Khaimah, we see our role at Innovation City more as a gateway than a gatekeeper. I think sometimes regulators can be gatekeepers because it's profitable to be gatekeepers. And we see our role as a gateway. So if you're coming in and you're doing something that's maybe doesn't need a regulator, that doesn't need heavy-handed oversight, we can license you quickly, cost-effectively, get you started, get you building the business. And if at some point down the road you do need a full-fledged regulator, VAR and ADGM, I would argue, are the best in the world. So it's this nice sort of in-between for people to come in, set up, get going quickly without the need for
and that aspect is wholly unique to UAE, where there's a well, I mean with DMCC too. So there's like probably at 4, but maybe even a half dozen competing, especially if you count onshore. So there's like a half dozen competing regulators that are vying for your business. And Marwan, where do you think that leads? What does the regulatory landscape look like? The banking landscape look like? And just the industry, the substrate for the industry look like in 5 years' time, from your perspective, for people who are trying to plan ahead now to perhaps make this? Yeah.
I'll just correct. It's not regulators competing. It's licensing authorities that are competing.
100%. And I think this creates very forward-looking businesses, creates collaborations that are amazing. And I'll give you a couple of examples. So Bitpanda, which is a European exchange, actually moved to the UAE. They got a broker license. They partnered initially with Bitcoin MENA and more recently with Rackbank to offer direct buying and selling of Bitcoin on with your bank account. Another example is Zandbank. Zandbank just started offering AED, DeFi-enabled Zand AED, so you can buy and sell with the UAE dominated.
It's like a AED stablecoin?
Yeah, AED stablecoin on DeFi, which is unprecedented anywhere apart from the US with the US dollar. And not only that, but it is backed one by one, so it's not algorithmic or any other kind of way of denominating a certain currency. And with good liquidity, and also with providing banking for the VASPs, so virtual asset service providers. And that's extremely, extremely aggressive when it comes to adoption, but also being completely a digital bank gives you that kind of speed of transaction. So as soon as you deposit money, as soon as you buy crypto, the finality is almost instant.
And now you've seen not just Bitpanda, but the number of businesses that have relocated here and put their global corporate headquarters here. It's hard to even remember them all, huh?
Yeah,
just today,
Binance just got licensed by ADGM.
Yeah, like an hour ago, Binance was just given full exchange, custody, and whatever else license from ADGM after 3.5 years of submitting their application, and so it does seem that, absent some sort of faceplant, it is quite possible that the UAE, from the domestic market here in the UAE, with all of these service providers and all of these exchanges, and we really could see this if the banking system, continues to move towards integration and servicing these companies. This really could become the most liquid market in the world potentially for Bitcoin. And if Bitcoin goes anywhere near where I think, and others also hopefully think it could become, we could see this, UAE I think has a shot of being the Wall Street of the Bitcoin ecosystem or the Bitcoin world.
This is the capital of capital after all, and we have Abu Dhabi Finance Week, and we're smack down in the middle with Bitcoin MENA here. So I think it's only up to the people who want to come here.
Well, and I hear itching to say something, but we have only 1 minute. I have one question that people might be interested in, and I don't know, what the politics are, what you can say, but what do you think is the biggest risk or the most, what looks like maybe the the number one reason why it might not come to pass? What do you think the UAE needs to focus on from a risk perspective, and what the?
I think the biggest risk is not taking a risk, and I think with cryptocurrency is very true in the UAE. Our approach in the UAE was a phased approach. We did not start in 2000. We started back in 2012 with the education, with really the regulators understanding the value take from the technology, with 2016.
And I remember when Marwan and I were sitting on the Blockchain Council in 2013, and the blockchain, not Bitcoin people came out of the woodwork and really drowned out the signal. So you're, hopefully that era is over.
Yeah, 100%. And I think even 2016 to 2020, Dubai launching this blockchain strategy, and very soon after that, the UAE-wide strategy for blockchain as well came out. And then after that, we started, embracing crypto and really jumping headfirst into regulation, licensing. DMCC was the first to launch an OTC license. I was the first OTC license at that time as well, and this was 2018.
I remember.
But even before that, it was really allowed because it was unlicensed activity. RAC is one of those regions that can help you right now, today, to get a license for any virtual asset service.
And Paul, with 1 minute left, what do you think is the biggest risk here, or the biggest challenge?
The startup guy in me cannot disagree with Dr. Marwan. It's not taking risks, but I always think it's, I think it was Warren Buffett who talked about the ABCs, which are the three biggest risks to any industry or any business. It's arrogance, bureaucracy, and complacency. I think if any of those really sink in, and here's where the double-edged sword of the UAE comes in. The reason I think Bitcoin and crypto and this industry has been successful here is because it was not born out of rebellion like it was in some other markets. It was born quite thoughtfully. It was built quite thoughtfully with great regulatory frameworks, great government partnerships, great private partnerships. The risk of that, though, is that it becomes too bureaucratic. It becomes too slow-moving. It becomes sort of a prisoner of its own success. And I think the key going forward is to keep taking risks, to keep pushing things forward, to make sure the UAE is always on the cutting edge of both thought leadership, but also how we enable businesses to actually operate here.
Well, inshallah, we see the Bitcoin-backed economy leading the way in the UAE for the world. Okay, so we're out of time.
No doubt about that, and I think it's just how fast we're going to do it and what's going to be next technology-wise. I think Bitcoin will evolve as well to catch up with the times as well. I think the Bitcoin development has to speed up to catch up also with the UAE progression.
Oh, well, that's a whole other situation
discussion
here. Yeah. All right,
that's
cool.
the next panel.
These guys are great, right? Or no? What do you think? They're all right.
Thank you.
Cool. All right, thank you. Yeah.
Fantastic. That was really insightful. Once again, give a big hand to our amazing panelists. And just a few seconds for a picture. And as always, I truly believe that educational is at the core of everything. So let's learn more about Bitcoin in just a few seconds. Keep your seats warm because our next session is about to unfold in just a moment.
Arrow Wallet. Gentlemen, I'm going to need you to tell me a little bit about what Arrow Wallet is. You can even show the camera if you don't mind. Please fill us in. What is Arrow Wallet?
We are creating and build this device. This is called wallet. New approach for the self-custody because we try decrease entrance to the self-custody because
make it easier for people.
Of course. Just and our device provide good user experience and make it easier for anyone. For example, we changed approach for backing up your seed phrase. Just many people don't take care about seed phrase. Just making screenshot and store this as phone gallery, and a lot of malware existing right now with which tries stole your seed phrase from your mobile phone.
Yep.
And we created special recovery card. This equipped with special secure element with a pin protected and pin attention restriction on the 16 maximum. That means when someone stole your seed phrase from the recovery card, it's impossible because it's encrypted and this pin protected.
Amazing.
Yeah.
And you're the CTO, so are you developing this technology?
Yes, definitely. So we decided early on that we're not going to make any compromises, right, in terms of the sleek design of the device. So you can see this is a sleek form factor, fits into your wallet really comfortably, and stores up to 10 different separate wallets which are all pin protected. So no compromises in terms of security and elegance on one small compact device that you can take with you anywhere.
I love that.
Right.
No compromises, sleek, secure, all that stuff. How long does it take to create something like this? Obviously, we all maybe have a vision at first for it, but to really bring it into reality and again to prioritize that safety, what you built with this recovery system, how long does something like this take to make?
For us, this spent a little more than 3 years.
Okay.
Yeah.
Interesting. So 3 years from original inception to this final design. And now where can people get something like this, Arrow Wallet?
It's already on the sale, yeah. Just you can buy this on our website.
Directly through the website?
Yeah, it's available.
Do you recommend that is it available through Amazon as well, or is this more just something where they should go to the website, order directly from there?
Right now it's available on our website and our resellers. Maybe a little later we will put this to Amazon and other marketplaces around the globe.
Understood. Dan, your background. So were you working in the Bitcoin/crypto space before developing this? Are you formally trained as a technician, as somebody who develops these sorts of products?
By profession, I'm an embedded firmware developer.
Okay.
So I understand deeply embedded firmware security, embedded development. So we put a lot of optimizations in terms of power consumption, in terms of security, and we also had external security auditors audit this device. So Caleb's a known security auditor in the industry, audited our device in terms of security, and we've got a big team, a very powerful team of embedded firmware developers that made sure that the device gives you exactly what you want when you want it, and yeah.
Okay, maybe for a little bit for people back home, even a little bit for myself. So when you talk about embedded firmware, you're meaning so the technological design of this, but also something that not only makes it safe but also usable. Is that what you're getting at when you talk about firmware?
Exactly.
Okay.
So there are a couple of solutions on the market, and one of the problems that people face is with battery life.
Yep.
And sometimes the battery just bursts out like that. So we were really focused on the embedded software, the firmware part of it, and the electrical engineering side of things, so that you've got a solution that doesn't compromise on not only on the security but on the reliability of the device, because that's what you want to store your money, right?
Yep.
You want something that is secure, you want something that is usable, you want something that is reliable. When you need it, you can use it. So we did that a lot.
I appreciate it. You should also be involved in marketing. You speak very well about this. Secure and reliable. We're talking with the founders of Arrow Wallet here. We're headed back to the main stage to hear about Bitcoin in the portfolio of nations. Over to the Falcon stage. We'll be right back here at the live desk after this.
Nation-state adoption and Bitcoin technology. We aim to facilitate acceleration of Bitcoin adoption across the world.
Hello guys, my name is Abdullah Bari and I run the blockchain center in Abu Dhabi as an ecosystem builder here.
Hi, my name is Bilal bin Saqib. I am the chairman of the Pakistan Virtual Asset Regulatory Authority, where we're trying to incubate and regulate crypto in Pakistan. We have over 40 million crypto wallets in the country.
Great. Why don't you introduce yourself, Daniel, as well?
My name is Daniel Bannon. I'm the managing partner of CH4 Capital. We mainly focus on Bitcoin mining, which is one way that you can get a national strategic reserve from Bitcoin. I'm going to start off by asking Bilal. Now, for those of you who don't know, he was there to make an announcement at Bitcoin Las Vegas that Pakistan was forming a Bitcoin strategic reserve, and they were also going to use 2,000 megawatts of surplus energy for Bitcoin mining. Now, if you don't know, that's the equivalent of being able to power 2 million residents. Could you just give us a quick update on what's happening in Pakistan? Because that was an extraordinary and unexpected announcement. How's that going?
Yeah, so we are kicking off with the first phase of that announcement, which will be happening very soon. And secondly, on our wallet as well. So we've, it's not easy trying to get the status quo to work on these new ideas, but we are there. So we've also set up our wallet, and the announcement will again be coming very soon.
Right. And Abdullah, who's running the blockchain center, you're currently also running a $50 million investment fund. Can you talk us a little bit through how that's facilitating crypto and Bitcoin adoption in the United Arab Emirates?
Look, for our investments are a thing that we are interested in the future. I remember yesterday in one of the talks I gave at a BNB hackathon was for us, when we do our investments or look into projects, we don't look for the next 2 years. We look at projects that are stable and actually can achieve something for the next 10, 20 years. Basically, we believe in the future, whether it's remittances, tokenized digital assets, Bitcoin on the balance sheet or as a treasury, etc. And I would say everything has to have value, basically. And when it comes to adoption, nation states are going to enter into an era right now. Everybody is saying it this year, for example, like everything is becoming more institutionalized and all of these aspects. But things, when it becomes at a nation state level, for example, like Bilal and what they're building in Pakistan, etc., it's a different game there. It's not about mass adoption anymore. It's about what could we achieve bigger than this.
Yeah. Well, you already have 30% of the population who's using crypto, which is extraordinary to get to that point. So now it becomes about what else can you do?
I would say in terms of what else we could do, I think the next thing that would be interesting is the digital asset remittance market. We personally right now believe FX is going to be the next game. That's outside of Bitcoin, I would say, and I'm interested to see when the actual fiat currency in all countries start to vanish a bit and everybody starts looking into stable coins. And this is an important thing, by the way, because today you have central banks, treasuries backed by gold. So my question would be do we see a time where Bitcoin becomes a reserve currency for these central banks? Knowing about the volatility that we have, knowing about the ecosystem around the Bitcoin space and all of these things.
We just had an announcement recently in the Czech Republic, I believe, that they had the Central Bank of the Czech Republic had decided to allocate a small amount as a test for Bitcoin. So very interesting to hear that this is a possibility for central bankers in the UAE as well. Prince Philip, you have been traveling the world talking to nation state level about Bitcoin adoption. How is that going at the moment?
It's interesting. It's fulfilling work, but it's tough
You're
work.
allowed to tell us about the challenges. I said to everyone, let's be honest, let's talk about the challenges that we face, because whenever you have a disruptive asset, you always have people by definition who are disrupted. Yeah. So tell us about the challenges you face.
Well, Bitcoin is a very disruptive technology. It's one of the most disruptive technologies since the internet, since the car, since a lot of things like that. So at Jan 3, we are pushing to speed up nation-state adoption. We try to introduce, make meetings with presidents, prime ministers, ministers, even royals around the world to introduce them to the topic of Bitcoin and how it can help them and their country, their populace. Yes, Bitcoin is a bottom-up strategy. It's pure decentralization. Our strategy is a little bit top-down. And we feel that helps to give credibility to Bitcoin. That if we have a bunch of Bitcoiners like ourselves over here, taking a picture with the president or prime minister, that helps to wake up a few people and think, oh, I want to learn about Bitcoin. And challenges, we get a lot of challenges. Firstly, getting an introduction is not as easy as just making a phone call. You know, people are not going to just accept a phone call to talk about Bitcoin.
You can't just say, hey, I'm the Prince of Serbia, come and meet with me. And
Yeah. I mean, that's why I'm there at Jan 3. I guess
it
being
helps
a
to open
prince,
doors.
it helps to open doors, yeah.
But then you say you want to talk about Bitcoin and they say, I'm not available that evening, or what happens?
Well, here's the thing. We've come across a situation where we've spoken to some nation states, and a few weeks later, the IMF had then spoken to them. I don't know if that's a coincidence or if there really is correlation there. And correlation does not equal causation, but it feels a little bit like there's pressure from the IMF for countries not to understand Bitcoin. I think one big example was El Salvador. Exactly 1 year ago, I remember I was at this conference 1 year ago, and we saw the announcement of the IMF pushing back on El Salvador's adoption. And this comes after they were one of the biggest first movers. Public first movers. In 2021, they announced that they will adopt Bitcoin as a medium of exchange, and also that they would adopt it as to release Bitcoin bonds and improve their energy infrastructure. Samson, the CEO of Jan 3, was there on stage with President Bukele, and that was fantastic news. Fast forward to almost 4 years later, and the IMF comes knocking on the door and says, hey, you got to scale back on your Bitcoin adoption. So it's difficult to get away from the grips on the compromisation of the fiat system. And so we're up against that. But it is what it is, and it's fun work, because we have seen some good success stories as well.
We'll come to those, definitely. Bilal, similar situation as well. Prince Philip has mentioned the IMF there. Of course, Pakistan also has an IMF loan. What's been your experience, and what's been some of the challenges that you have faced?
Yeah, I think history tells us that whenever you try to kind of bring change, you find a lot of resentment and different forces. And I think with regards to Bitcoin, it's a very interesting case, because you are trying to redefine a lot of things in the financial markets, and you are, and not just Bitcoin, and there are other sort of emerging technologies like tokenization. So I think people in policy making right now don't truly appreciate or understand the benefit of this. So I think that is we must do more on educating and telling people that yes, they want to talk about the price of the action, but I think that the price of the inaction is way more greater. Today at whatever price Bitcoin is, and the narrative is there, but if I talk about Pakistan, had we set this up a couple of years ago, we would have been in a different sort of economic strength today. This is the reality that Bitcoin compared, again, talking about the Pakistani perspective or other emerging markets, our currency has taken a hit. Why should our people be penalized at the expense of a monetary policy that is being created somewhere else? So why should we not adapt and adopt an asset which is not influenced by any politics, inflation, or printing? Our currency has been, and again, other emerging economies, the currency, if you look at a 10-year chart, it's depreciating. And, we are trying the same things and expecting different results. And then we look at the Bitcoin chart. So why is it not that, whilst we are doing all of these experiments and yet kind of not succeeding, we should start to allocate small resources towards this asset, whether it's through the budget or it's through providing energy.
Exactly, and mining is one of the major ways that you can start to build up a reserve. Bilal was sharing with me off stage as well that had you invested in crypto and Bitcoin earlier, then maybe you wouldn't have even needed that IMF loan in the first place. That's how significant it can be to a nation state. Abdullah, different context, but when you're looking at the work that you're doing and how that dovetails for facilitating the expansion of crypto and Bitcoin within UAE, what are some of the challenges that you've personally faced?
I wouldn't say there are challenges. It's about the understanding of what we could do with this asset. which is interesting today. Bitcoin today, in my opinion, and anybody who's here, that's all, from way back then when it was created, Bitcoin has failed to get to where it is. The whole intention of doing Bitcoin was to use as a peer-to-peer transaction monetary system, which is not what we look at it today. Some people strategy came out with the treasury idea and through credit facilities. Other companies are saying, oh, this is digital gold, and all of these aspects. In my opinion, some of the challenges that we are facing today is that how to get adoption more wider into what we want to do. Like I told you, do central banks down the line use it as a commodity, for example, to back their treasuries? Should we peg it with stable coins, or should we actually start looking at it to what it was intended to be, as a peer-to-peer transaction system?
What's your vision, personally?
My vision is unlocking the liquidity of Bitcoin. Basically, one of the projects we look at are working on something, I would say, coming out in Q1. My vision is Bitcoin becomes more programmable.
Mm-hmm. Okay. Philip, you were mentioning before about you had some positive wins. I know some of them you cannot reveal here just yet, but some of them you can. Talk about some of the successes you've had and what has worked as you've adopted your approach and you've adapted over time.
Well, I can't really announce it, but Bitcoin bonds, very bullish on Bitcoin bonds. And for those of you not aware, a Bitcoin bond, to simply describe it, is a fixed income security backed by Bitcoin. So, for example, you raise $1 billion, half of it goes into buying the actual thing, Bitcoin, and the other half will go into the energy mining infrastructure to mine more Bitcoin. You have a duration of, let's say, 10 years, because that will incorporate 2 Bitcoin cycles. And every year you'll have a coupon depending on the interest rate, let's say a few percent, 5-6%. And at the end of the 10 years, you are paid back the principal plus however much Bitcoin has increased over the course of 10 years. Also, if you want to be too Bitcoin heavy and you want to please your electorate or your overlords, you can then say, okay, well, maybe all of it, the 1 billion principal, goes into all of energy infrastructure to build up the energy infrastructure and to mine Bitcoin. And with 20% of what you mine goes, you keep, and you add that to your national reserves. Over time, this Bitcoin will accrue, and it's a very friendly, budget-neutral way of adding Bitcoin to your balance sheet.
I think that's a key thing, isn't it? So what you're doing is you're saying to a nation-state leader, look, it may not be politically acceptable for you to use taxpayer dollars to purchase Bitcoin, but if we can provide you a way to do it in a tax-neutral way, then you're helping them to solve that problem, aren't you?
Exactly. It's because the other way which we've seen that people like, for example, the US, the way they are getting Bitcoin on their national reserves is through seized coins. We don't want to set that precedent around the world. We don't want to incentivize governments to accrue seized or stolen coins. So we want to do it in the best form possible, and that's through mining. And Bitcoin is an Bitcoin is a monetary renaissance, but it's also helping to create an energy renaissance as well.
I'm just going to repeat what you said, the best way possible, and that's through mining. I love it, as someone who finances mining. Do you want to tell us a little bit more, Bilal, about some of the successes you've had recently? Because obviously Bitcoin mining is a big part of it, but where are some of the wins you've had recently in Pakistan?
So I think the win is in the past 6-7 months, I think turning confusion into clarity, because clarity attracts capital. And I think that is a great signal. Pakistan is in a very interesting sort of a situation, because we've had great adoption, but that has not been through any framework, regulation, or even a classroom. And the average age of the country is 23. We are 250 million people. So if the youth of the country was to be an independent country, would have been the 9th biggest crypto-friendly country in the world. So this at least shows us that the youth of Pakistan is world class. Now, you know, a win for us is setting up this independent virtual assets regulatory authority because we are not trying to promote crypto. We are just trying to regulate it. The adoption is there already.
It's happening already.
In remittances, the youth of Pakistan is living on chain, living in stable coins, because we also happen to be one of the biggest freelancer markets in the world, and they get paid in stable coins. So I think WIN is putting the right signal out to the world that we have the clarity to create Pakistan as a great case study on how emerging markets should adapt, digital assets, using our excess energy to turn into digital gold, setting up a wallet. Again, we are following the US example, where at the moment we are budget neutral. We are using our confiscated assets, and at least, starting that journey. Rome wasn't built in a day, but they were laying bricks every single hour. So if we want to go into that Renaissance era, so we need to start off with this non-inflationary asset where Pakistanis and the Pakistani government should be accumulating it and should be using it as a reserve for a future. We want to plan for 2050. We don't want to look back and we want to regulate our country for the future, not for the present or the past.
I think Michael Saylor's been involved in Pakistan as well. He's still involved. What role is he playing in this?
I think, again, we are very sort of blessed that anyone, all these OGs and all of these guys are supporting Pakistan because they truly believe, because of the adoption that we have and the political will, that they want us to succeed. So Michael has been very sort of supportive, and he's been advising and again, doing the most important thing, which is educating the policymakers and the leadership on the price of the inaction.
Abdullah, very interesting to see some of these areas of the world where Bitcoin adoption is accelerating: El Salvador, Pakistan, UAE. What is it from your perspective about UAE which has made it a friendly environment for Bitcoin adoption? And what can the UAE do to, as you say, further that opportunity?
Could you repeat? I couldn't hear that.
Yeah, so the UAE at the moment has the #1 crypto adoption in the world. What is it about what the UAE has done that's been successful, that has facilitated that? And where do you see the future going?
Look, I would say when it comes to the Bitcoin adoption, as you said, the UAE set a standard since 2017 when it comes to regulatory frameworks and all of these things. In other countries, as you would say, like, there would be mass adoption but no clarity. Mm-hmm. We had clarity before mass adoption. That was an advantage.
So regulatory clarity is absolutely key.
Exactly. So by doing that, you actually know what you have to do and what you don't have to do. Then came Bitcoin. Then came Bitcoin mining down the line, where they were using the excess energy to do Bitcoin mining and all of these things. That was also happening at a couple of years ago, at a very early adopted stage. So I would say, like, the pathway to innovation here, there is no ground zero for it. If there is an innovation, they would look into it and actually adopt it, and having a pathway towards that innovative idea. Nobody's going to stop innovation here. Nobody's going to tell you this is illegal or not to that aspect. And they try to adapt to the ecosystem. The central bank came up with a couple of licenses that speaks about digital assets, where in most parts of the world it was a gray zone. The federal regulator saw how free zones are doing within licenses and came up with their own framework. And all of these aspects, they go into very tiny details as well, like how would retail look into leverage trading and all of these things. They differentiate from what we call Web 2 to Web 3. Mm-hmm. They understand how it's happened. So I would think the biggest advantage into adoption is basically a clear regulatory guidance that allows the users and institutions to basically have a free flow in the space.
I think that's one thing UAE has done exceptionally well, is bringing the regulators, the policymakers, the central banks even, to the table. And a precondition to regulation is education as well. When did that education process start? How long ago was it?
Education process here started between the community.
It's ongoing, I know.
I would say the word of mouth, not only in the UAE, but in the Middle East is a very good thing.
It's very good.
So everybody would speak about Bitcoin, tell their friends, their family, or digital assets, or if you put 1,000 AED into this thing, you would make like 2,000, 3,000 tomorrow. And most of them lose money, by the way.
I'm talking about the regulators and the policymakers. They've been included in this education process, and that's something we haven't seen to the same extent so early in Western nations.
Regulators and policymakers have been working hand in hand with institutions in this space. Basically, they would listen to the institutions and other companies that are in this space. And they try to look at what they're building, how are they doing it, how can they improve better. You know, let me give it an idea. The Security Commodity Authority, when they released their framework back then, they spoke to a lot of the centralized exchanges before even releasing the regulations and asking them like, what do you guys think about this bit of part and what do you think about that part? And they are very open to these discussions. And basically, when you have a clear framework and everybody's saying UAE has one of the best regulatory frameworks, it's because of the power of partnerships. His Excellency Mohamed Al Kuwaiti said it earlier, like without partnerships, there is nothing to achieve on a big scale. So we do believe in partnerships. We do believe working hand in hand with the private sector, with the public sector and the government sector. And that way you could grow.
Yeah, wonderful. Let's get a quick 30-second wrap-up from each of you from your perspective. 5 years' time, where do you see nation-state adoption? Starting with you, Bilal.
I think a lot of emerging markets especially are keen and are really looking forward, but they are still trying to are unable to touch and feel what is the right way to do it. And I think in 5 years' time, especially the IMFs and the World Banks of the world will, by that time, would have already adopted and came up with frameworks that enable other countries as well. You know, just like we have frameworks for the international banking industry, aviation industry, we should have it for the digital assets. So 5 years' time, I'm super bullish that there'll be a lot of Bitcoin adoption by nation states.
I would say personally, again, in my opinion, in 5 years' time, Bitcoin is it's gonna be the same way back in the days how the US started acquiring gold in the market and building their treasury from that and their GDP. And I think each nation state is gonna start to do that.
I see smaller, more nimble countries being able to adopt Bitcoin. I also see more monarchies adopting Bitcoin. I see more success stories like the Kingdom of Bhutan, like the UAE, another monarchy like Oman, which in 2023 they invested $1 billion into Bitcoin mining infrastructure. I see the West. I don't see the Western world catching up with that so much because of the some crazy ESG narrative, but I think that will change with more education.
We'll work on those.
Yeah, and there will be some education, but they'll be lagging. I see the emerging, the global south taking the lead on this, which is great because they're the ones who've been hard done by the fiat madness over the last 100 years. So.
Absolutely. Bitcoin is a global ground-up asset, but it's also a top-down asset, and it's not an either-or, both are required. We're extremely fortunate that we have three amazing people who are working on nation-state adoption. Thank you for sharing your wisdom. Please give them a big round of applause.
Thank you so much. That was a really insightful session. Yet I truly believe, by the way, when regulators are open to businesses, it also opens up a lot of opportunities. Thank you so much. As always, we'll be back with another exciting keynote. That will be just in a few minutes. We'll be back with
Crypto.com. I'm here with two gentlemen from Era Wallet. We were just talking about how Era differentiates itself from other wallets like it out there. Something like wallets like that Ledger produces or that Trezor produces. So quickly, if you don't mind, Alex, maybe some high-level differences between what you've created here with Era Wallet and some of the competitor wallets out there.
Yeah, just when we thought what we can do, how we can improve for user experience, we thought, okay, we should build this device with excellent user experience, big screen, touch screen, and also we take care about security, not only software security. Device, of course, should be protected from software attacks, but at the same time, we're focusing on the hardware security, like, for example, waterproof, and what differences between existing solution and our device. Of course, just our main idea, don't trust, verify. And how it's working, Arrow Wallet. This is device which equipped camera, and every signing transaction based on the QR codes. Just when you use device with a Bluetooth connection or USB connection, you never know what's going on behind.
How information is getting transferred,
yeah,
right?
Of course. If you're not technical guys, in case of Arrow Wallet, you can take a picture and send this to ChatGPT and ask ChatGPT, hey ChatGPT, I use Arrow Wallet, I took a picture, what is contained? And ChatGPT describe you what is really contained. Yeah, you don't trust, you can personally verify everything. Okay. Yeah, just second, when you get in your new device, first step, you will personally update your device, and then you should perform authenticity check. Yeah. Just who knows what's happened with your device on the journey from manufacturing to your hands. And first step, you should verify that it's fully original and not compromised. Okay. After this, as I mentioned, you don't trust anyone when you're creating your private keys. You personally influence to this process. We provide to user 3 source, like swiping on the screen, shaking device, and camera surrounding when you're generating your private keys.
Oh, wow.
Yeah. And moreover, just when you use hardware wallets, self-custody, you understand, just every day you use not only one wallet, you use few wallets, right?
Maybe.
Yeah, just
you're a busy guy with transactions, I assume. Yeah, but yeah, for some people, I would assume that that's the case. Yes.
Yeah, just and many users asked me personally when I start our project, hey guys, can you provide user experience when we can create more than one wallet in one device? And I said, yeah, of course, just why not? And we designed our device which allow you create up to 10 fully independent seed phrase different wallets.
Different wallets.
Yeah.
Oh, that's amazing. I appreciate it. I want to go over to Dan, too, just to get your opinion on how, especially as someone who was working on this technically, how you differentiated. We only have about 30 seconds, so maybe just some high-level thoughts on that.
So in essence, what we try to make sure to do here is that we don't outsource your security and, again, the reliability of your device to other external sources, but you have control over that, right? So how do we not outsource it? So as Alex said, when you are generating your entropy, we give the user full control for generating the entropy. How do we not outsource, for example, the protection of your device? The device by default is IP67 rated. You can immerse it in water and it will still work. This is the first hardware wallet that you can sign transactions with underwater.
Underwater signing hardware transactions. You heard it here first from the live desk, ladies and gentlemen. We're headed back to the Falcon stage. Gentlemen, thank you so much for joining me. Over to the Falcon stage. We'll be back here at the live desk after this.
Hedge funds and wirehouses put together, they're starting to allocate to Bitcoin, but are they going to allocate as a tiny little tech stock or as an asset class? Well, that's to be decided largely by us. Now, to put that in context, I brought one of these out. This is a US $10 bill. Now, if you were to denominate this money in $10 bills and you're going to stack them from the floor and you're going to build a stack, you'd have enough to go from the floor all the way up to the moon and back again. So it's fairly significant. And it turns out that if we are to see Bitcoin price appreciation at a fast rate rather than a comatose rate, we really need sovereign and pension fund adoption. But there is also a lot of freedom go-up projects that really could benefit from a sovereign adoption. Here's 3 of them. So this is BIPIN he has just been responsible for India's first Bitcoin-only fund being created. Now, thanks to him, the world's largest country has access to Bitcoin without paying capital gains tax. This is Ismail. He works in the charitable sector. He's just made it possible to give to charity in a Bitcoin-denominated way. Thanks to him, 50,000 people in the last few months who are new to Bitcoin have been able to give in Bitcoin as principal, a gift to charity that keeps on giving to your favorite charities such as Make-A-Wish, Amnesty International, and others. This is Harrison. Harrison funds Bitcoin mining projects using landfill gas. 35 projects like this, and Bitcoin becomes the world's first carbon-negative industry. He's just found 3 projects in the last 3 months. My connection to these people is personal. Harrison is my business partner. Bipin and Ismail, I coach on my Bitcoin mastermind. And in all 3 cases, for their Freedom Go Up project to scale, Number Go Up has to scale. So what makes Number Go Up? Well, capital flows do. This is Bitcoin's price chart over the last 4 years. As we can see, the major spikes in Bitcoin price were when we had the major spikes in capital flow. But let's go one step further. What causes capital to come into the Bitcoin network? Well, this does. MSDR, ETFs, and Trump. But let's take a step further back again. What caused these events to occur? Well, a single conversation between Eric Weiss and Michael Saylor caused MicroStrategy. A single conversation between David Bailey and Donald Trump. And a single conversation between Larry Fink and a Bitcoiner who will remain anonymous, not me. 3 conversations, $70,000 of price movement. Are you getting this? The right chats can move charts. But right now, we've been having these chats of high impact around once every year. Well, what if we had these chats once a week? Now, what would happen if we were to start to have these conversations with patient capital more frequently? A single conversation with an average size sovereign fund would move, if we had a 3% allocation, would move Bitcoin price up by almost $2,000 directly, almost $20,000 through the halo effect. Fairly significant. We have had some incredible conversations over the last few years, which have had a phenomenal impact on Bitcoin price. We're just not having them often enough. The person who orange-pilled Larry Fink is genius at orange-pilling institutional investors. The person who orange-pilled the Fidelity directors is a genius at orange-pilling institutional investors. We have enough connectors in the Bitcoin network that these people could be having these conversations once a week. They're not. It's like having Leo Messi on your football team and asking him to play 1 game per year. We're doing okay, but we could be doing so much better. Now, the good news is that in the US alone, there are now 14 pension funds that have allocated to Bitcoin. That's cool. And the other good news is there is a clear path for an asset to gain widespread acceptance, and that's equities, which once upon a time was perceived as too risky to invest. Now it's perceived as too risky to ignore, with pension funds and sovereign funds investing half of their assets into equities. There's a clear trajectory that Bitcoin can follow. Now, Larry Fink has recommended just a 3% allocation. So of these 14 US pension funds, how much have they allocated so far? Is it 3%? 0.3%? 0.03%. Okay. But that's okay, right? They'll just be making a small allocation. They'll wait till that's successful. They'll do the pilot, then they'll allocate more, right? Wrong. That's what I assumed too until I looked at the data. That's not what's happening. We have a problem. The problem is that these pension funds today are conceiving of Bitcoin as a technology stock, not as an asset class worthy of a much larger allocation. Here's why we know this from the data. Of these 14 funds, how many of them have invested in ETFs or self-sovereignty as opposed to through MSDR shares? One of them. Okay? How many of them invested more than 0.15% of AUM? Not so many. Okay, well, how many of them have meaningfully increased their allocation to Bitcoin over the last year? One. No, -1. One has gone backwards from a large allocation where they now have 1/4 the amount. Okay, well, numbers aren't everything. Well, how many is following the journey from MSDR shares through to ETFs? Again, -1. One has gone backwards. Wisconsin used to have an ETF allocation. Now they've replaced it with a much smaller investment in MSDR shares. This is not what the early signs of mass patient capital adoption looks like. The issue is they're treating it like a tech stock, not as an asset class. And this is a problem because of a psychological term called cognitive entrenchment. Once you conceive of something as one thing, it's very hard to conceive of it as something else. For example, once you're conceived of as being just good friends, it's hard to be reimagined as a romantic interest, apparently, so people tell me. I guess what it comes down to is, as Bitcoiners, are we content with Bitcoin being just good friends, with patient capital, with the rather slow price appreciation that goes with that state of affairs? Now, the good news is, hope arrives in the most surprising of forms. These sovereign and pension funds, for the most part, will not have conversations with card-carrying evangelical Bitcoin maxis about Bitcoin adoption. They will, however, have conversations with third parties, and often with academic institutes. And in the world, the most reputable one to pension and sovereign funds is Cambridge. They have connections with over 30 sovereign funds at a governance level, actively talking about digital asset allocation. They also know what the 4 different blockers are that have stopped pension funds and sovereign funds investing more into Bitcoin. And here they are. And better than that, they also know how to overcome these 4 blockers. This is just one example of a large pension fund that they're engaging with. Now, the great news is, or rather the blocker is for them, why haven't they been able to go faster? Well, the reason is that it takes artifacts, it takes resources to be able to give to patient capital, to be able to give them the confidence that the 4 blockers they have can be overcome. These blockers are not fundamental, they are educational. If we are able to overcome these blockers, we could have 30 sovereign funds just like this one start to entertain Bitcoin as a digital asset. And there is a mechanism where we as Bitcoiners can do this, where we can help give them the resources in an arm's length way so that Cambridge is able to prepare this documentation that it needs to orange pill the world's patient capital. Now, the great news is that there's something else we can do as well as working with entities like Cambridge. We can also do a whole lot more of what we're already doing that's working. So what is working? We just need to do 20 more times of it. Well, what's working is, well, where did all the environmental FUD go about Bitcoin? Well, we killed it. Where did Greenpeace's Change the Code campaign go? We ended it. Why did Larry Fink, KPMG, Fidelity, and Bobby Kennedy get orange-pilled? Because we orange-pilled them. We have had some phenomenal conversations over the years, and in Bitcoin, we have some of the best communicators you'd ever wish for. People who can paint the world orange, starting with our sovereign and pension funds. And we also have people in Bitcoin who are some of the best connectors you'd ever hope for, who can introduce these people such that we could be having these conversations on a weekly basis. We just need to bring them together. And when we bring them together, truly amazing things can happen. All this happened not because it was inevitable, it wasn't. Not because it was written into Bitcoin's source code, it isn't. It happened because a small handful of honey badgers did the proof of work and had the conversations that changed history. Sovereign and pension capital adoption of Bitcoin, not as a tech stock but as an asset class, is not inevitable. It too will happen when we have the conversations with them that change history. We can achieve an average 3% AUM allocation to Bitcoin, 3% of $72 trillion, which is enough to see Bitcoin's market cap approach that of gold. Normally, we wait for history to happen. We have the chance to create it. We have all the ingredients we need to win. We simply need to bring them together. When everything clicks and these conversations occur, the most incredible things occur. Remember, chats move charts. We've done it before. We have changed the narrative on Bitcoin and energy. We have orange-pilled the skeptics. We have defeated better funded campaigns. Peter Drucker once said, the best way to predict the future is to create it. And we have the chance as Bitcoiners to come together and create this future where pension and sovereign funds allocate to Bitcoin as they should, as an asset class, with all the price appreciation and with all the ability to see Bitcoin succeed that goes with that. Chats move charts. And if this is a conversation that you'd rather be part of creating rather than watching, then let's continue this chat, because good chats can move the charts. Thank you.
Welcome back to the Bitcoin Magazine news desk here, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left by Susie Violet Ward, host of the Roxham TV My Two Sats show, as well as CEO of Bitcoin Policy UK. The woman does it all. And as well as catalyst for Machankura, Keiji Kokotatsu Nagako. I probably didn't pronounce that correctly, but I did my best. And I love this guy, so I'm happy to have him here on the desk. We are talking about Bitcoin as a medium of exchange here, ladies and gentlemen. KG, I want to go over to you first. Please tell us a little bit about some of the work that you're doing specifically in South Africa.
Cool. Yeah, so we'd like to see more and more people using Bitcoin on a daily. But one of the biggest problems is like a digital divide. Not everyone has a smartphone or internet connection all the time. So if you're going to send somebody Bitcoin, how are they going to receive it or confirm that they received it? So we build out a wallet which allows a person to access a wallet via their Bitcoin balance via USSD or SMS or WhatsApp or whichever
a texting
medium.
service, basically.
Got it. And yeah, so that's what we're doing. And since regulations came in, we got our license and we are now integrating with the financial system so that a person can buy Bitcoin using their bank account, pay out to bank accounts, and do whatever they feel like doing with their Bitcoin, basically.
Amazing stuff. Susie, you just came from the African Bitcoin conference. The first thing you said to me is like, every other person I turn to is just building something incredible. Any big takeaways from the conference? What were you seeing in terms of people building especially tools to help facilitate Bitcoin as a medium of exchange?
So a medium of exchange is the most important part of Bitcoin, and I think we often lose that. I think we're in between the store of value medium of exchange part now, and it was actually one of your talks, I think you were talking about how people build apps from a Western point of view and they don't look at the limitations that are actually there. For example, data storage, connectivity and things like that. And so it was really interesting to see the actual problems that people face across Africa and how they're solving them in a different way.
Yep, yeah, absolutely. There's not only certain issues facing Africa right now, things in the UK right now. We're seeing a lot of control, a lot of censorship, fight against privacy. Is it as bad as we're hearing on X? We know people tend to be hyperbolic on X. Should we be believing all the noise that we're hearing about this on X?
Okay, so one stat that I did hear was 12,500 people got arrested for tweets this year. So that's pretty shocking.
Yeah.
However, last week, when we were at the African Bitcoin conference, we had a major breakthrough with the laws in the UK. So we have now a third type of property which recognises data objects. So currently in the UK, we have the first type of property, which is houses and things that you can own. The second type of more like stocks and debt. Now we have a third type of property which recognises data objects, which now means that Bitcoin is considered property. And that is a huge win.
Let's go. We like wins on this live desk. I want to go over to UKG. I know there have been some shifting laws in South Africa, and I know with Machankora you want, so Machankora is a slang word for cash, if I'm not mistaken.
Yes.
You want Bitcoin to resemble cash as much as actual physical cash as possible, but there have been some KYC laws, some things that you've had to work around. Can you talk to that a little bit?
Yes, so basically in South Africa, Bitcoin is seen as a digital asset, right? And then the regulatory body for assets and digital assets sees it as an investment, right? So more on the store of value side and everything else that comes with it, property and everything else. And so, we are legally required to do KYC on all the customers and before we do any business transaction with them. But I think from a technical perspective, you can still do like a privacy preserving digital asset, since it's technically possible, like e-cash and everything like that.
Right.
But as long as you're ticking all the right boxes from a regulatory perspective, right? And
do you feel like that's easy to do? Do you feel like things are sort of shifting purposely to make it more difficult for entrepreneurs coming to the space, or is that maybe a little bit too cynical of a view?
Well, I think we have to be willing to fight for it, right?
Okay.
We have to be willing to argue for it, right? We are seeing like a lot of stuff happening globally for the right to self-custody, the right to private payments, whether this is Free Samurai or in South Africa, even the KYC laws. And for us, we just got off the grey list, right? The FATF grey list.
Yep.
So now they're still going to probably enforce more and more FATF recommendations that don't necessarily seem necessary, but we have the technology to actually say, you can still have that, but then a person can still self-custody and privately own their Bitcoin.
Okay, appreciate that. Ladies and gentlemen, we do have to head back to the Falcon stage. We're going to continue with this conversation right after this, but over to the Falcon stage. We'll go right back here at the live desk right after this.
Okay, let me start out. What is a DAT, or a digital asset treasury? It's essentially like a shell, normally listed equity, that basically decides to hold a specific crypto asset. Bitcoin with MicroStrategy was the first one as a treasury asset. Now the question is, why should they be trading at a premium towards an ETF or the spot? I think there's like two high-level views why it could be. On one side, if you have a listed company, you basically have the asset, but as well you have on the liability side of your balance sheet, you have the possibility to do financial engineering. Something like issuing a convertible and basically selling the volatility premium to other investors. Second one is, if the management team is competent, you could expect them actively deploying their funds or their treasury assets to generate an outperformance than compared to just holding.
Okay, awesome.
And why do you think they're converging to kind of premium? Do you think there's a point where these companies are going to have to start selling their Bitcoin? MicroStrategy, there's a famous kind of meme that it's I see Mo laughing over there. There's a famous meme, or there's a meme at the moment going around retail where people are saying that they're going to have to sell at 75,000. If Bitcoin hits 75,000, that could be a cascading effect. Is there any truth to that? And if so, why is that? Or is there another price or price range that makes more sense? Maybe we can start with Mo, because I see you like that question.
Yeah, I mean, first of all, thank you so much for having me. Look, I think the whole DAT play is super interesting. There's a big decision coming up in the US on January 15th, but we're going to see what happens there. We as Fuse, we also have our own small treasury of BTC that we've been collecting for about 18 months now. We're long-term believers in the space, but I think there's a lot of question marks on what's going to happen. We think it makes sense, but we're going to see what happens in the States now. And it's going to have a huge impact on the whole sector on January 15th.
Awesome, awesome. And Alan, your take? Any price range or some of the mechanics that lead to forced selling or could lead to forced selling by these DATs?
I think like everything in crypto, if something is actually new and somehow works out, everybody jumps on the bandwagon and then it just goes crazy. And I think just the quality of that, if you look at the assets, you have on one side Bitcoin, on the other side you have a lot of altcoins or shitcoins putting into the place where you can ask, you really want to hold them for the next 5 or 10 years. The second part is like the quality of the management. And if you look at Saylor, and then who else can you name? It's probably Tom Lee, and that's it. So there's like a huge divergence. And then the other thing is also like, if you think the active management will lead to an outperformance, and you have seen MNAV, so that's essentially the multiple between the value of the assets and the share price, going up to 4, 5, 6. And then you look at just something simple like equity, holding passive index versus active management. The outperformance to active management is not going to be so high. So I think it's going to be a wake-up call, and then the other time, there's less capital going into it.
Yeah. So you think over time, less capital flowing into these types of assets or equities?
Yeah, so I mean, you see the same thing with crypto equity, like exchanges that got listed, some other ones, like Circle is another one, was very high. Now I think everything is a bit like basically correcting on one point.
Yeah.
And I would see like most of the DATs going to trade below NAV. So you can see what's going to happen. One point is they're going to basically sell their underlying spot to buy back share. I think depending who you are and how much you hold, you're basically going to start a death cycle. If you do imagine MicroStrategy selling all their Bitcoin, it basically would force the market to front run, so leading to even more liquidation.
Yeah.
I think with MicroStrategy, there's like this, I don't know, it's 74 or 77, this weird number that's going around. And I think markets have like some tendency, if there's some meme out there, they're going to just chase it. But I'm not really that worried about that for MicroStrategy specifically.
Got you. And is there any reason specifically? Do you think have they sold insurance or taken any kind of protection against that?
I think they are so large that they basically will be able to raise capital, being equity or debt, like they did in the past. On the other side, they could look at simple strategy like writing out of the money call option to generate a premium to basically serve the liabilities they have.
Gotcha.
And probably also if they will basically start to lend out their Bitcoin in some collateralized, sensible manner, I think they should be able to generate a return that's probably going to be higher than the current liability structure.
Okay, awesome. Makes sense. Cool. Moving along to the topic of speculation versus real-world use case. So Bitcoin and crypto is starting to really play a big role in global payments, treasury management like we just spoke about, and real-world use cases. I'm wondering from both your guys' perspective, we'll start with you, Mo, at Fuse, how much of the flow and how much of your business is kind of real-world use cases? In the case of Fuse, how much of your business is powering B2B payments on the bank side, or rather powering access to crypto for retail or speculators? So what's the split now? How's that evolving?
Yeah, so for us, so we have two different stacks. A stack for wealth, where customers can go to their favorite bank or their fintech app, and they can buy, hold, and sell a crypto. We've powered a number of banks, conventional, and also a Sharia compliant offering, which just went live about 2 weeks ago. It's the world's first Sharia compliant BTC offering at scale. So that's super exciting. On the stablecoin orchestration stack, we have several clients, more fintechs, and we're seeing a lot more demand, especially in this part of the world, across what we call broadly SAMIA. There's about $1.5 trillion of B2B trade, and everybody wants to work in dollars, but no one wants to touch SWIFT. So we're getting a ton of demand from licensed B2B fintech companies, banks, exchange houses, and they were like, hey, we want more efficient treasury, we want faster settlement times, all those things. Stablecoin makes sense to us. So how do we enable them without getting into the complexity? We don't care what the underlying infrastructure is. We don't care about the chain, the token, the rail. We just want to be able to have a local on-ramp in local currency, and then have a local off-ramp on that side. And stablecoin is basically the connectivity tissue that connects these two parts, and there's a huge amount of interest from businesses. Most of the businesses, the banks and fintechs in this part of the world, they operate in multiple markets, and there's a lot of trade. And UAE is not just a tourism hub, they've really established themselves as a commercial and a financial hub. So we see a lot of trade from Hong Kong, Singapore, into this market and down into India, Nigeria, all these places. So they all want to use a stablecoin as sort of an effective treasury and transfer mechanism. And this is what we're seeing is a huge driver for us. So our business has grown almost 500% in 2025. Oh, wow. And a lot of that is just coming off of a stablecoin growth.
Oh, incredible. What's the split roughly between stablecoin and, let's say, Bitcoin?
Yeah, I mean, so Bitcoin is still the #1 traded asset across all of our banks who have implemented Fuse. And then, but from a stablecoin to a non-stable, it's probably about 65-35.
Oh, wow. Awesome. And your side, Alan, GSR, you guys are obviously the biggest or one of the biggest crypto market makers. How are you seeing that move?
I mean, we are like a market maker capital partner. I think I will break it down, as you mentioned. I would say like in emerging market, we see like payments provider, we see fintech, we see trade firm, which basically have a lot of markets, and they basically move around value, and they realize it's much easier to move the value around on a blockchain. So using stable coins, we see that. We see local LATAM. We see like different country having different treatment if you do a transaction in fiat or stable on the tax wise. Like Colombia is one thing where you get preferred treatment if you lose a stable coin. So we see much more for them as a like let's call them as business partner integrating that kind of infrastructure. You saw Klarna coming out of that, and then that's more the emerging market. They basically see it as a great way to move around value. The other side is like on the emerging or developed country, we see more and more different players opening up to provide some kind of solution to their client, being Bitcoin. We saw JP Morgan offering like a structured product on Bitcoin. So all the fancy wealth management products.
Are you guys doing stuff with JP Morgan on that?
No, we're not directly working with them. We have some other banks, I would say, in Switzerland and Europe. They do some more structured product with us.
And do you know if JP Morgan are actively involved, or it's more PR and
they actually issued a structure note which is path dependent. I mean, it's probably a caveat to mention they don't do it on Bitcoin spot. So they're actually not really forced to hedge or create a product to touch Bitcoin themselves, but you can use CME future, they can use the ETFs on Bitcoin. But it's already the first step. They first give their clients the exposure through some other paper solutions, and then the next step is they actually directly deal in the coins.
Actually, so one of the things that we see, and I'd be curious to know if you have the same thought, like the market for spot trading is saturated, but structured products and all those kinds of things, there's so much depth here, and people have just started getting into that space in this part of the world.
Yeah, we have been running around exactly what you mentioned. We were always telling everybody, if you look at every asset class, the option volume that you see is like 3 to 4x, and spot is like much lower. Yeah. Only crypto is around, but so far everybody loved the 50 or 100x perps. There's just leverage, and option was just like a high volatility.
Yeah.
So nobody wants actually to buy it. But I think now we see foundation looking at risk management solution. We see banks creating products. So it's like more and more coming up both way flow on the option side. So I'm very excited to see that. Yeah, it's very in the early steps.
Do you guys do any derivatives or?
No, we don't have a license for that. We're only licensed for spot trading. So that's what we do now. We are looking at different ways to do this in a very regulated fashion. But right now, all of our trading volume is all in spot.
Awesome. Yeah, no, the volumes that we see on crypto, Bitcoin and stablecoins in Africa are honestly eye-watering. You wouldn't expect such large volumes out of these third world countries. But the reason is because you have pretty much the entire economy moving over to crypto, to Bitcoin and stablecoin rails. Like you mentioned, Mo, compared to Swift, a stablecoin or a Bitcoin transfer is like an email versus a snail mail postcard.
Yeah. I mean, like for us, so we think that with the moment you step out of this market. Any market where the inflation is high, currencies are depreciating, there's so much demand, and like the crypto infrastructure economy is very circular. So the crypto infrastructure economy has really enabled other fintechs to have like a dollar account in their apps and that kind of stuff. And across emerging markets, more broadly speaking, there's so much demand to have a crypto backend and a fintech front end, and that's what we're starting to see. And even though many of the B2B exchanges or the B2B flows, C2C flows are still fiat in and fiat out, I think we're getting to a world where we'll keep more value on chain, and then you'll have more opportunities for investment and yield and all that kind of stuff. But we're definitely moving towards that space very quickly.
Awesome. Yeah, it's exciting to see. At OVEX, we have licenses in South Africa, the UK, EU, and some other markets. And we're seeing the licensing landscape, especially this year, evolve quite rapidly, which is exciting to see. Alan, this one's for you. How do you see the framework around assessing counterparty risk when it comes to OTC clients? How do you see that today? How has it changed over the last few years, and how do you see that moving into the future?
I mean, the firm has historically been a bit absent from running too much counterparty risk or building up a credit portfolio, because if you have been looking back, it started with Mongox, and then like probably every few years, last one was FTX. You have some kind of exchange or larger blow up, which basically puts the whole crypto market in a bear market, which is very annoying. I think today, given more regulatory clarity and more sophisticated player, there's always like one way that you basically ask for a fully collateralized trade. So you don't really have a counterparty risk. Second one is you move into margining. Another way that we see more and more popping up, I mean, on the exchange side, you have something like Copper Clear Loop. There are different technology solutions that basically migrates the counterparty risk to somewhere else.
Got you. And when you're onboarding new institutions, which I'm sure there's a lot of kind of first-time crypto buyers, what are some of the mistakes you see them making as an institutional moving into the Bitcoin and crypto space? Some of the more common mistakes that people make when starting in Bitcoin and crypto?
I mean, I don't know if it's a mistake, but I think there is an inherent distrust in crypto. So it takes a while to convince compliance and risk, hey, this is a $3 trillion asset class. It's not going anywhere. Well, the bigger tokens are not going anywhere. And this is like a proper financial instrument at this time. And so I think that's the biggest challenge that we face whenever we speak to our clients. And then I think also it is still difficult to get the supporting fiat rail. Many of the banks are still
Do you see that using awful lot, both the skepticism from clients and the difficulty in fiat rails?
Yeah, so I think those are like, it's not really mistakes, but it's more challenges that we have to overcome when you sell to some of these larger
and is it getting easier and easier? Is it getting worse?
I think all the work that's happened in the US over the past year, regulations are becoming more clear. Just last week, there was a number of big banks in the US who announced that they're going to start to distribute Bitcoin investment products. All that stuff definitely helps. US has always been a leader in financial markets, so when you see the largest country moving a step closer towards really democratizing Bitcoin, there's a lot more interest over here as well.
Awesome.
I mean, two mistakes I would mention. One is for crypto natives. We work with a lot of new projects together that issue their own native token and then basically want to be a business, and it's some kind of funding mechanism. The biggest problem I would say there is that they hold 90% of their treasury in their native token and don't diverse into something like stables or Bitcoin. They basically expect their token to always moon, so they never want to sell. But you need to sell to have enough cash to run your business. That's just good finance 101. And diversification is probably in the same thing. A big mistake we see when we talk to TradFi people that come into, I think one of the interesting topics they see is real-world asset and tokenization. So like everybody wants to tokenize their money market fund or their credit fund and all that. But I think that's a very good starting point, and it's good to get some internal learnings. But I think they also should ask themselves, so now I have my tokenized fund, so what? Because if you just hold it and you keep it in your same closed garden as before, and you don't put it on chain and put it in the free wild, and basically use the composability that that kind of new technology offers you, you're not going to harvest all the power it has. And it's basically the same thing as before.
Yeah.
It's the same thing like if you would launch a stable coin, but you only accept it between 8 banks.
Yeah,
it's not really unleashing any power.
Yeah, no, that makes a lot of sense. And yeah, everyone always wants to know, we don't have much time, so this is the final question for both of you guys. Everyone always wants to know what's happening with the price. Why is Bitcoin down? You have M2 kind of exploding, S&P close to all-time highs, gold up 30-40% on the year, Bitcoin's down 30% from the top. Let's hear from each of you, starting with you, Mo. Why do you think that is? Why do you think Bitcoin is down 30% from the highs when everything else is up? When do you think that reverses? And finally, obviously, no one's going to hold you to it, but where do you see Bitcoin at the end of 2026?
Yeah. Look, so it's you hear all these different, theories about what's going to happen next. I think it's really hard to predict the price. The whole 4-year cycle has really changed now, so nobody's really sure. I think there's a lot of fear in the market still. Even if you look at what drove the price up in the past couple of months, institutional demand really drove it up. Retail is still very skeptical. My earlier prediction was 150 by December, so which means that I'm completely off. So anything I say now,
what do you think it will be by the end of the year? Do you have any ideas?
In the next couple of weeks, I think maybe we'll get a small bump at the end, but around maybe 90K. But I'm still quite positive on 2026. We're going to hit that 150 mark.
150 end of 2026.
Yeah.
Awesome. And you, Alan, what are you saying?
It's very hard to say. I probably think we're going to end somewhere between 80 and 100 end of month.
Huh?
So it's not hard. I probably think we're going to see 250 in the next 3 years.
3 years?
Yeah.
Okay, awesome. 250.
That's not fair though. He's giving these like ranges of like 3 years.
No, it's like 88 by the end of the year. That was interesting.
Yeah.
We're gonna need your December prediction.
So let's do nice number, 100K.
All right.
There you have it, guys.
No financial advice.
No financial
advice. You all have to disclaimer.
See how we got a short and we got a long by the end of the year. Thanks a lot.
Thank you. Woo.
to the Bitcoin Magazine news desk, powered by Crypto.com. I'm Frank Korb, a Bitcoin journalist, joined to my left by Susie Violet-Ward, CEO of Bitcoin Policy UK and host of the My Two Sats Rocksome Show, as well as Catalyst for Machankura, KG, Kokatatsu Nagako. And we want to give a shout out to Rob, Susie's husband, who I think is watching back home, and who also helped me with my back last time I was in London, so we salute you, Rob. Hello. I want to go back to a conversation we were having off camera here, talking about challenges associated with getting people into self-custody. KG, I'm going to go to you first. I think people generally feel a little bit nervous about it, right? We use all these digital apps. They hold our money for us. We use these apps that there's private keys, public keys involved with them, but we're not even aware of it, right? So this taking responsibility seems difficult for people. What's your experience with this?
Yeah, so, well, I think one of the biggest things is a person maybe is not ready for the permanence of it all, right? Like, you self-custody from that point till infinity and beyond. So yeah, we have devices that help, like an open dime, which is just you gift it to a person, now they can self-custody. But I was telling you earlier that I think BitKey is like a reusable open dime. You gift it to a person, now they can self-custody without ever having to worry about seed phrases and whatever else. And maybe when they're ready, they could graduate like a much more advanced
wallet.
Yeah,
right. Yeah, something like that. Okay, that's fair. Susie, your thoughts? Is it more of is it like a responsibility issue? Is it a personal responsibility issue at the end of the day?
Yeah, that is a tricky thing for people, isn't it? Because we outsource so much of our thinking, and I think that it's completely different in Africa, because I think people have to take more personal responsibility, so it's much easier to get people on board. And I totally agree. BitKey is a bit of a game changer, and that's exactly what I was thinking when you said that it's hard, because it's multi-sig. You don't have to worry about a seed phrase, but that actually took some getting used to for me, because when I was setting it up, I thought, right, I'm going to set half a day aside. I'm going to really understand it, and then within 10 minutes, I was like, oh, I'm done. And where's the seed phrase? And then and it took me a while to actually feel comfortable with that, but actually, it's brilliant.
Okay, love that. One last thing. We do have to head back to the main stage in 30 seconds. I just want to know, I'm watching what's happening with Money Badger. This is a little off the topic. So Money Badger is helping make Bitcoin a medium of exchange across South Africa. Is this real? Is the hype real around Money Badger?
Well, it's underhyped.
Underhyped.
Yeah, so basically get to South Africa, whichever is your favorite Lightning wallet, load up Money Badger, scan a QR code, and it pays automatically.
And it's settling in the South African rand.
Yes.
Wow, incredible. All right, well, ladies and gentlemen, when you're in South Africa, obviously check out Machankura, check out what's going on with Money Badger. We're headed back to the Falcon stage. We'll be right back here at the live desk after this.
Thank you, everybody, for joining. Of course, a huge thank you to Bitcoin MENA and Abu Dhabi for hosting us for what is a fantastic week of digital assets leaders, joined by 4 of the best here today. As our MC said, I think we can all see how the UAE has rapidly risen as a leading digital assets hub and financial services hub more broadly. And we'll explore what's driven that growth today, what's needed to maintain that growth trajectory, and a bit of a look ahead to the future of what our esteemed panelists see as the real key growth opportunities. But just to kick us off, I'll invite each of you to just share a bit about yourselves and organizations. Peter, do you want to kick off?
Yeah, definitely. So my name is Peter Abu Hashim. I had growth and strategy at Hub 71. I'm sure a lot of you know Hub 71, but for those who don't know, Hub 71 is the government-backed tech hub in Abu Dhabi. We're tasked to do one thing: build a global tech ecosystem out of Abu Dhabi. And that's the role we play. And our job is to create that global tech ecosystem. We've been doing it for the past 5 years. And hopefully on this panel, I'll get to share more about how we're doing it and the relevance for Web3 and digital assets.
Absolutely. Mohamed.
I'm Mohamed Rasool. I'm the CEO of Amana. We're a neo-broker based in Dubai. We cover MENA. We're working hard to open up access throughout the region for people to both TradFi and DeFi assets in one combined ecosystem.
Hi, Dishank Patel. I run digital assets at Rackbank, so I guess I'm the banker on the panel. We've actually been quite maybe the pioneer when it comes to banking for the digital asset space. We recently, or earlier this year, launched a brokerage platform for our customers where they could trade crypto, for example. We're the first conventional bank in the UAE to do that. So yeah, we're very much doubling down on this space and seeing where that takes us.
No.
You might have to shout a bit louder, or if someone backstage can help with the mic.
My mic isn't on.
Can someone backstage help with the mic? Joseph's mic is not working. Maybe just to kick things off, we'll come back to you in a sec, Joseph.
Can
Joseph.
you hear me now?
No. We'll come back to you in a sec. We just try and get some attention. But just to kick things off, Peter, I think obviously with all kind of hyper-growth markets, obviously building the right ecosystem is key. And there's a number of different market participants that make that ecosystem key. You have the builder-operators, the investors, obviously government. In your view, at the kind of center of all these intermediaries, how has the UAE cultivated and continued to grow the right ecosystem at the right time for the asset class?
Yeah. Shall we just do a quick intro before I answer?
Okay, perfect. There we go. Amazing. Saifedean was having problems with his mic as well, so apparently us Bitcoiners are being pranked right now. My name is Joseph Delago. I'm the co-founder and CEO of Rain. My co-founders and myself have been advocating for this industry since 2013. And that culminated into the creation of Rain, the simplest and easiest to use crypto exchange in the region. We were also the first licensed crypto exchange in the region, so you can say that we've had a front row seat to all of the regulatory and market developments here in the Middle East over the years, which has been an incredibly exciting journey. Yeah, I think at the end of the day, people really respect us for our very measured, long-term approach towards the industry. Because at the end of the day, we're really trying to we're working to build a financial system on top of this technology, which has been a really fun journey. This is one of my favorite conferences to attend. I think the conversations here are very elevated. So yeah, really excited to be here with all of you today.
Thanks, Joseph. So yeah, just returning to kick things off. How's the UAE built the ecosystem it has?
So I think that the word ecosystem I get made fun of a lot by using the word ecosystem more than 100 times, maybe an hour. We do that because the word ecosystem is very important to the success of anything. The way the UAE was built as a country, as a young country, is through creating an ecosystem of all the different nationalities coming in, through having an open mind. Just like blockchain technology is borderless, the UAE became a borderless country, and that's in the vision of the leadership and the ethos of the country. Now, how does this translate into Abu Dhabi and Hub 71 is very interesting. In 2019, the government came to us and said, we need to build a global tech ecosystem. Now, there's a lot of ways to do this. You can run acceleration programs, you can do physical offices, bring startups in and incubate them. But what we wanted to do is actually build an ecosystem like startups build product. So we started iterating in different phases and getting MVP 1, getting our product market fit, MVP 2, and iterating how it looks like. What does it mean? Step 1 was we actually brought the startups at the center of that ecosystem. The startups that left their families, left their job, took a big risk, believe in a vision, and said, I want to build products out of Abu Dhabi and out of the UAE. That was the first step. Step 2 was to build an ecosystem around it, or a community rather than ecosystem, which is get them the right partners. Who will regulate these startups? I need regulators. Who will actually procure services from these startups? I need corporate entities, banks, telcos, large companies that will actually get this procurement. Who will fund these startups? VCs, family offices, angel groups. Who will grow these startups? The talent. Universities and academia. So we've created that community around the startups, which are these 4 key pillars that we always believe in. And then MVP number 3 was, we need to focus. We cannot just put everyone in one room and say, okay, now you build. We need to focus on themes. So we started looking at where is the UAE unique, where is Abu Dhabi unique when it comes to different sectors and verticals, and we started launching sub-verticals. And the first one we did was digital assets. ADGM has been regulating everything related to crypto and digital assets in 2017, 2018, while the world was kicking out all these companies from their jurisdictions. So we went ahead and said, okay, it's a borderless world. These companies need a jurisdiction that will welcome them in. with the right ecosystem. So we started launching verticals, digital asset, we moved to climate tech, we moved to AI, and then life sciences. And that's how we created the focused ecosystem rather than a generic ecosystem, and we can touch upon this in a bit.
And look, the growth of it is tangible. As I've been privileged enough to be a mentor in some of your accelerators, and the caliber of organizations, a number of Y Combinator cohorts that are kind of setting up here is really impressive. You touched on two things. I think we'll take each in turn. You mentioned building products and obviously regulation. So kind of taking those two. Joseph, coming back to you, you said yourself, you've had a front row seat to the kind of ascent of the UAE's crypto sector from 2018, I think, when you guys set up?
Yeah, licensed in 2019,
yeah,
but since 2017, yeah.
So from the perspective of a kind of a crypto native founder, what to you explains the kind of real surge in digital assets in this market specifically?
Yeah, I think the asset class largely speaks for itself. I think it's a very innovative and interesting foundational technology. That is really, if you think about it, it's kind of like an accounting revolution. If you look back to the last accounting revolution with double entry accounting back in the 15 and 1600s, this wave of cryptocurrency is really about what we like to refer to as triple entry accounting, which is, there's a third shared entry around the world. So you can kind of think of it as a foundational accounting innovation that is taking the world by storm. And I think that the countries that have embraced that innovation the earliest and the quickest and with the biggest sense of conviction are really seeing a huge benefit from that. I think UAE has really put itself on the map as a global hub for crypto. And as Peter was just sharing, there's just so much infrastructure here for anyone across the globe to come start a business. And whether you need a legal foundation or a technological foundation or office space or a skilled talent force, there really is all of the components of a business scaling a business globally can be found here. So. As you mentioned, I've certainly experienced that firsthand starting a business in the UAE, and that's really what I would say is that all of the base components for starting a global company are here.
It's interesting when you talk about base components, and Peter, you mentioned it earlier, obviously regulation is critical. And so, I mean, just coming to you, Deshan, from the banking vantage point, I think the one thing that we can all agree on, it's not just that the UAE's regulatory frameworks are progressive, it's how they move with industry and remain so agile in real time, because this is an evolving asset class. Can you give us a bit of color on actually what's required to do that, and what are the kind of ingredients for success into having an agile regulator and implementing that regulation effectively?
Yeah, the truth is that the regulators who regulate us are not the same regulators who regulate the reins of this world. So that marriage is very important, federal versus emirate level, for example. However, the progressive nature and the agility has meant that it's worked quite well, actually. And progression isn't just based on what already exists, it's also creating what doesn't exist. The payment token service regulation was launched a year and a half or so ago. And more recently, we've seen that happen via the Genius Act in the US and things like that. So, sometimes you have to take the lead. And what's happened is, certainly from a bank's perspective, it's given us more validity to be able to work with these entities and give us more comfort that the regulation is giving us the ability to validate these entities and the transactions and all the things that come with it, because ultimately we're a traditional organization, right? And being a traditional organization, we have certain rails and certain benchmarks that we have to manage, and we've got no choice but to manage those. But bringing sort of what I like to call DeFi and WebFi together, TradFi, excuse me, DeFi and TradFi together, it means that it actually allows us to talk a similar language, and that is helping. One thing which I always go on about a lot, and that's education, both internal to organizations like ours, as well as to VASPs as well, because without talking the same language, there's always going to be that chasm which needs to be bridged, and I feel like regulation is helping us do that.
It's an interesting point. You preempted my next question. That coalescing of TradFi and DeFi has become mainstream. And I think, turning to yourself, Mohamed, I think you've worked all around the world, from Chicago to New York to London to the Gulf for many decades. And so I'd love to get a flavor from yourself as to what you've seen through your personal journey and how the UAE has kind of so seamlessly delivered that TradFi, DeFi, not to use ecosystem again, but yeah, that seamless kind of bridge.
Yeah, I'll be honest, I've never seen anything like it. I started in the capital markets in the 90s, and at the beginning of the technology kind of coming into the capital markets, and whether it's the US or London or continental Europe, I've never seen anything like what's happening here in the UAE. And I think that starts from really the top, the organizational structure. The UAE is very end-directed, right? It determines its plan. When I started coming into the space in 2006, there was a plan about building this ecosystem, and I think that that's a brilliant word to describe what's happening here. And planning is not necessarily new, but the adherence to the plan, through the dips, so to speak, I think that's what separates the UAE from everywhere else. And the support that you have here from the government, from all the different incubators, it's amazing. And the rest of the world and many of the cities around the world that used to be financial epicenters are very much in an identity crisis, and that couldn't be further from the case here in the UAE. So we're extremely happy to be here. I think it's the place, anyone in capital markets, whether it's traditional TradFi or DeFi or like us, bringing the two together, I think this is the place to be, regardless, throughout the world.
It's interesting when you mentioned the point of an identity crisis, and I think often when speaking about this sector and asset class and the kind of authorities around it, there's always that necessity to toe the tightrope of innovation and security and responsible innovation. So I guess not to bring it back to responsibility.
Yeah, one thing on that I would say is because this end-directedness of the UAE is about growth, but it's also been about structure. Right, so you have one of the best regulatory structures here in the UAE, and that's not an accident. And I think in many ways, without a proper regulatory structure, you don't really get true long-term growth. And so the UAE has not sacrificed the immediate short-term growth without thinking about that. And that's super uncommon. I've never seen it before.
And the structure's the foundation, right, on everything on which everything's built.
100%.
I guess, and staying on that theme, that kind of innovation, but responsible innovation. Dishang, from your kind of, you straddle the digital assets with the traditional financial institution. We've spoken a bit about, the regulators, but what role do large financial institutions have to play to enable and help government and the local market to be able to toe that line effectively?
Look, the simple fact is without banks, none of this works. That's a simple fact. And we can talk as much DeFi as we want and moving money on the blockchain, but ultimately people want off-ramp and on-ramp, and to do that you need banks to do so. And I feel like this is where that line is being towed, right? And this is why I made the point earlier about making sure that organizations, both on the TradFi side like us, as well as on the DeFi side like Rain and others, understand what that marriage looks like while still aligning to regulatory requirements. And what I think has to be done and what will be done for this to evolve further is for each side of that coin to understand each other's regulatory burdens and requirements, because without knowing that, the journey becomes quite full of friction. If you want to create a frictionless environment, it's going to be more about ensuring that before we've had a conversation, before the sit down around the table has happened, it's an inherent understanding of what needs to be built. And I feel like that's where certainly the financial institutions, to answer your question, are moving towards. It's a slow burner because this is all very new. Even in the UAE, where it's more progressive, I think this is why the regulatory landscape is so important, because it gives a level of comfort and certainty to the traditional bankers and the traditional financial institutions to be able to help this ecosystem grow. but I do feel like it's an inflection point, and the proverbial, to talk a bit of Amana Capital wording, the hockey stick is potentially coming with reference to how the market adoption will take place.
Well, it's interesting you talk about that inflection point. I think one piece is always around institutional adoption, right? So obviously the explosion of the asset class came about. There was a lot of retail adoption, but we're seeing that bleeding into the institutional world. And to that point, I guess, Joseph, coming to you, you've spoken before about kind of building the tech rails needed for digital assets to be a legitimate part of institutional finance. Can you help for the audience and kind of unpick that a bit more in terms of what infrastructure really needs to be prioritized by players like yourselves and other market participants in the space to drive institutional adoption?
Yeah, absolutely. So at Rain, we really think of them as two different user profiles, let's say, or two different types of customers, right? And they both have their own, independent needs. So for institutions, there's a whole slew of, probably 100 different little details that you need to think of when it comes to institutions. Obviously, they're managing a larger amount of money. There's a much higher sensitivity to precision and fees and limits and all of these such things. There's a longer integration process. They tend to need API access. So there's just a lot of realities that businesses operate under that a retail customer, an everyday person, a lot of considerations that they won't have. So we definitely think of them as two kind of different business models, and we serve both. We've onboarded thousands of institutions, and we have dedicated products for each institution. So I think from our end, serving both individuals and institutions in the space, it really comes down to just creating really tailored experiences for both of those different types of customers. And the other thing I would say is that our regulatory backing and the way we build relationships at Rain has been really huge for us. So having being a licensed entity in every jurisdiction where we do business is a really important quality bar to achieve, because immediately customers they already understand that your business has been completely audited and reviewed by the regulatory bodies that be, and they gain a lot of trust, obviously, from that process. And on top of that, the way we build relationships is with a very long-term view in mind. We're really building a financial institution that's going to last decades. So with that in mind, we're building long-term relationships, and we're not trying to rush into relationships that maybe aren't a good fit. So those two qualities, I think, have been especially important for Rain and serving institutions.
So we've touched on a lot of foundational pieces here: structure, regulation, market education. But your point on relationships is really interesting. And want to turn to you, Peter. Hub 71 is the kind of de facto connective tissue, right, for relationship building for all these aspiring founders and great companies looking to scale here meaningfully. Putting your feet in the shoes of kind of the founders or business leaders or CEOs that will want to come to the region and come to Hub 71 as a conduit to build those relationships. How should they be approaching the region and gaining that connectivity?
So I'd first like to comment on the responsible innovation bit, and then I'll link it to how ecosystems work. Please. So I think typically when you look at regulators, I like to use that analogy. Regulators are like Middle Eastern parents around the world. When you ask for something, the automatic answer is no, and then they figure out if it's a yes or no. In the UAE, it's not like Middle Eastern parents. The regulators have their doors open. The UAE has its door open. So even if you're doing something where regulations do not exist, and I'll link it back to how it operates in Hub 71, the regulator's door is always open to learn what does it take for the regulator to innovate to allow that innovation to come to life, rather than taking the Middle Eastern parent approach and saying, you cannot do this, stop what you're doing. And that's what created that strong ecosystem in Abu Dhabi. That's what created that strong ecosystem in Hub 71. How does that link back to the ecosystem we've built in Hub 71? This year alone, we got 5,000 applications to join Hub 71. We've accepted less than 1%. as these companies apply, depending on what sector you're in, you're going through multiple rounds of revision. And the final round of revision, you're actually talking to your regulator, your customer, your investors, and your peers. So before a company comes into the country, before a company even thinks about expanding and leaving their home base into Abu Dhabi, they've spoken to all their stakeholders. We've gotten the comfort as an ecosystem. We work in life sciences, we work in crypto, we work in fintech, we work in edtech. We cannot know the right answer for everything, so we rely on this ecosystem. So as this ecosystem is integrated, from before we even engage with the companies, selecting the companies, then onboarding them. As you onboard them into a new city, within 2 to 3 days, they've met everyone they need to meet. Then you go through a program where, along this program, companies are being taught how to build your product market fit specifically for that region. How do you approach investors, and investors differ between the US or Asia or Middle East. How do you approach these investors? Talking to the regulators to either understand what regulatory path you need to follow, or if the regulation does not exist, allowing the regulator to use you as a guinea pig in a way to learn what they need to build. So I think it all links back to the speed and innovative and borderless mentality from the leadership of the country that cascades down into all the stakeholders that are required. The doors are always open. The doors are always open for innovation. I'll give one example. We were talking to a biotech company that's working on gene modification. They have the best team from Stanford, from Silicon Valley. They have the best investors, 4 times founder, have the best advisor on board, and they're doing clinical trials in Abu Dhabi, even though they've built their product in Silicon Valley. And the question we asked them was, why are you guys here? They said it took us 11 months to get a response from the FDA to be able to get a meeting. We came to Abu Dhabi, and within 2 weeks, we were sitting with the regulator and building the regulation around biotech. So the openness is there, whether you have the right answer or not. The summary is the door is always open. Hub 71 as an ecosystem is the first door you need to open, because that's where you enter the initial ecosystem and you go to the right stakeholders you need, and that's what we try to do. Productize that entry point into the UAE, into Abu Dhabi, through a single door that you open for a founder, for a startup, and from there go to different stakeholders. And that's hopefully answers your question of how do you connect with them.
Definitely, and the point on openness is so true. I think the thing I've found so profound here is that balance of regulatory enforcement, but a regulatory enablement. And I think you get that here far better than anywhere else in the world. We've got about 5 minutes left, so just a couple more questions. First, question for each of you. You're all leaders in your fields, respectively, within the asset class, but looking ahead, what excites you most about the sector here, and what do you think, again, to use the word ecosystem, but what do you think the digital asset environment here and all market participants within it really need to focus on to maintain the trajectory we're on now? So starting with you, Peter, what excites you most about what's coming, and what's the focus to capitalize on it?
So the most exciting bit for us is cross-sector collaboration. When you look at digital assets, it's all about borderless, owning your own money, not having a central entity allowing you to withdraw your money or transfer in layman terms. So the same applies for your health. Why does a central authority is required to approve what drug you take? How can this be borderless? How can you own what you need to do? The same applies for data and AI. Why is the data stored on a specific data center rather than it being owned on the blockchain? So for me, the most important bit is the cross-sector collaboration. What AI technologies will come out that are built on chain, what life sciences, biomed, edtech, whatever sector you see start living on chain. It's less about the crypto hype and trading hype. It's more about what actual problem are we solving with the technology that was developed around the digital asset, and how can we allow humans to have ultimate freedom of money, of health, of lifestyle, of everything, basically. That's the exciting bit for us.
Interesting. Mohamed?
Yeah, I guess on that tone of empowering people with ultimate freedom, for me it's really the merger of the TradFi and the DeFi ecosystems. It's just a matter of time, I think, before you see the tokenization of all real-world assets, whether that's stocks or bonds or real estate. So that's exciting to me. Because right now, and I hope it stays this way, it's coupled with the identity of providing better access for all people. In MENA, people have had a certain, section of people have had access to a variety of financial products for decades. But really, what's happening now is, this democratization, if you will. I know that word is used quite often, but this excites me throughout MENA, the continent of Africa. And I think the most important thing for the UAE to continue to do is to walk that line between growth and supervision, regulatory structures. And if I had to pinpoint one area in particular, it would be around fraud. Fraud in capital markets, fraud in digital assets, fraud in TradFi assets, the regulatory oversight that limits that, reduces that. I think that's an area for the government to focus on, and I think with that being done, I think the growth will keep going, if not at a faster pace.
Absolutely. Dishang, what's your take?
I mean, I couldn't agree more with reference to accessibility. I think that's really important. I think doing things like we are doing and making things more available to the masses is really important. But I mean, I think you just have to look at the stage. A VASP, a bank, capital investor, and an ecosystem enabler. And this is what excites me, the fact that we're now talking collectively.
Sure.
A few years ago, this wouldn't be the case. I'll be very honest with you. I mean, the market has evolved very quickly and is evolving very quickly, which is why I mentioned the adoption curve earlier. And I'm really looking forward to that happening, because the moment that happens, the whole world of interoperability opens up. And when interoperability opens up, that's when the mass accessibility becomes a reality. And as a bank, we have a responsibility to enable the ecosystem in one part of that ecosystem. But we can't work alone. Just can't happen that way.
Absolutely, and it goes back to your point of bringing all the right market participants together.
Yeah.
To wrap up, Joseph.
Amazing. Yeah, so I think what gets me excited is the foundational technology continues to fascinate me and excite me every day. So I really feel like I'm waking up doing something incredibly exciting every day. I think in the last few years we've reached a scale as an industry that few of us dreamed of, over 10 years ago, and it's really no one really has to. No one's asking what is Bitcoin, what is crypto these days, right? So we've reached an incredible scale globally, and I'm just really excited to continue to bring this technology to the masses and to the rest of the world. And I would mimic what Mohamed mentioned as well, that we need, as we do that, we also need to exercise caution. We need to mirror the sentiments and the style of the leadership here in the UAE and lean towards growth, but also do it in a sustainable and smart way at the same time. Yeah, it continues to be exciting to advocate for this technology.
So borderless innovation, robust regulation, ongoing education, and continued growth and breadth of use case. We are at time. Thank you everyone for listening in, listening to our experts. Thank you again to Bitcoin MENA and Abu Dhabi for hosting us here. And of course, a huge thank you, Peter, Mohamed, Dishang, Joseph. If everyone can kindly give our panelists a round of applause, and thank you very much.
Fantastic. Thank you so much. Please give a big hand to our amazing panelists once more. And we can...
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin MENA 2025. The day is underway. Vibes are high. Price of Bitcoin, I think it's high. I haven't checked, but who cares? Anyway, I'm Frank Corva, Bitcoin journalist, joined by none other than Andrew Hones. Pleasure to be with you, Andrew. Andrew is the CEO of Battery Finance and New Market Capital, doing wonderful things at the intersection of Bitcoin and traditional financial products. So, Andrew, please, a little introduction for yourself and what you're working on.
Yeah, great to be here, Frank. It's always nice to be in Abu Dhabi. It's just amazingly electric today with all these people here at the conference. We're working to integrate Bitcoin into traditional financial products and really provide people with tools to realize the ambitions that they have with their Bitcoin savings, draw financing against them, and build things in the real world.
So not necessarily holding your Bitcoin to a point where it hits a certain price level. Like I think the way you said it was maybe bringing the value of Bitcoin forward. Could you talk about that a little bit if you don't mind?
Yeah, because I mean, if you've stored a certain amount of value in Bitcoin and you have in mind that you want to develop a project or buy some commercial real estate or make some contribution to your community, a lot of people, they defer that and they say, well, I'm going to wait for Bitcoin to level up again. And then when it gets there, they might say, well, I'm going to wait for it to level up again.
Right.
And depending on where you live, there can be also really significant tax implications. And what we're saying is well, time out. This is a great collateral. It's got really wonderful properties from a lending point of view. Why don't we instead create a structure where we can make a loan that is supported by both the traditional asset as well as the Bitcoin.
Yep.
So we have a better collateral package. We can deliver a cost of financing that's awfully attractive because we share in the upside of the Bitcoin over the life of the loan.
And I think that's really the key point right there. So what does that sharing look like? What are the details of that sharing in the upside? So you're both taking a little bit of, let's say, the profits or the appreciation of the value of that Bitcoin?
Well, I'm glad to be talking about it here in Abu Dhabi because it's actually highly in line with the principles of Islamic finance. And there you have this idea, let's not have interest. Instead, let's both share in the risk as lender and as borrower. So our concept is that by the end of the life of a financing, the sharing between the borrower and the lender, generally, let's say 50-50, maybe ranging between 40 to 60%. But the earlier that the borrower repays the loan, the larger the share of the upside for the lender. And so within the structure, we encourage the borrowers to just stay in the financing, not worry so much about trying to, optimize the cost of traditional financing, but instead just let the Bitcoin do its thing.
Right.
Let it appreciate over the years. As it appreciates, everyone is better off. We receive a gradually smaller share of the upside. The borrower gets more, and they don't have to stress so much about the financing structure.
Well, this sounds pretty good. We don't like stress here. We like the vibes to be high, carefree. We're enjoying the day here at Bitcoin MENA. We're headed back over to the Falcon stage, but we'll be right back here with Andrew right after this.
Bitcoin MENA hosting this important forum in the United Arab Emirates in Abu Dhabi, a signal of how the entire UAE from Dubai to Abu Dhabi and beyond is working as one to make this country the global capital of the digital asset economy. This is also the right moment to discuss how digital assets are reshaping global financial architecture, not in theory, but in practice. And the UAE is the right place for that discussion, a country that has positioned itself at the intersection of global trade, innovation, and the digital economy. Bitcoin's role in this shift deserves clear recognition. Whatever one's view of its long-term price, Bitcoin introduced something genuinely new, the first decentralized financial system. It forced reconsideration of how trust is created, how value is verified, and how settlement occurs across borders. It challenged censorship, it challenged bailouts, it challenged monetary debasement. It also challenged the single points of failure that underpin legacy systems. Its importance lies in how it pushed global markets to reevaluate transparency in intermediaries and system designs. Michael Saylor described Bitcoin as the first time in the history of the human race that you can give property rights to 8 billion people. In many countries, savings can be diluted, frozen, or erased. A decentralized, verifiable ledger provides an asset that is difficult to confiscate without cause. It is a tool for safeguarding what people have earned. Jesse Powell summed it up directly. It is a vote for freedom. For decades, global finance has relied on a small number of centralized systems for payments, settlement, and risk management. These systems remain necessary, but they also concentrate risk. When a central intermediary fails, confidence fails with it. Decentralized systems distribute trust, operate continuously across borders, and run on open, predictable rules. As CZ noted, Bitcoin never needed a bailout. Traditional banking will continue to underpin monetary policy, consumer protection, and credit. But decentralized networks offer what centralized systems cannot: resilience without single points of failure, transparency by default, and verification without relying solely on trust. We're also seeing something significant. Central banks, global standard settlers, and regulators aligning how to integrate these technologies and integrate these technologies into the financial system safely. This signals coordination at the highest level and reinforces the credibility of the UAE and DMCC's position within that global shift. This is not a question of choosing between models. It is about combining the strongest elements of each. Competition between systems is healthy. Global trade has always proven that networks function best when they are distributed, interconnected, and open. This shift is what the UAE identified early. Long before digital assets became a mainstream policy topic, the United Arab Emirates recognized that they would shape the future of economic activity. That understanding was matched by action, and DMCC has been part of that journey from the start. In 2018, we issued the UAE's first crypto trading license. In 2020, we partnered with Crypto Valley through CVVC to deepen international expertise. And in 2021, we launched the DMCC Crypto Center, now home to more than 700 Web3 companies across every major subsector, itself part of a wider community of over 3,500 tech companies, including DMCC tech companies, including a dedicated tech ecosystem of over 1,000 companies across crypto, Web3, blockchain, gaming, AI, and robotics. I have to say, gaming is not sports betting, it's esports and VR and immersive stuff. In parallel, the UAE built what many jurisdictions still lack: regulatory clarity delivered at speed. Government, industry, and founders work together to remove uncertainty before it becomes an obstacle. For over 26,000 companies operating in DMCC, this provides confidence from the outset. The point is straightforward. In the UAE, digital assets are already part of the real economy, not pilot projects. And in 2025, we saw the rest of the world move in our direction. Long-awaited clarity in the United States, a pro-digital asset administration in Washington, and new frameworks emerging across Europe and Asia. The global tailwinds are finally strong, and the UAE remains years ahead. A key part of that progress is DMCC Phoenix, the platform connecting trade, capital markets, and digital assets. It provides the infrastructure to make global commerce faster, more transparent, and more efficient. Through our partnership with Dubai's Virtual Asset Regulatory Authority, or VARA, we continue to build the frameworks required to tokenize real-world assets in a regulated, trusted environment. The results are immediate and measurable. 2 weeks ago, at the Dubai Precious Metals Conference, we unveiled the world's largest silver bar with SAM Precious Metals, a 1.9 tons bar, to be exact, 1,971 kilograms, reference to the year of unification of the UAE. Now being tokenized on DMCC's TradeFlow platform through a startup called TokenVest that operates out of DMCC Crypto Center, with Brinks providing storage and logistics. It is a practical example of how UAE can take an abstract concept like digital property and implement it at global scale. This is where decentralized technology becomes real economic value, and the UAE is leading that transition today. As we move forward, we remain practical. Central banks and traditional institutions will continue to be essential. But decentralized systems and capabilities that legacy systems cannot match, real-time settlement, full visibility, and operational resilience. The future seems to be hybrid, using each model where it performs best. For global trade, the benefits are clear: faster cross-border payments, new liquidity channels for SMEs, stronger collateral structures, and transparent, auditable supply chains. This is why DMCC views digital assets as part of an evolution in market design, one that links freedom, property rights, and efficiency. And even as we talk about tokenization and digital asset, it's worth noting one parallel. The New York Fed, through its gold vault in New York's financial district, holds the largest monetary gold reserve in the world at approximately 6,331 metric tons of gold, valued at over $582 billion in today's prices. Well, DMCC has its own financial district with over 1,620 companies within DMCC Phoenix already. And we also own DMCC Vault, the region's largest non-sovereign precious metals vault, operated by Brinks. I know for a fact that the next one or two major vaults will also be established at DMCC, because this is the ecosystem that is now the natural home for them. Bitcoin sparked the global conversation about decentralized financial systems. The UAE is among the few countries turning that conversation into applied innovation, sound regulation, and real economic outcomes. DMCC's work, from our community of over 3,400 tech companies to the Dubai Gold and Commodities Exchange, the Dubai Commodities Clearing Corporation, our central counterparty, the DMCC Wealth Hub, and now DMCC Phoenix, reflects our commitment to building the foundation of the future digital economy. And we're proud to see that future taking shape here today. Thank you.
Fantastic. Thank you so much. Please, once again, give a big hand to Ahmed bin Sulayem for his amazing keynote. I would definitely say that it was interesting to learn about all of the achievements that DMCC has achieved. But also, we are having one very exciting panel ahead. So stick with us.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left by Andrew Hones, CEO of Battery Finance and New Market Capital. Andrew, we were just talking off camera a little bit about how sovereigns are now looking at some of these products you're talking about, especially sovereigns in this region of the world. Can you speak to a little bit of maybe your inside knowledge around some of the people you've spoken with, their interest in things like Bitbonds and maybe other financial products that combine this idea of traditional financial structures with Bitcoin?
I think large institutional investors are spending more and more time looking at Bitcoin as a theme. They're saying, how can we invest in the ecosystem? What are the companies that we can invest in? What are the securities that we can invest in? And how can we use Bitcoin for our portfolios? Here in the region, I would say it's one of the leading geographies in the world for that type of discussion. We saw the news just last week that the Abu Dhabi Investment Council, ADIC, has significantly increased their exposure to Bitcoin, having purchased at this point over $500 million of the IBIT ETF. Yep. That sounds like a lot of money. It is a lot of money, but on the other hand, it's not a tremendous amount of money relative to the size of that institution. That's significantly less than a 1% allocation for the size of that institution. So when you start to go through, the 20 or 25 largest sovereign wealth fund investors here in the region, institutions like ADIA, ADIC, you know, other countries, PIF, Sama, the Oman Investment Fund. I think that there's going to be a significant amount of momentum that develops over the coming years.
Okay. Speaking of momentum, Bitcoin is now, it's kind of only shifting out of being a taboo entity thing in the minds of many to now more looked at as maybe like a macroeconomic asset. What is it like? What has it been like having the sorts of conversations you're having in terms of getting people to see what you see in terms of the value of incorporating Bitcoin into these products?
Well, you can't ban Bitcoin. You can only ban yourself from the benefits of Bitcoin. And I think that here in the region, one of the really interesting things has been the route into the discussion has been through Bitcoin's industrial use case. So, you know, what you have in the area is very hot summers with a huge need for air conditioning and extremely pleasant winters. You know, I mean, right here where it's 85 degrees or, you know, I don't know how much that would be in centigrade, 26 or something, I don't know. It's hard math. But
we got some Americans on the desk here, ladies and gentlemen. Yeah.
But what they've done in Abu Dhabi in particular is they said, okay, let's hook up Bitcoin miners, and in the winter when we don't need that electricity, we'll hash that extra energy into Bitcoin and use it to balance the grid, rather than having to shut down and, you know, mothball plants for several months, which of course is very expensive. And then in the summer when the energy is back in need, we'll throttle it down and bring that energy back to air conditioning. And when you start to see those real life adaptations, then it's a very short step to saying, okay, well, what is this as an asset that we could also invest in? And of course, within that context, you have all of the growing discussion around debasement, monetary debasement, people realizing that hard assets are very much in focus for the next 10 to 15 years.
Okay, understandable. And I think also kind of meeting it from that process of a hands-on thing, operating Bitcoin miners, operating a Bitcoin mining facility, I think that, does it add a level of tangibility to something that's otherwise a bit abstract to, I think, most people who are new to Bitcoin? Do you find that most people are like, okay, I technically now get how Bitcoin works as an operator of these machines? Does that help as part of the process?
Definitely.
It is. Okay, interesting. Yeah. So yeah, but when it comes to now incorporating this as an asset, obviously when it comes to major institutions, central banks, we're talking about Bitcoin now, potentially putting it on the balance sheet, but still gold seems to be the main go-to for people. How would you make the case to some of these larger entities to say Bitcoin is inherently different from gold? Obviously it shares certain characteristics, but in other ways it is quite different. So what sort of pitch would you give to an institution that was maybe looking to incorporate either of these hard assets, as you imagined, into a financial product that they're working on?
Well, gold is good. I mean, it has a long track record, but it is not as useful as Bitcoin, and it's also not as adaptable. I mean, gold is not easily divisible. It's not fungible. It's very heavy. It's very conspicuous. It's expensive to transport. Bitcoin is none of those things, and it's actually finite, whereas gold is scarce but not finite. It's growing by about 1.5–2% per year, and with gold prices being what they are, people are just like really feverishly digging to try to get more gold out of the ground. With Bitcoin, you can try to dig as much as you want, but the way the difficulty adjustment works, you still have that set monetary schedule. So I think what people are realizing is that when they contemplate the themes of the future, and Abu Dhabi in particular is an investor in the future. You know, you look at the focus on space, you look at the focus on new methods of food production, you look at the focus on energy resiliency, telecommunications, robotics, but then again, Bitcoin, and you say to yourself, well, fast forward 10 or 15 years when AI agents are trading amongst themselves and robots are exchanging value for digital labor. What medium are they going to be using to exchange that value? Is the robot going to demand payment in physical gold? And what, like open up a little R2-D2 container and put it inside? Hold on to the gold? No. They're going to obviously be using machine-readable native digital currency. And in particular, they're not going to choose a currency that has all of the problems of human abuse with fiat, which is overprinting political objectives, they're going to use Bitcoin because it's finite, it's divisible, it's fungible.
Yep.
It's so useful.
It's all this stuff, the way you phrase it sounds comforting, it sounds obvious, all these things, but I think for a lot of people, I think a lot of us believe we're in what's called a fourth turning, right? A lot of things in the world are about to change in ways that no generation living has ever seen before. I'm sure a lot of the work you do is not only helping people wrap their heads around this on a cognitive level, but sort of on an emotional level, a lot of it comes down to the way that you sort of portray this for them. So when it comes to that, what do you lead with? When it comes to all of this work that you're doing, how do you sort of get people to say, like, look, this is sort of an inevitability, we're moving in this direction, it's not something to be scared of, it's something that we should embrace. How do you get people to that place?
Well, The Fourth Turning is a great book, really interesting book. So is The Sovereign Individual, two excellent books to read together, both written in the late 1990s. But here's the good news about The Fourth Turning. According to that theory, it's almost over.
The turning itself?
Yeah, the turning itself, right? It's not just starting. A turning is a 20 to 25 year period. And of course, it's not a perfect science, but a lot of people will say, okay, the global financial crisis kicked off the fourth turning, or somewhere in that neighborhood. Some people might say September 11th, other people say the GFC. But you add 20 to 25 years to those, we're now at the end of the fourth turning. So everything that's been happening for the last 15, 20 years, which feels so shifting, feels deeply inflationary, the rise of populism, all of these elements are
they're coming together.
Hallmarks of the fourth turning. Yep. And now we might be in the last 2, 3, 4 years. Yep. But what I would say, you said, what would I encourage? What I would encourage is that people should read the book, but read it again with a view toward reading about the first turning, because that's actually the name of the game. That's the next 20 to 25 years, and that's a period that has a lot less strife, a lot less division, and is focused on consolidating a lot of the bigger picture shifts and setting the stage for the next 80, 85 year period. And I think that's a period that's really technology focused, where Bitcoin's going to play a key role.
And do you believe that we're sort of maybe moving into an age where between AI, robotics, Bitcoin, maybe we do see deflation, which does lead to maybe a form of human flourishing, or are you not looking at it that philosophically, let's say? Is that part of what basically increases some of what you're talking about, the peace, that the more peaceful era that we hopefully move into from here?
I think that in every era, you're going to be able to see things that are really wonderful and encouraging, and in every era, you're going to see things that are troubling. And where you choose to focus your time is going to be a lot of your own personal happiness and personal satisfaction.
Yep.
So, the robotics, yes, they're going to reduce prices for some things, but they're also going to cause reduction in some employment that that humans are doing right now. So,
Andrew, would you mind if just hold into thought? I want to continue this. We're going to be back with Andrew right after this. We do have to head back to the Falcon stage right now, though. So stick with us, everybody. Over to the Falcon stage. We'll be right back here after this.
Let's do it.
Yeah, I don't think it's going to be the smaller banks. I think the larger banks are going to step in a big way, and we've started to see that. And I step back and I ask myself, well, what problem are they really solving? And notwithstanding what Eric and Chris were talking about in terms of like allowing banks to start to get comfortable with interacting with digital assets, the fact of the matter is, I think they're kind of building on the wrong platform or the wrong protocol. And I'm agnostic as to which one of the other blockchains you're talking about. I think everything ultimately should be built on top of Bitcoin, because it is the only decentralized protocol that has been operating uninterrupted since before Silvergate got into this space in 2013. So everything is going to ultimately be built on Bitcoin. A lot of folks try to be nice and say, oh, well, we can try it on this other protocol, and then whatever works we'll bring over to Bitcoin. Why not just start with Bitcoin? It is, again, the most decentralized, secure protocol, and I think everything else is a little bit of a distraction.
Yeah, I totally agree with that. One of the things that came out of the Genius Act that I was a little bit surprised about was the fact that they wouldn't let Tether offer yield to US-based customers. And David Sachs came out and specifically said that was because of pressure from the smaller banks. And both stablecoins and Bitcoin offer a threat to the traditional banking system. And so I may be kind of naive here, but will the banks let this happen? Maybe Eric, you can start.
Yeah, like, and for context, how I met Alan and Chris is, given their experience, our venture capital firm, Epoch, everybody was saying when SAB 121 was repealed at the beginning of this year that the banks are coming to Bitcoin, the banks are coming to Bitcoin. And we're like, well, what does that actually mean? So we wanted to talk with like experts in the industry and really like deep dive into what that question was. And then, when the Genius Act was passed back in the fall, like really the two primary things that did for stablecoins and how it impacted the market was it forced non-bank providers to own short duration government assets as reserves in these products, and it didn't allow them to pay interest. And that's really just a form of regulatory ring fencing so that banks can issue a similar product that is paying interest. And that's called a tokenized deposit, which Chris has written quite a bit about. And I'll pass it to you, Chris, to kind of talk a little bit about that distinction.
Yeah, I think the interesting thing about a tokenized deposit versus a stable coin is at a technical level, these things can not only be similar, they could literally be the exact same smart contract. So at a technical level, you can think of stablecoins and tokenized deposits as identical. So what is different about them? Ultimately, it's the asset that underlies, that actually, I guess the underlying asset. So in the case of a stable coin, you have high quality liquid assets, things like short duration treasuries. In the case of a tokenized deposit, you just have the bank's balance sheet.
Yeah.
But again, technically very similar. And the most interesting thing for me personally is in order for a bank to do either of those, they actually need to get into their technology stack, and they need to have the ability to either to custody digital assets and to link settlement between their legacy core banking system, their internal subledger, and this external network. So once they do that for either stablecoin or tokenized deposit, the plumbing is there and it's primed for Bitcoin.
And that was like one of the really interesting things to us as a venture firm is we wanted to ask the question of what needs to be built for banks to be able to participate in this economy most effectively. And I think what a lot of founders, entrepreneurs, or executives in the industry are a bit misguided on is we're looking at technology that's been built in isolation for so long. It's been built on its own rails for its own purposes. And if you want to be integrating with the massive amount of capital that exists within the banking system, then you have to talk its language. You have to be able to speak to the systems, very old systems, like a payments hub, like a core ledger, and nobody wants to do an IT restructuring so that they can support Bitcoin. What they want is to use all the systems they're currently using and have those support Bitcoin. And that's one of the problems that we've focused in on, and we're like, we want founders to be building technologies that are supporting this type of adoption by integrating with the incumbent system. And not to monopolize this question, but I think one of the other really interesting things is when we were digging into this question, Chris had been working on actually a lot of research kind of as to how banks, how they're going to think about Bitcoin. And it's actually a really novel perspective that he brought up with us.
You want me to launch into that now? Or?
Yeah.
So Eric mentioned a paper that he and I wrote together. I think fundamentally when people approach Bitcoin, especially in the financial services space, they think of it as something other. If you think of, we operate in a two-tier banking system. So you have central banks at the top, you have the commercial banking layer, which is tier 2, and then you break the rule because the third layer is the end user or the fintech. Most people, when they approach Bitcoin or think about Bitcoin, they think of it as like this other thing. It's this thing that like sits there at the fintech layer, that bottom layer, and that is not at all what Bitcoin is. Bitcoin is at the top layer. Bitcoin ultimately is a decentralized central bank. So what that means from a bank integration or a bank adoption perspective is the same way, as a US bank, we very likely, especially a smaller US bank, we don't actually go out and get a charter. A lot of banks don't go and open branches in foreign jurisdictions. They work with a foreign correspondent to get access to that rail. And that is ultimately the way I think Bitcoin is going to be spread throughout the financial system, is this correspondent banking model.
That was like the coolest thing to me about this was every other central bank that banks plug into that they ultimately are getting the reserves necessary to be issuing loans from, they have to get access to that. You have to get a master account at the Fed, you have to get another account at another central bank, and these are closed systems. So when banks think about, well, what's a good open system, Bitcoin is the only credibly neutral open system that they could be plugging into, and it has this fixed supply rate. So that's kind of like one of the primary theses we were talking about is it's going to be a natural convergence upon Bitcoin. When you're a bank and you have to say, well, I want to route, I want to wire funds from the US to China, then I have to hop through this correspondent banking model because my bank doesn't speak to every other central bank. And all of them are eventually going to start naturally converging on, well, why don't we just all plug into Bitcoin? Because this is the only neutral and open one, and I don't need to get permission to plug into it. And that's going to be one of the natural evolutions.
I think you're a little bit more optimistic about the time frame in which that's going to happen.
It's part of my job.
I think ultimately you have to see fiat continue down the path that it's on. I think it's inevitable. I think it will happen. But right now, I think stable coins are going to, it's the technology layer. It's going to blow the door open for digital signature-based assets into the financial system. Ultimately, it is Bitcoin that's going to benefit. It's the whole world that's going to benefit because you are going to have a actual, a hard money-based asset that underlies that. You can link settlement, using this, this hard money-based asset with a tokenized fiat.
Mm-hmm. But I do think that raises a really interesting point around the neutrality of Bitcoin, because if we're talking about why Bitcoin is going to be the future of banking, not stablecoins, one of the big things in my mind with the issue with stablecoins is that we talk quite specifically about US banks so far, but this is a global thing. And with the kind of move to this multipolar world, the BRICS currencies, are these other countries going to want to adopt a US dollar stablecoin that helps prop up the treasury market, or are they going to just move to something like Bitcoin? I don't know, maybe Alan, you can start on that.
Yeah, I think that's the end state. It just, as Chris was saying, it depends on how long it takes for us to get there. But I think you're exactly right with that question, Danny, because right now, there is this tension between, okay, are there going to be central bank digital currencies? Is the dollar going to, still be the reserve currency of the world? It looks like that's probably not. That's probably waning at this point. And Bitcoin is the only neutral currency and tying back to some of the things that Chris and Eric were talking about, when you think about these these systems that are built in layers, and you think about, okay, well, what problem are we really solving? You can literally go from your fiat currency directly to Bitcoin. You can transfer it anywhere in the world. And then what you have at the other end, it's what the correspondent banking system has done in the fiat world, is tried to put all of this together. But what you need to do is solve for that last mile problem, which is how do you get it back from Bitcoin into whatever currency is being used. And again, this is a temporary problem because eventually it will just be Bitcoin. But for the foreseeable future, we've got to help build these rails.
Right. That's one of the key distinctions, I think, that today it doesn't matter as much, but over the long term, because it's a system based on a fiat currency, it's going to continuously matter more and more. Where a stable coin isn't final settlement of an asset. A stable coin is a claim on the liquidity of an institution that owns short duration government assets and other things today. And that distinction is going to become more and more important as it relates to regulatory sanctions as they emerge. When we think about the geopolitical environment and multipolarity of fracturing of the global environment today, that's going to start mattering more and more. How are countries going to respond to the US dollar increasing in its adoption and are expanding in its share over time when they would like their domestic currencies to actually be providing those functions. So it's at that point when it's not necessarily that people will want Bitcoin, it's that people will be forced to drop into Bitcoin because it's going to be the optimal choice in a prisoner's dilemma amongst institutions and countries that are all saying, well, I don't want to use this other country's currency, and ideally we want to use ours, but we would just simply prefer to opt into these more neutral systems.
One of the interesting sort of dilemmas here is there'll be a portion of Bitcoiners being like, why do we care about the banks? Like, Bitcoin allows you to be your own bank. But does this put constraints on the banking system that aren't in place now? And does it actually create a healthier environment for banks?
Long term, I think it does. But again, this is, and we touched on it a bit earlier in terms of, do the banks really want this? Okay. The answer is no. However, I do think that it is inevitable that eventually, money will converge to one. It's converged to one in our lifetimes to the dollar. As that goes away, we ask ourselves the question, well, what's going to replace that? Ultimately, I think it's Bitcoin. But then how do all these banks, these other financial institutions, whether they're in the US or other countries, how do they make that transition? How do they go from where they are now to a future state? And I'm just going to put a plug in here right now. One of the really kind of least risky ways to just jump in and get your feet wet, anybody that's a banker out there, start, and maybe there are none, start figuring out how to lend against Bitcoin, because Bitcoiners right now still live in the fiat world. They still need their fiat currency. And so one of the best ways to kind of dip your toe in the water is figure out a way to lend against Bitcoin. At Silvergate, we had a very successful program that we stood up over a couple of years. And even during the 2022 liquidations of exchanges, et cetera, we never took a loss because it was over collateralized. And we've talked a lot about the decentralization, but Bitcoin is a digital bearer asset. It's the only truly bearer asset that a bank can lend against. You can take possession or control of those keys, and when you have control, then you have that collateral. If your borrower doesn't pay you, you liquidate the collateral.
The interesting thing there was the idea that money converges to one, which is clearly true. And like you say, it's been the US dollar in our lifetimes, at least in the US. But there's still however many fiat currencies out there. Before the world converges on Bitcoin, do you think all the other countries are going to converge on the US dollar through stable coins?
Well, I think that would be the view of the US. But I'm not sure, actually, yeah.
So maybe, I mean, we're running low on time. Maybe to kind of close out, we can look at what you think the future of Bitcoin banking will be, both sort of short term and then longer term. And Eric, you kick us off.
Yeah, like to the points that Chris and Alan were making earlier, near term, the name of the game is lending. You're a bank, you earn net interest, and Bitcoin is this completely mispriced risk. You can drastically increase your net interest margin by becoming hyper-focused on Bitcoin lending, and having all the right technology and everything associated with that, having the custody, getting the brokerage functions, all of that's kind of like the near term. And then over the long term, I think that there's the correspondent banking model that we were talking about, and how that's going to start expand for cross-border payments and being this like neutral central bank that banks are plugging into. And then I think that will eventually expand into Bitcoin becoming a part of reserves. And like that was kind of one of the key ideas that I pulled out of our research into all this, is one way or another, Bitcoin is like gravity. It's something that, because it is valuable, it will attract demand from people over time. And it's going to infect the reserves markets of everything. We look at Tether today. They have over 5% of their reserves in Bitcoin and another 7% that's in gold. Like, commodity-based assets are going to give them a competitive advantage when we see tokenized deposits or we see offshore stablecoins paying out interest. And what is going to be the ideal form of reserve backing that's going to give you the best competitive advantage at being able to supply that if you're over reserved on one of these assets? So I think over the long term, we're going to see it start stemming into those assets as a reserve asset more and more. It's already a major part of the largest. And I think as the correspondent banking model sets in over the much longer term, the reserves of a bank might start to look very different.
Yeah. Not to completely disagree with you. I think timelines is what's important here. In my opinion, the end state is commercial banks getting back to just the business of banking, which is lending. The end state, banks will not be in the payments business. The reason they're in the payments business today is because money is essentially a ledger, whether it's fiat money or digital asset, Bitcoin, cryptocurrency. Money fundamentally needs to be a ledger in order for payments to work, and the only ones that can provide the ledger over the last several hundred years are trusted parties and banks. But ultimately, we have a better solution for that now, and banks will get back to the business of lending only.
And are there any remaining regulatory challenges with this, or is it open water for anyone who wants to attack this?
Well, the one I was going to mention when Eric was talking about Tether's reserves, 5% being in Bitcoin as an example, and ultimately banks having a portion of their reserves in Bitcoin. Currently, Bitcoin is not a permissible asset for a bank to hold. And so that's one of the biggest things. I mean, you can pass Genius Act, you can pass, right now, the OCC just issued some new guidance within the last week or two that said that a bank can hold a digital asset for the purposes of using it in settlement. So if a bank is like working on a stablecoin project and they're using one of these other blockchains that they didn't specifically mention Bitcoin, but theoretically, if I was building a stablecoin project on Bitcoin and I needed to have some amount of Bitcoin, even if it's just to pay the fees, those blockchain fees, as it's moving along, then I as a bank would have to hold Bitcoin on my balance sheet. And that's something that so far has not been permissible from a regulatory perspective.
Okay, so if you have a bank out there, it's time to add Bitcoin. This has been awesome. We're out of time. Let's have a big round of applause for the panelists.
Fantastic session.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left by Andrew Hones, CEO of Battery Finance and New Market Capital. Andrew and I were just talking off camera about something, I guess, a little more playful, something we know the plebs out there like to hear about. We like to speculate upon where Bitcoin's price is going in the near term. Did the cycle just end? Is there a 4-year cycle anymore? Where are we at right now as far as Bitcoin's price, Andrew?
I mean, I think we're around 93,000, 92,000 right now. But I think it's definitely, we have not seen the cycle top, in my opinion. Since 2022, you had the Federal Reserve raise interest rates in a very sharp acceleration, all the way up to about 5.5%. And interest rates have been elevated since then. Now, not so high by longer historical standards, but standards of the last 15 years, awfully high.
Yep.
And even in that environment, Bitcoin price has gone from, the cycle low 16,000 to at 1.7 times as much.
Yep.
Now we're around 5.5 times as much. You can already see the interest rates coming down. The Federal Reserve balance sheet has pivoted from quantitative tightening to quantitative easing. And I think that President Trump has made it clear that his choice for the leadership of the Federal Reserve is likely to continue to lower rates from here, probably significantly, another 100 or 200 basis points. And if you add in those expectations, I think you're going to see a lot of scarce assets rally. You're going to see a lot of people refinance real estate. That's going to free up purchasing power. That purchasing power will come into many things, including Bitcoin. And and I think that what you will see, which we haven't seen yet this cycle, is retail awareness.
That was my big
Yeah.
question, but there's one thing. I read this piece in Newsweek this week, on how retail people are struggling right now. They're struggling to make ends meet, which makes me think, do they have the discretionary income to jump back in to buy some Bitcoin? And also, is unit bias an issue? And once we start getting to these elevated Bitcoin prices, do people feel like buying a hundredth of a Bitcoin or a thousandth of a Bitcoin? Does that mean something to the average person?
I think it means a lot. I mean, you look at the results of using the stimulus checks from COVID and investing it in Bitcoin, and I think $1,000 of stimulus is worth something like $9,000 or $9,500 now. So I think it's meaningful. Definitely, there's not. There are limitations on discretionary income for a large portion of the population, but to the extent that you can create a refinancing cycle in real estate and help people lower their mortgage rates from what have been that sort of 6.5%, 5.5%,
historically very high
level,
yeah.
even down to 4.5% or 4%, let alone lower than that, that can produce some incremental cash flow that can be used for individuals to bolster their savings. And I think that as far as bolstering savings goes, Bitcoin is really a tool of choice.
Yeah, absolutely.
For a lot of folks.
And and there's also, I think we have about $8 trillion sitting in money market funds. So is some of that money waiting to come off the sidelines? And I just got word we do have to head back to the main stage in a second. But in your mind, is that money parked there because it's getting a decent return at 4%, or is that money waiting to come off the sidelines?
I think that in part it's that decent return, but as the Fed rates come down, that's going to shift.
They're going to need to move it elsewhere.
Yeah.
Okay. Well, ladies and gentlemen, you heard it here first. We haven't seen the top of the cycle. Don't hold them to that. We're just joking, just speculating over here on where we're at. But anyway, we're headed back over to the Falcon stage. We'll be right back over here at the Bitcoin Magazine news desk after this.
Thank you, Frank.
My pleasure.
I'll be framing the convergence of Bitcoin and traditional finance, how we operate in this space, and how we see the industry moving forward. So first and foremost, the state of play. We are witnessing the Bitcoinization of finance. We're applying traditional financial tools, products, and strategies to Bitcoin. And this is very exciting. Now, this leads to a Bitcoinized financial system where the asset, Bitcoin, actually settles and trades in kind. Now, this is a far cry from our existing monetary system that is predominantly paper-based, that obfuscates real market signals. And this is only possible due to Bitcoin's unique digital native properties. Now, hyper-Bitcoinization is only possible if the largest pools of capital in the world have the appropriate financial instruments to get dollars into Bitcoin. This is beautifully, simply, and succinctly represented in Jesse Meyer's graph of total global store of value assets. As Jess Booth says, if the money's not scarce, it will flow into scarce assets. Now, if we believe there will be more dollars in circulation in the future, which I think most Bitcoiners do, and if they don't, I hear Abu Dhabi has fantastic brain trauma doctors, so you're in the right place. But this graph does the best job at elaborating or predicting Bitcoin's future value proposition and how we get dollars into Bitcoin. It is up to us as entrepreneurs in the space to do so. And I'm obviously biased, but I think Bitcoin financial services is the most exciting industry to be in right now because we have this existing traditional financial playbook that we simply need to apply to Bitcoin. Now, we're in a unique moment in time that exists in Bitcoin's currency maturation cycle. We are between a store of value and medium of exchange. And at PAX, we're dubbing this a new emerging market, the fiat return on Bitcoin exposure market. Now, this only exists while there is both demand for dollars and Bitcoin. And it won't last forever. There is higher or greater return possibilities earlier in the currency maturation cycle than there will be later when everything is priced and denominated in Bitcoin. The question in this market dynamic really becomes, how synthetic is your Bitcoin exposure? Investors want the highest fiat-denominated return with the most direct exposure to Bitcoin. Investment issuers need to find that balance. Now, at Pax Partners, we're launching the Bitcoin Secured Yield Fund 1. This is a private credit fund investing in short-duration Bitcoin collateralized loans. We are a dollar liquidity provider for Bitcoin-backed loan servicers and originators. We have a compelling risk profile of 50% LTV. We have attractive and stable yields ranging from 8 to 10%. Senior ownership of loan interest and collateral. And we believe the private credit fund model is the best balance between strong yield with minimal exposure to synthetic Bitcoin. This really parlays into what we believe the industry is moving to, which is digital credit. This is Bitcoin as productive capital. So digital credit is simply what happens when Bitcoin, the base asset, gets lent in a controlled, transparent, and enforceable way. Debt is core infrastructure. Debt markets are the financial system's plumbing. They move capital, they price risk, and they scale economic activity. Hard money, modern credit, digital credit replicates these same market roles powered by Bitcoin. So we're going to see a more market-driven risk assessment of Bitcoin as it continues to mature in the financial ecosystem. Now, at Pax, we believe everyone is responsible for building their respective industries within the principles, values, and ethos of Bitcoin. With Bitcoin Secured Yield Fund, we are applying traditional financial products to Bitcoin to support the build-out of the digital credit industry. It was a pleasure speaking with you today. My name is Wyatt O'Rourke. I'll be at the conference all week. We'll love to chat. Thank you very much.
Fantastic. Thank you. Thank you so much, Wyatt. I believe that this is definitely one of the developments we have to follow and definitely look into in the future. We'll be back after a very short
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Korba, Bitcoin journalist, joined to my left by none other than, all the way on my left, Mr. Dennis Cook, Art Gallery Director and Bitcoin Art Enjoy Or, as well as the one and only Mr. Michael Smash Toshi, creator, one of the people behind this extraordinary piece of art sitting in front of us. Could you show the camera, if you don't mind, Michael, what you have in front of you there?
Absolutely. So this is a big coffee table book of the history of Bitcoin. Told through the medium of art.
You say this very modestly. This book is quite a work. Please give us a little more background than that, if you don't mind.
Cool. So this is 4.5 years in the works. There was over 300 people involved in this project. So basically, the way it worked is we kind of felt there was a need to teach people about the history in a fun and digestible way, and we think kind of art is the absolute perfect way of doing that, because I think sometimes Bitcoin can be a little bit scary to people. And if you go to lots of meetups and stuff, it can be very male. And I think we're all getting a bit older as well as these conferences go on. We all seem to be aging.
Middle-aged men. That's not intimidating.
And I think it's really important we get a bit more diverse and get younger people involved as well. Because Bitcoin could be intimidating. Why should I know what proof of work is and mining and all the rest of it, and the importance of the 21 million cap and all the rest of it. So this is our kind of Trojan horse to try and educate the wider kind of world about the history. And so we had 120 artists involved in the project. Each artist was owning a moment of Bitcoin's history. So somebody would own the white paper, somebody would own Pizza Day, somebody would own the first time Bitcoin was ever mentioned on a TV show, and really kind of their opportunity to kind of to pick that moment. So maybe I could kind of show the camera some
Please.
of the
Yeah.
some of the pieces.
Let's go.
So actually, the book kind of kicks off pre-Bitcoin, teaches people about the technologies that allow Bitcoin to ever happen. So I think lots of people think Bitcoin was almost this biblical thing that came out of nowhere, but of course for decades before, people were discussing, cryptography, and there were lots of inventions that came for Bitcoin to ever happen. So yeah, so this piece, for example, is kind of teaching about the Merkle tree, and then of course introduces the cypherpunks, the essay by Eric Hughes, making a manifesto. And then introduces the mailing list, and who knows, maybe one of these was Satoshi. And so early history of the technologies, but then kind of gets into the economic crash, and then the launch of the most famous white paper of them all. So within the book itself, there's about 40 different print techniques and different papers. And really wanted to kind of play a homage to kind of the early adopters, the people that kind of helped out Satoshi, from people like Marty Malmi.
Yeah.
So we interviewed over 100 people for this project. We didn't think that one person should own the history of Bitcoin, so we wanted to make it a collective, hence the reason why so many people were involved in the project. Come to this little guy here, which is basically gives you the all the history, so you can kind of look at the artwork and then consume the.
Appreciate it, Spencer. They did cut.
It's a drift slowly towards dependency. When I speak dependency, so we see people start depending on third parties, depending on ETF, depending on exchanges, and in custodian platforms. So let's explore together why this shift really important, if it exists, and also we'll look at what is our mission if we want to balance the ecosystem. So I would like to start with the first definition and principle of Bitcoin. So the first definition of Bitcoin is a peer-to-peer electronic cash system. And when we say a peer-to-peer, it means a peer knows how to self-custody, and a peer knows how to transfer Bitcoin. And Bitcoin is made as a revolution for all street. It's not made for only one street. And if we look at this revolution, it should allow everyone to participate, regardless where they are and regardless, about their knowledge. And what we see today is the corporate and government treasuries, after 14 years and 10 years from the day one of the Bitcoin, they start accumulating a lot and a lot more Bitcoins. And the Bitcoin grow 100x in value from 2008, 2006 till 4 or 5 years ago, where we didn't have a single Bitcoin sitting in any corporate treasury. Bitcoin already went 100x and 1000x. So the simple question, why you think that? Because people stood behind it, people they self-custody the Bitcoin, and people, they contribute to the network. And what we see today, that self-custody brings freedom. And we want the masses to stay ahead all the time. Because Bitcoin doesn't survive because of passive believers. If you are a passive believer and trader and you don't really contribute to the network, you are not supporting the ecosystem. If you self-custody and you embrace decentralization and you participate in mining layer, then you make Bitcoin survive because of active contribution. So here I will just show you, is this drifting real? And we use drifting because we are from mining race. So in 2025, since the beginning of the year, 5% of total Bitcoin holding moved from people hand to corporate's hand. So we had people holding 71% of Bitcoin. When I say people, I say retail. And non-retail, at end of this year, we are ending at 66%. So why this shift is happening, the 5%? The truth is that corporates and treasuries, they bring strength to Bitcoin. But people make Bitcoin unbreakable. And during this year, we have only 1% if total supply mined. So if someone tells me that this shift happened because of miners? No, not because of miners, because only 1% mined during this year. So it's 4 to 5% of Bitcoiners sold their Bitcoin during this year to corporate, or they give it to self-custody organization. And that's here the momentum. Because if you see on the left side, the institution, we all know public companies, self-mining companies, ETF issuer, government holding, they gain the momentum. Why they gain the momentum? Because they understood the potential of Bitcoin, and the retail, they still understand the potential, but the push to the left side, it's 5% within 1 year. Why I think this is alarming and need rebalancing now? Because if we continue at 5% drift per year, we'll end up having 50% of total Bitcoin distribution circulated in only institution. So is it good or bad? Yes, good, but the perfect future where we keep the balance. So we work in the retail people to self-custody and know how to manage their Bitcoin and to contribute to the mining layer. And on the left side, also we have the corporates push and brings the fast momentum, because if all accumulation happen in corporate side, Bitcoin will be systematic. If all holding happen only on retail side, Bitcoin will remain pure, but will grow slowly. So the perfect future that both work together. And it's very obvious, do you want a solution? One side growing slower than the other side, we need to support retails by really educating them and bringing back, the adoption or speeding the adoption of retail. How this comes? By tools which gives people a self-custody in a simple way. But also, most important, we want to allow these people to participate in mining, to participate as contributor to the Bitcoin in a simple way. And that will unlock them, because they don't become only passive believers, they become an active contributors. And they don't become only traders, because then they depend on Bitcoin price, but they make Bitcoin stronger because of its people. So here come also the believer session. So if Bitcoin started as peer-to-peer electronic cash system, the knowledge is not exception. So the knowledge should spread from person to person. Otherwise, you cannot put 1 million or 2 million in conference halls and try to tell them the truth. So we need to educate people, to educate others, and multiply that knowledge across. And this is what we focus on. And also what we also thought of mining as mining race, we added a peer-to-peer distribution incentive system as reward for people who really take this knowledge and multiply it to others through also a decentralized peer-to-peer distribution system. So after we did that for 1 year, I would like to share with you some figures. So we have been able to create above 100,000 non-custodial Bitcoin accounts in 1 year, and we are one of the few retailers in the world that we can measure our contribution to the Bitcoin network. The second one, what we mined around 2,000 Bitcoin in 1 year. The fact, I don't like this figure because of the number, but I like that 2,000 Bitcoin have been distributed to more than 50,000 people. So this is the fact. So we don't accumulate, but we circulate. And accumulation is good, but distribution and circulation, what is missing in the ecosystem for retailers. So we aggregated 1.5%. Today we aggregate 1.5% of global Bitcoin mining. And we contributed more than 10,000 L1 transactions. And we generate also through the online transactions more and more rewards to encourage the miners. Let me ask you one question. If we see 1 billion goes in and out as investment in ETFs, what the miners gains? If the trade and the people, they don't self-custody and we don't see the transaction in L1 layer, it is good to get institution in. But it's not good because there is no contribution as fees to the people. The last one is my favorite. Through past 12 months, we've been able to reach 10,000 direct peer-to-peer education from mining grade to the people, and that multiplier comes by 5 And our goal this year to reach 50,000 people. That multiplier will come to 250,000. Then we'll see the retail side really go faster. Yeah. So what I see here, what we look ahead, I call this people mining era. Why we call this decade people mining era is for simple. Half of remaining Bitcoin issuance will be issued in the next 5 years. And what that means if someone participates after, and if we accumulate and concentrate the mining to huge self-mining companies only, we will end up another 3-4% of holding also goes to institution side. So our aim that we want to onboard millions of people, not as passive believer, because passive believer, they will never protect Bitcoin network. Active contributor, even with a small portion of mining power, they contribute to the network, then they can bring higher impact to the community. So the question is, the fact is that millions will be joining that during this era. The fact, will we get them as short-term traders, Bitcoin traders, or are we getting them as active contributor to the network? You know, the last message from my side, we have all together to build an ecosystem where institutions provide strength. It is good, not bad. But people provide resilience. And people comes only with adoption from retail. And our mission to make mining accessible and participation in universal, I would like to say that this all born from UAE to the world. Thank you, everyone. Thank you.
Thank you so much, Rami. I believe that for everyone who is here in our amazing next.
Magazine News Desk, powered by Crypto.com. I'm Frank Corbett, Bitcoin journalist, joined by two Bitcoin art legends here. To my left, Mr. Smash Toshi and Mr. Dennis Cook. Dennis, I wanted to get over to you. We got cut off a little bit in that last segment, but as we had Mr. Michael Smash Toshi here showing us the book, I was wondering what kind of feelings you were having.
Well, I mean, it's tremendously gratifying to see this project. It involves over 120 artists. 4 years of labor went into this. Big artists making artwork in the Bitcoin space don't really have the recognition from like larger traditional art world. So this is like a prize piece that will be memorialized for a lot of these artists. So very exciting.
Yeah, definitely very exciting stuff. Speaking of piece, I know there are pieces. This is not the only book, but there is one particular edition that's up for auction. Did you want to share a little bit about that?
Yes, that's right. So the first edition is in this 5,000-old fossilized oak case. The same book is in, but also in the middle of it is a centerpiece by Asprey Studio, which was known as the Queen's Jeweler when she was around, and that is going to go it's in at Scarce City at the moment, up for auction, and the proceeds, so 79% of the proceeds are going to go to My First Bitcoin charity, and the other remaining 21% is being divided by all the 120 artists involved in the project. So yeah, we like to think a donation for the first edition is going to for the history is going to help kind of support the next generation of Bitcoiners.
Okay, Mike, you seem very calm, composed, but when I look at this, all I think about is the amount of effort that had to go into it. Where did you find the time is my question. And also another quick thing, you talked about the fossilized oak. This right here, this leather that I'm feeling is actually bull leather. I was just made aware of this. Is that real? Is that right?
That's right, yeah. And bull leather is a hard one because bulls like to fight each other. And they like to rub up against barbed wire a lot as well. So it's very hard to find ones that don't have any damage to them.
Wow!
So it's a very rare way of encasing basing a book. But we just couldn't resist. If you're going to have to choose your animal of leather, it has to be bull for Bitcoin.
We appreciate that. As a final thing, we are about to head back to the main stage. But as I was saying, what was it like? I mean, this is obviously a labor of love, right?
Yeah.
I mean, what was the impetus? A little bit of the process. A quick overview, if you don't mind.
Yeah. So idea started during lockdown over a couple of tequilas. Started off as a small idea and then kind of evolved. It was kind of four of us started it. And yeah, luckily we didn't have time as a constraint. We wanted it to be ready when it's ready. And you know, we had 120 artists involved in this project as well, so hence the reason it took so long. All these artworks have completely been done for the project, never seen before, and it was really great just bringing so many different artists together, and I think that's what the artists enjoyed. Being an artist is quite a lonely experience sometimes.
Good
so
to
be able to collaborate, and also doing a project that's going to stand the test of time. Sometimes you do a project.
I appreciate it. Could you hold that thought if you don't mind? We are going to come back to talk more about this book, but we do have to head back to the main stage. So we're headed over to the Falcon stage. We'll be right back here to talk more about the history of Bitcoin book after this.
Piece for Bitcoin magazine called The Three Generations Theory. And in there I made the case that Bitcoin is not just like some blockchain technology, and projecting technological adoption curves into Bitcoin just misses the entire point altogether. Bitcoin is something so much bigger, something more fundamental, and the concept of hyper-Bitcoinization, the idea that Bitcoin is going to take over the world, is going to take a lot longer than what most people imagine in their minds today, which is both good and bad, and we'll talk a little bit about that today. So the reason that Bitcoin is going to take, or hyper-Bitcoinization going to take a long time, is that Bitcoin is not just a technology, it is a techno-socioeconomic phenomenon. And what that means is, that's a fancy way of saying, it's not a product, it's not a social network, it's not a stock, it's not a security, it's not an iPhone. Bitcoin is a paradigm shift of the most fundamental building block in human civilization, and that is money. Money underlies everything. It underlies the very fabric of human society. And in fact, there can be no civilization without a means of storing, measuring, and exchanging some form of value through some form of objective medium, right? And that is what Bitcoin represents. So therefore, by reinventing money, which is effectively what Bitcoin is, it impacts every level of society. And that's a big deal. And it's a process that's not going to happen in years. It's a process that is going to take decades and even generations to occur, which is why the theory is the three generations theory. So some of you have probably seen this chart. It's by a friend of mine called Murad Mahmudov, and he put it together after he and I were working on some essays a number of years ago, and I drew this thing called the Bitcoin evolutionary pyramid. And he then produced this chart, which is fantastic, and in my opinion still today represents one of the best evolutionary charts of Bitcoin's progression. And you'll notice that he didn't put a time on the x-axis, which was very smart, because there's a classic saying, you can predict what but not when, or when but not what, but you can never do both. And I'm actually going to try and do both in this talk. I'm going to try and lay out exactly how long this process of hyper-Bitcoinization is going to take, and what will happen along the way in terms of businesses, industries, and opportunities. So according to this theory, this magical theory, we will reach mass adoption sometime in 2070, so about 60 years after Bitcoin's inception. That means today we're only 16 years in, which, believe it or not, means that we're at the very bottom of the S-curve. Things haven't even begun to get crazy yet. The three generations theory is, of course, about these three phases of evolution. And I'm going to go through them in detail in this talk, but just as a quick overview. Generation 1 is the speculative era, or what I like to call the infection stage. In this era, Bitcoin slowly infects key mines, key infrastructure, and it acts a bit like a virus, because it's something that is foreign and something that is minor, right? It is different to what exists today. As it comes into contact with other hosts, like all good ideas, it begins to spread. And we've seen that with Bitcoin from its modest beginnings. We've seen it grow exponentially. 15 years ago, 10,000 Bitcoin bought you a pizza. Today, you've got countries, BlackRock, you've got these conferences going on. It's changed. Generation 2, infrastructure stage, or what I call the symbiosis, if we're using the viral analogy. Kids who were born in 2009 and who have never known a world without Bitcoin, they're going to come of age by 2030. They will be taking their first steps into entrepreneurship, and in the same way as kids today, they use the tools around them to build stuff, they're going to do the same thing. They're going to embed global, instant, secure financial capabilities into every sort of product and service they build, in the same way as we do with the internet today. Then generation 3 is the inversion stage. So by 2050, the children of our children will have come of age. And they'll be so far removed from the first generation of the speculative era. And so much of the infrastructure will have occurred by then that they're just going to do entirely new things with it. They're the ones who will take Bitcoin the last mile to quote-unquote mass adoption. And they will transform it into the global monetary standard and embed it into everything beyond just money, into energy, into transportation, into governance, into all of it. And by this stage, society will have fundamentally transformed. Now, unfortunately, most of us here are probably going to be dead by then. We likely will not see it. There's this great saying, which is, our generation has bestowed upon us both the gift of being the founding fathers of a new world and the curse of enduring the collapse for this privilege. I always try to explain to people that Bitcoin is not really for us. Bitcoin is for our children and our children's children. And I do believe this deeply. I hope to be alive for the third generation because I want to see how all of this evolves. But like the builders of the cathedrals and the great nations we live in today, we may not live to see the end of our project, but we get to be the ones who plant the seed that will shape what the future generations will do with the world. So, since this process is so long, the practical side of me wants to know, what the hell do we do now? How do we capitalize on this process? And what are the next big opportunities, and how can we, you, all of us here, position ourselves to capitalize on those? So to do that, let's jump into each of the generations one by one. So generation 1, as I said, the speculative era or the infection stage. This generation was born with 1 foot in the old world and 1 foot in the new world. And we can't, like, we are all here generation 1 Bitcoiners, and we can't help but compare the new world, Bitcoin, with the old world, the fiat world. Much like how the older generations still compare gold to fiat money. And this applies to all of us because Bitcoin is so young. Bitcoin's only 15 years old or 16 years old. So as a result, any one of us who has the capital or the skills today to do anything with Bitcoin is fundamentally someone who had 1 foot in the old and 1 foot in the new. So if you think about like this generational conceptual relationship to Bitcoin, it's one of comparison. And if you understand that, then what kind of businesses, industries, and ideas might come from this sort of generational wide psychological viewpoint? Well, let's think about it. How to acquire, how to dispose of, how to exchange it, how to store it, how to produce it, and how to get as much as possible. So in other words, miners, wallets, exchanges being the big one, and now in the late stage of this initial cycle, of this initial era, is the strategy plays or the treasury plays, trying to acquire as much Bitcoin as possible. And the interesting thing about this era is it's not only the most financialized one, but it's the one where Bitcoin enters as a new idea, which is where the viral analogy comes in, right? Good ideas are like viruses, and they spread and they infect not just the one branch. So Bitcoin infected the financial system, but it also infected literature, it infected philosophy, it infected entertainment, government, energy, and it's really starting to spread in this first stage, which is hence why I call it the infection stage. And this accelerates until we reach the next stage of evolution, which is the infrastructure stage, or the viral analogy is symbiosis, right? So the virus becomes part of the system. So in this era, it will be shaped by two profiles who each have their own conceptual, psychological relationship to Bitcoin. First, you'll have the entrepreneurs in their 30s, 40s, 50s, those who are around during generation 1. And they've thus integrated into their worldview and to their toolkits, right? So they have the capital, they have the experience, and they understand Bitcoin, so they use it. The second is the younger generations, the up-and-coming leaders who they were born in 2009, 2010. They will come of age. They'll be 20 years old by 2030. And for them, like, they won't know a world without it. They'll look at Bitcoin as a tool, very similar to how we today look at JavaScript or the internet or language models, right? It's native to us. It'll be native to them. And this era of comparison will slowly lose its influence and fade away. And the way Bitcoin is perceived will fundamentally change. It will be appreciated for the problems that it solves and for the capacity of the tool that it is. And anyone at that stage who's ignoring Bitcoin or deriding it is just going to be left behind, right? They will not have access to an ever-increasingly global market that is on 24/7. And that's why I call it the symbiosis era. The virus will have gone beyond the point of infection, and it is now a part of the system. You will find Bitcoin in everything, everywhere. No longer for, this is really important, no longer for purely ideological or speculative reasons, but because it is a better tool to embed into your product stack. So kind of similar to how today the internet is embedded in everything, right? And we're talking here now 40 years later, and funny enough, we are 40 years into the internet revolution as well. Generation 3, the mass adoption stage. So this is the final evolutionary era. To continue the viral analogy, this is where the symbiote finally becomes the system. This is the inversion, where the entire system is reconstituted and the old is replaced with the new. And with Bitcoin having become a global utility like the internet by this stage, we're going to see the rise of totally new businesses, industries, concepts, and all the sorts of things that we can barely imagine today. And it reminds me of this meme, right? Like, I don't know if you remember, but the internet was originally all on copper lines, right? The internet ran on top of the telephone system. But now fast forward 20, 30, 40 years, phones and all of the communications runs on top of the internet. So you had this inversion of the system. And the same thing is going to happen with Bitcoin. It's going to unlock entirely new markets, entirely new ideas. But it's going to take time to get there. Trouble is, obviously, we may not be alive for this. So the question now is for us, what can we do? What is actionable for the people sitting in this room? Because Generation 3 is too far away. Well, in my opinion, we need to start thinking about what are the industries or what are the products and services that are going to be reinvented that we can build Bitcoin into. So a quick case study here is this concept of what I call the experience economy. As things move, we're going to see some industries die, some be born, some transform. The experience economy, in my opinion, is one of these new phenomenons emerging where people, like, not only do we have this whiplash from COVID where everyone was locked in their houses and all this sort of stuff, people want to get together again, but also the internet is changing. It's full of online slop, everything is content, everything is media, everything is ads. People want to catch up in person again. So you're seeing this rising sort of movement towards people doing things and stuff. And this is a trend that's not going to stop. This is a concept that will continue to evolve as the internet gets drowned out by AI. So if you combine these things, this is an example of what we're building. We're trying to capitalize on this concept by building a product that takes Bitcoin and embeds it into the native functionality of the product. So if anyone here is familiar with products like Luma or Eventbrite or things like that, we're building an events app that is Bitcoin native, that you can spin up an event and you can do ticketing, you can do community, you can do all of that sort of stuff, and you can do it natively from anywhere in the world and not be bound by fiat rails or KYC or any of that sort of stuff. You spin up an event, you get paid, you run an event, and you can build a community or a creator or an event instantly. I don't have time to give like the whole pitch. I could go on and on, so I'm going to just jump straight to the end. And if anyone wants to talk to me about the product and everything, we can discuss that later. But basically, the point is this. Bitcoin's going to take another 40 to 50 years to fully mature. For the last 15 years, all the fortune has been made already with exchanges, wallets, miners, and more recently, treasury strategies. And I would say there's probably another couple of years for that stuff to happen. What I'm interested in, what I suggest you all get interested in, is what is next? What comes after this era? And for me, that answer lies in what are the industries that are going to be transformed or created in this next era, in and around Bitcoin, that Bitcoin will become a part of. So I showed you the experience economy as one example. There's going to be many other examples. In my opinion, all sorts of industries, products, and services are going to get reinvented. So the question for you, and I'll leave you here, is what are you building? What are you buying? What are you investing in? Where will you find the next Coinbase, the next Binance, the next Ledger, the next Bitmain, or the next MicroStrategy? Thank you for your time.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here midday at Bitcoin MENA 2025. I'm joined to my left by Serge of the Bitcoin Art Society, as well as the two gentlemen I've had on with me, Mr. Michael Saylor and Dennis. But I want to focus on you for this segment, Serge. What are you doing with the Bitcoin Art Society? And also, you've been doing a lot of traveling to promote some of the work you're doing. So if you could get into that a little bit, we would greatly appreciate it.
Correct. Thank you so much for having me.
My pleasure.
First of all, Dennis, thanks. Michael, the energy is ecstatic here, guys. Yeah, I love it. I'm loving the vibes. What are we doing with the Bitcoin Art Society? What we're doing is we're bringing digital provenance to Bitcoin. For the longest time, we've adopted Bitcoin as a financial standard. We've adopted Bitcoin as a technical standard. And for the first time, we're bringing the cultural standard of Bitcoin out, and we're adding a financial layer to it. And we've built the first institutional-grade foundation for fine art Bitcoin, for fine art assets on Bitcoin.
And with that, so are you doing, in these travels that you're doing, Dennis was telling me a little bit off camera, are you recruiting artists? Are you spreading the good word? What does that look like? Because I know you've been quite active. You've been moving around quite a bit.
We're definitely Bible thumping the good word, that's for sure.
Are the Bibles that big? Or are you carrying? Yeah.
The Bible is that big, yes. It's gonna get even bigger.
Okay.
For sure.
All right.
And that's what we're trying to do. We're trying to bring full attention to art on Bitcoin.
Okay.
And this is the kind of art that can only be done on Bitcoin.
Okay. Why, if you don't mind?
Well,
yeah.
The main ethos of Bitcoin Art Society is to really bring Bitcoin adoption at the end of the day, right?
Okay.
So there's a lot of people that, like I said, they adopted it as a financial standard, as a tech standard. But a lot of people don't understand hash time, hash rates, and block times. But they do understand culture. They do understand art. Art has been the longest living form of human expression. So what we're trying to do with Bitcoin Art Society is we're trying to preserve and continue the human story on Bitcoin.
Love that.
And why Bitcoin? Why is it so important to have this on Bitcoin and not any other chain? Because A, it's the fastest growing asset class in human history, and B, it's the most secure peer-to-peer blockchain in the world. So it only makes sense to have fine art inscribed or engraved on Bitcoin.
Yeah, so an immutable ledger, right? So
correct.
Nobody can change it. So I think that art and history are sort of inextricably linked, right?
Absolutely.
So we have this first time in history now where we have this mechanism where we can preserve it, where history can't be rewritten by the victor, right? So is this like, are you thinking this philosophically about it? Or does it just seem like this incredible moment to say like, please, a little bit of the thought process.
It's an emotional question, and I'll tell you why. Because the raison d'être the reason of being in French, of Bitcoin Art Society was I was born and raised in Beirut, Lebanon. Millions of people lost their wealth overnight with the hyperinflation. And Lebanon is but a microcosm of what's happening on a macro level, yes?
At varying rates, right, across the world.
The political elite conspired with the banking elite, and they rug pulled. Literally, like you rug pulled, like the tokens are rug pulled. They rug pulled the entire economy, and people lost. Depositors lost $300 billion of their money. Poof, gone into thin air. Now that's A. That's why I got into Bitcoin to start with, and then B. My co-founder had a beautiful art gallery, and my CMO has also had art in LA. Her art gallery was obliterated alongside significant value of art in the Beirut explosion. If you guys remember the port explosion,
for sure. Yeah.
So that was gone. I had friends in LA whose art was lost in the LA fires. So we brought that, and we brought this, and we thought, look, this only makes sense.
Perfect, right.
And the only thing that's missing is the attention to it, and people literally don't know about this yet.
Is it that they don't know? Is there a reluctance? Well, you know, there's obviously the monetary maximalists who don't want to see any of this on Bitcoin. Is that part of it, or is it just a lack of awareness?
Look, Bitcoin, I get the maxis, I get everybody's stance, I respect everybody, but you cannot stop the evolution of Bitcoin. Eventually, Bitcoin is going to be so big, just like gold. You can buy $1 billion of gold from the central bank, keep it in the house. You can buy jewelry. You can do so much with gold, right? So that's what Bitcoin is transforming into. It's becoming an asset class similar to gold.
We appreciate that. Serge, I did just get word that we do need to cut back to the main stage, but I wanted to say it was a pleasure having you on, sir. Please keep up the good work. We're headed back over to the Falcon stage, ladies and gentlemen. Stick with us. We have a special guest host coming up. Danny Knowles of What Bitcoin Did will be filling in for me for a little bit right after this. We'll be right back after this.
Started off as a life sciences diagnostics testing company, and now we are the world's fastest growing supplement brand that's powering our Bitcoin treasury strategy. Yeah? Just a quick overview in terms of where we're at, in terms of company-wise. So you guys probably know my very famous co-founder, David Beckham. He's the co-founder of IM8. So what we do is we actually have a supplement brand listed on the NASDAQ. Current revenues this year are approximately $90 to $100 million USD. We currently have 70 plus million in cash. We have approximately 500 Bitcoin. We have zero debt. Yeah? We've also projected next year we'll do roughly about $180 to $200 million in revenue. We have a significant asset in terms of the company-wise with about $120 million in cash and Bitcoin. Our value of IM8, we approximately about $300 to $400 million. So if we look at our total asset value, is roughly about $500 million, right? And again, why am I here today? Because we're a consumer supplements company, yeah? But so we started a Bitcoin treasury in June of this year, right? Did we have to do this? Not by any means, yeah? Because again, we actually have a very strong operating business that's generating cash flows. But the reason we started the Bitcoin treasury program is that we felt we had excess cash. The business is growing insanely fast. And what do we do with our cash? Yeah? So I had a choice of putting into, let's say, JP Morgan fixed deposits of 3.34%, or do I put it into Bitcoin? So we've been buying Bitcoin basically since June, and now we actually buy one Bitcoin every single day, regardless of the price. Yeah, so we start off with $20 million in June, but every day afterwards, we started buying one Bitcoin. So it doesn't matter if it's 120,000, 80,000, 90,000, we buy one Bitcoin daily. And again, just give you an overview in terms of what Prenetics is. We have multiple business units, ranging from the life diagnostic side. But given the growth of IM8, we've already publicly mentioned that we're divesting all of our other assets to fully focus on IM8. That's going to be powering our treasury strategy, right? What is IM8? As mentioned, I started this brand with David Beckham about, actually, it's crazy to think, we only started this 12 months ago in December, and we've been able to grow it very, very fast. It's a supplement brand that replaces 16 different supplements in one powder that you mix with water. We've also been able to bring along a very strong scientific advisory board, which separates us from the rest. We brought along the likes of Dr. Don from Mayo Clinic, James Green, the former chief scientist of NASA, some amazing scientists and professors actually formulate our product. We've probably been covered by every single media around the world since we've launched, just given the high-profile nature of David. Right? This gives you an idea in terms of how fast we've been able to grow since the last 12 months, right? So if you compare our revenue to even some AI companies, we've been able to surpass them in terms of growth. Certainly, if you look at other supplement brands, it's normal supplement brands, even if you're very good, it'll take you roughly about 3 years to reach 100 million in ARR, annual recurring revenue, and we were able to do this in 11 months. This gives you guys an idea in terms of just how crazy the trajectory has been. We launched last December. Our first month's revenue was 600,000 USD. Last month, we hit 10 million monthly revenues. Yeah, so the trajectory has been truly crazy. Again, I've been an investor, entrepreneur. I've never seen something like this in terms of this type of growth. Again, the market that we're playing in, I mean, it's a truly big opportunity here because given the supplements industry is roughly about $700 billion global opportunity. We hit 120 million ARR in basically 12 months. Yeah? I think the key metric here, when we think about this, is actually our payback period, which is it takes roughly 3.9 months for us to recoup our customer acquisition costs. Yeah? So if you look at the comparisons, Hims and Hers is a $10 billion company. Their payback period is 12 months, but we're able to do this in 3.9 months. So this gives me a significant confidence that we can continue to scale this business. Again, what is this product? It's 16 different supplements that you take basically in one drink. When me and David came up with this idea, even David and Victoria, they wanted a new solution because they were tired of taking 12, 13 supplements on a daily basis, which is quite annoying, especially if you're having to travel. Yeah, so we created something we truly believe is the best in the market today. We ship to 31 different countries, so our business is truly global as well, and that's why we've also been able to grow so fast. Right? So you can see how we've been able to create community events around the world. You see, we've also recently added Aryna Sabalenka, the world #1 tennis player, as our global ambassador. And she also, interestingly, participated in our recent fundraising, which we did a private round for, right? We've also been, if you guys are on Instagram or Google or Facebook-wise, we've pretty much been all over the internet. We have one video that we created with AI. We just launched right before the US Open. I shared that at the end, which we generated 233 million views in basically 6 weeks' time. So absolutely took over the internet with that video. We put it on Times Square as well. In terms of the product, we've kept it very, very simple. In fact, we've only had the product on the left side basically since launch of last December, right? So it's a Daily Ultimate Essentials product. It tastes amazing. Again, the idea here is that you get all of your multivitamins, your CoQ10, heart health, MSM, probiotics in one powder solution that's easy and tasting great. We launched a longevity product in October, basically, which is actually a key compounds to slow down the aging process. Yeah, so we kept it very simple, 2 SKUs. We're not going to be one of those brands that basically have 15, 20 SKUs. I think this is interesting in terms of, why am I here? Again, because we actually have incorporated a Bitcoin treasury strategy. We're not going to be buying any other coins except for Bitcoin. So again, we mentioned that we've started buying 1 BTC every single day, and we're going to continue to do that. This gives you an idea in terms of our current Bitcoin holdings. This is up on our website. We have right now about 505 Bitcoin. We're trading on the Nasdaq. Where, share price is about $14. Our market cap is roughly about $250 million. Yeah, but again, we're stacking 1 BTC, and we believe this is the best way for us to hedge against inflation, as well as provide significant shareholder value. This gives you an idea in terms of our current net asset value. I think, again, there's a lot of talk about digital asset treasury companies, of course, in the last few months. I think we're one of the very few companies that actually have a strong, true asset, because given our customers, given our operating business is generating $100 million in revenue this year. Next year, again, we're looking to generate roughly about 180 to 200 million in revenue. This gives you a comparison how we compare against other companies in this space. Of course, Hims and Hers is a market leader, Oddity, Niagen, AG1, Athletic Greens, but none of these companies have been able to deliver the growth that we've been able to do, which again is 100 million in less than 12 months, what we've been able to generate since we launched. Right? This gives you an idea how we're thinking about the future growth of IM8, given our trajectories next year as well as into 2027. Given how global our business is today, we believe that there's significant upside. this gives you an idea in terms of our strategic advantages, and of course we have a very famous co-founder. We have a great product, great science, great brand. Again, we will continue to accumulate Bitcoin with our excess cash. Again, this is my team here. We also been able to bring along very strategic advisors, which are in the crypto and Bitcoin space. Andy Cheung, he was a former COO of OKX. Tracy, she's here. She was a lady that famously, orange pilled Donald Trump. Raphael is the founder of Token 2049. So I think together with this group of advisors, we've been really able to create a very strong Bitcoin treasury strategy. I'll end it with our video that this is a video that we played right before the US Open for Arena Sabalenka earlier this year. And then so this video generated 233 million views on Instagram. And as if you guys know Instagram, you can't fake the numbers, right? So this one really took over on Instagram. This video was completely done with AI. Took us 3 weeks, 25 grand, but just to help you guys understand how we're utilizing AI, we're pushing out 1,000 new ads every single week on Instagram. And then every single week, only 10% work, but we multiply that by a factor of 10.
What are you willing to do to be the best? What if it all came down to a simple choice? Red or green? Red, you can feel it. Feel energized. Perform at your best. Developed by world-leading scientists, including NASA, to help you live with more vitality, energy, and longevity. Sure, you could choose green, but just because it's green doesn't mean it's good for you. This is your chance for peak performance, whatever the task.
The best choose the best.
Yeah. So that was completely created with AI. It took us 3 weeks, so it was quite amazing. And then, the algorithms just picked up on it. Yeah, so for everyone, follow along our journey. We're listed on the NASDAQ under PRE and IMA. Thank you so much.
Thank you. Thank you.
Something bold is coming. Introducing the Bitcoin Whiskey Collection, made in collaboration with Bitcoin Magazine. A collection of 2 premium whiskeys made for those who never sell short. The luxurious Bitcoin Reserve with a custom minted Bitcoin coin. And the ultra rare Satoshi Reserve with only 999 ever being produced. Get yours before they're gone. Now accepting Bitcoin payments at goldbarwhiskey.com.
News desk. This is the What Bitcoin Did hostile takeover. We've lost Frank Korver. I think he's probably going to start a treasury company. That's what everyone does now, right, Sam?
That's right. That's right.
So we've got Eric Yakes, Sam Callahan, and Eric Hersman here. Eric, I think we should start with you. After the trip we've had recently, we went out to Africa. We saw the stuff that Gridless is building. Tell everyone about that trip.
Well, I mean, I don't know if people really understand how far off grid you can get, but you guys got to see it. Eric, what was your take on it?
Well, we got so far off grid that we were slaughtering goats far off grid.
That's pretty far off grid.
That's far off grid. Yeah. So we were pretty deep in the game, and it was electric that Bitcoin has found a presence in these parts of the world.
Yeah, it's different where we are, right? Like the Bitcoin mining, where we see it everywhere else, is about like how do you make more money. Where we're doing, it's like, yeah, let's make money, but how do we bring energy infrastructure to places that don't have it?
Yeah. So maybe you should explain how that works, because you're bringing energy infrastructure to the most rural parts of Africa.
Yeah, I mean, so we show up in these communities that have no electricity. We bring in either run-of-river hydro, solar, geothermal, whatever it is. And when you have a new community like that, they don't use all the power. They might use 10, 20 kilowatts at first with 5,000 people. but over time they'll use more energy. So we come in and we just create this like economic shock absorber, which is Bitcoin mining, to take up the rest of that stranded power, and it works like magic.
So, wait, so is there rural, remote areas? Does the community get to share in the revenues of the Bitcoin that's mined?
Not in our world. What they do is they earn, they get cheapest energy they can in the country.
So they get the energy.
Yeah, basically, like if Bitcoin earns about 8 to 10 cents per kilowatt hour, and I can charge 1 more cent to them at 11 cents, they can take it all day long. That's half the price of the normal cost of energy in the country.
And Sam, this is the crazy thing. So where we were in a place called Saru, there's a town close to there called Jacana, and they're paying 75 cents a kilowatt hour for energy in this town, and they have nothing. Like, it's in the middle of nowhere in Kenya. And so, like, if they can get access to power at 12 cents, it's like an absolute game changer.
Yeah, because like normally if you're consuming energy on grid, then you can always sell energy you're not using back to the grid. And Bitcoin mining in these parts of the world is just energy that you could, sell into Bitcoin effectively by mining it.
So how do you find like where to do this?
There's 600 million Africans who don't have any power. That's half the population of the continent. There's just so many thousands of communities that need this. Wow. So we drive out, we find them, and we talk to the elders and say, hey, do you guys want power or not?
And the answer is always yes.
Nobody says no to power when they don't have it.
People love the power, but the real question is how do we turn this into a treasury company?
The Saru Treasury Company.
I don't think there's one in Africa.
This is true.
It's jurisdictional.
There you go. There you go.
Go on, Sam. Give us your treasury company shill.
Yeah. I mean, I think it's already been said before. I think Bitcoin treasury companies just improve access to Bitcoin. You get these large pools of capital that currently can't buy spot Bitcoin. They're really big. It's just the way the capital markets develop. They're all siloed. We're talking trillions and trillions of dollars that can't buy spot Bitcoin, but they can buy Bitcoin-backed securities. So, in my opinion, what's better, like a pension fund or an insurance company that can't buy spot Bitcoin? What's better? No Bitcoin exposure or Bitcoin exposure. It's as simple as that.
It's Bitcoin treasury companies buy Bitcoin. Like, that's good. That's good for Bitcoin.
I mean, Bitcoin treasury companies almost bought more Bitcoin than every other cohort. The ETFs bought a little bit more last year than Bitcoin treasury companies. So it's added incremental demand for every single Bitcoin holder out there. So
that's based.
The question I would have on that is, like, how long is that demand there for? Because treasury companies are now trading generally like close to 1x or even at a discount to MNAV now.
Yeah.
Do you think we're going to see them sell Bitcoin at some point in the next few years?
I think it depends on market conditions. They certainly can. I mean, when you have a Bitcoin treasury, you have a large, resilient balance sheet. I mean, if you come under stress, I mean, what's the point of having a resilient balance sheet if you don't liquidate it to continue your operations? Now, I think that's like a last resort nuclear option. I think any Bitcoiner feels sick to their stomach if they have to sell Bitcoin. It's not a good feeling. And there's a ton of different options and alternatives we can take before we do anything like that. And so it's an option, just like Michael Saylor recently said. I mean, he has a USD cash reserves. He can sell Bitcoin derivatives. Nuclear option, he could sell the Bitcoin. It's just the nature of being a Bitcoin treasury company.
Is there a Bitcoin treasury company that would rather go insolvent than sell Bitcoin?
I mean,
donate the Bitcoin back to the community.
Well, you don't even have to donate. I mean, there's certain jurisdictions where, like, maybe if you don't want to sell the Bitcoin, you could maybe dissolve the company and give back the Bitcoin to the shareholders in kind. It would be an operational nightmare, but you would see the MNAV go straight back up to 1 if you called the shareholder vote, and that was the option. The business didn't work out. You ran into some headwinds, and you basically give the Bitcoin back in kind to shareholders, and that's an option.
Is there a world where the treasury companies start acquiring companies that earn in Bitcoin?
Yeah. I mean, to get like sats flow, basically.
Yeah. I'm going to have to cut you off there. We can come back to that question. We're going back to the main programming.
Narrative has already laid the groundwork, and it allows you to really make these connections.
Yeah, well, definitely. I think if we see U.S. is a sort of a center of global crypto, UAE is definitely one of the most important crypto corridor in a sense, especially at the international center outside of U.S. And when I moved here along with my ex-boss, CZ, 4 years ago, by then I was a global head of M&A for Binance. And we want to find a place, where it's very friendly to crypto community, but also, with a sophisticated regulation. So that's, part of the reason 4 years ago, I moved here along with CZ. And, I think today we saw Binance has a great news that, they're going to be licensed in Abu Dhabi, especially, for the global Bitcoin Binance.com. This is, very epic because it's not Binance regional, but it's a Binance.com. And the second story I want to share is, by 2022, when I left Binance and want to, join my own venture initiative, me and along with two of my partners, we set up the first ever UAE sovereign Bitcoin miner in Abu Dhabi, in the downtown on the opposite of the Rosewood Hotel. And if you check, UAE globally, how many Bitcoin UAE sovereign own today is around, 7,000, and that is, under our group's custody with honor. So I want to say, basically 2021, the UAE government accept the Binance team, and also help Binance to be regulated. And by 2022, they set up the first sovereign Bitcoin miner. And today, they began to regulate the Binance globally here. So I think, this is, sort of the degree, the UAE, they can be a very perfect balance between nimble and, startup friendly as possible, but also without sacrifice the sophistication as a regulator.
Yeah, well, the very predictable regulatory environment has been a big help in this area. And, in many ways, America sort of embraced Bitcoin and then did the regulation after, versus here where they really did get the regulation right and allow things to come through an attractive sort of force after, correct?
Yeah, predictable is very important.
Yeah, yeah. Now, Alexandre, you can see in a lot of sense that there is a certain regionality, let's say, to this institutional narrative, and you're just like Bill, you made the move down to this part of the world, you left Europe, came down here, obviously found what we've just heard from Omar, this really vibrant narrative that's going on, but back where you came from in Europe, where is the narrative over there? I know they're getting the regulations, but everyone's kind of like, who cares? What's going on over in Europe? Are they really seeing it the same way as America and UAE? Are they near to seeing it? Where are they at?
Well, 2025 has been year one of institutional curiosity for Europe. At the beginning, the institutions were not paying attention. It was really Donald Trump's strategic reserve that made the click for many institutions that were listening to Bitcoin for years and thought that it was too risky for them. And then suddenly, it became too risky to at least not be curious about it from a management and professional career standpoint within the banks. And so when we started Capital B, in fact, 1 year ago, back at the last Bitcoin MENA conference, we had 3-4 institutions at the beginning within the capitalization table. Now it's 40-50 institutions, and many of them Europeans. But 90% of the capital that we've raised is still from international institutions outside of France itself. And really recently, after the big rise of the Bitcoin treasury companies and then the drawdown in the price, still Capital B is up by 7x since the launch of the strategy. But now the institutions are realizing, oh, I missed the last run, the first leg of adoption, and maybe I will try to now look into this, understand what it is. And for the first time in the last month, I've had 70 meetings with institutions in France, specifically. Some of the largest independent banks and some of the largest systemic banks over in Europe, and some of the presidents of those banks. And they are now fully sold on the monetary devaluation. This is not a debate anymore. It's exponential money creation. And they see Bitcoin as the only way to get the attention of their clientele. They are losing the attention of their young clientele. They are losing the attention of their professional clientele. And they see Bitcoin as a potential way to continue to engage their clientele in that way. And so while Bitcoin is still very small within the financial system, it's taking a lot of attention. Why? Because the best performing individuals have been Bitcoiners, the best performing corporations have been Bitcoin corporations, and now the best sovereigns are looking into this, and that's also part of why we have decided to set up a subsidiary in Abu Dhabi, in ADGM, because there is this vision, there is this conviction on scarce resources and how to use them for the future, and that's a vision that we share very much.
And you mentioned sovereignty and attention and how that vision of energy and resources that are finite move in the future. And it does remind me, you know, we've had in the past 2 weeks the two largest companies in the world. We had Jensen Huang just 2 nights ago talk about how energy and Bitcoin are fused and tied at the hip. Just 1 week before that, we had Elon Musk say it. So that's two of the largest corporations on earth, the most interesting, main player character energy again, main stage type of folks and companies. And you see, like you said, Omar, about the sovereignty and energy being a big component of this, the finite resources and sovereignty being fused at the hips. When you see this argument from Jensen Huang about energy and Bitcoin and Elon Musk, how much easier, again, does that make your job here in this area, that everyone is now understanding the sovereignty question, the strategic reserve question, with not just the President of the United States, not just the leaders of UAE, but also the two largest companies in the world coming around and all sort of rhyming with each other. So how much easier does that make your job?
Honestly, Nolan, I'm glad that they started listening. You know, it's like 10 years too late.
You've been doing this for a long time.
We've been doing this for a long time. We've been called crazy for a long time. I'm glad to see everybody's become as crazy as we are, let's say, in terms of adoption. But I'm so glad that the country has decided to take that step. You know, it was very challenging in the beginning, but I think right now that debate is off the table. It's now more about how do we acquire more Bitcoin? How do we make sure this industry is attracted correctly? How do we regulate it correctly? So I think we're on the right path, and a lot of people I think also see that. As you can see, you know, we have two great companies that have just moved here. We have hundreds of them that are moving every year. I think the vision that Abu Dhabi has, and the UAE specifically, of how to adopt this whole crypto industry, Bitcoin being the forefront of that. I think we're on the forefront of all that, and a lot of business leaders also agree with that, and that's why we have them here. So it's becoming easier.
And I like what you said, it's about acquiring more Bitcoin, because that reminds me, there's this idea of moving past the sale in sales, right? Moving past the sale. The most famous example was Donald Trump used it with the wall in Mexico. It wasn't build the wall, yes or no. It was who's going to pay for the wall. You were already the wall was already getting built. Who's going to pay for it? And it feels like, and Alexandre, I think you're the perfect person for this, because I want to know how much is still, when you're dealing with people who are just getting their first taste of Bitcoin and what's going on, are we still in the world of educating people about Bitcoin? Do you want to buy Bitcoin? Or have we really gone to where we hear the black rocks? Is it 5% or you know, it's 1% or 5% or 10%? Because when you're saying about how much Bitcoin you're going to buy, you're not really selling people on buying Bitcoin yes or no. You're asking them how much they're already going to buy it. So how much? Are we past the point of having to sell Bitcoin? Or are we still having to sell Bitcoin and not about how much?
Well, there was a point mainly last year where you still had to talk about whether Bitcoin is good or bad. And that is a very inappropriate question. The question is whether it works or not. And today, there is an admission by the large financial institutions in the world that Bitcoin works and that Bitcoin is here to stay, and that at the very least, as you mentioned, it is a diversification factor for the largest financial institutions. And so in that respect, the market size of Bitcoin has been really a few $1 trillion that's been allocated yet in the global economy. The size of capital is $1 quadrillion, and there will be a lot of frictions along the way as Bitcoin is integrating all of these different tools to enter capital markets. The first one has been equity that is backed by Bitcoin. The second one is becoming digital credit. credit that is backed by Bitcoin. And you can see systemic banks, the JP Morgan, Morgan Stanley, even players that were hostile to Bitcoin, Vanguard, now accepting Bitcoin and giving access to it, structuring products for it. And then on the other side, you see Bitcoin treasury companies taking the Bitcoin on the balance sheet and using that as a machine to provide Bitcoin per share to their shareholders and transform USD yield that is provided to traditional market into BTC yield in the form of additional Bitcoin per share. And for the president of the largest systemic bank in France, for example, it came down to two questions that made him realize that Bitcoin was going to be a priority for him over the next year. It was whether Bitcoin is secure and decentralized. All of the questions around Bitcoin can go towards whether Bitcoin is secure and decentralized. And if you realize that it is the case, and you can monitor that aspect over time, then you realize that you need to build and to work for Bitcoin, because that will reward you over time. And so, for example, Capital B is still a small company in the grand scheme of things in France. It's 200 million euros of capitalization, yet it is in the top 5 daily of the stocks that are the most discussed in France. It is the #1 volumes in the Euronext Growth Paris stock exchange. And so you see, when I meet with the bankers and they tell me, what about Bitcoin? I tell them, look, this is the most liquid stock that you have with your retail clientele. It represents already 1 billion of volumes. And this is more important to them than the theoretical aspect. And so then the question remains how to gain access to Bitcoin and how to provide more options for my clientele. And so that is really changing, and you can see that in France more recently. There's been a systemic bank now offering retail access to Bitcoin. That was not happening last year. And so already you have 450 Bitcoin mined every day. That's the offer in the market. And then you have 1,300 buying pressure every day in the market from Bitcoin treasury companies. And then 1,300 again from funds, ETFs, and now the sovereign wealth funds. So this is accelerating. And while the market is moving hands, changing hands in terms of Bitcoin ownership, you can see that the trend is really accelerating. And while the amounts are not still that significant from a global perspective, you see Abu Dhabi is about $500 million of allocation. This will grow to billions of dollars. And so you better be ready before that happens than after.
And you were talking about optionality and the different capital market products. You know, at Roxham, we believe in Bitcoin-denominated, Bitcoin-backed capital markets. That's what we think the narrative is going to be going forward. Bill, what are you thinking the narrative is going to be in 2026 along this institutional line? Is it like what Alexandre was saying, these optionalities, these different solutions, how to access Bitcoin, this vehicle, that vehicle? What do you see being the main plank of narrative building in institutional adoption in 2026?
Well, I think in general, if we are getting to expected low interest rate environment in 2026, and definitely, Bitcoin along with the gold and the risky assets should be, part of the most important asset allocation to, bet against the low interest rate. And regarding the narrative, I think now the key issue is not about, whether there are some narrative or not. I think, Bitcoin is getting into a silent IPO moment, where people began to buy in the narrative. This is digital gold with 21 million fixed supply, and going forward, everyone should own a piece of it. The only issue would be like how much you want to own it, and for how long of the period of the time you want to average your cost to acquire your Bitcoin to some certain percentage. And I think that's part of the reason, why in past 1 year, Bitcoin is kind of, in the sideline with more institutional adoption, but, the price is sideline. And I think, there is a significant turnover between, the previous holder and the new investor. So I do think, going forward, it's more about, the massive adoption of the mindset in a sense. Yeah, so for the individual and for the institution, people began to, buy Bitcoin, as part of the allocation.
Well, I love it. It makes sense when you think of it in those terms, and I especially see it in terms of, even geopolitical peace, for example, we saw the United States and the president come over here. It's not just their idea of how to structure the economy. It looks like fundamentally America is starting to prefer the real economy of producers and energy makers. And you can see why the UAE and the USA are starting to really sing from the same songbook. So, looking forward in 2026, where do you see these American and UAE type narratives taking the industry? Omar.
Honestly, I'm hoping that we're going to be having a big share of the whole mining across the globe. I hope. At least this is part of our strategy. At least I don't know how successful we're going to be in it, but I hope we will be. But I think we want to be able to control a certain part of that hash rate. It makes sense that we're an oil-producing country in the sense that we're doing it here, but also a lot of this is going to be happening in North America. There's going to be 7 gigawatts of energy coming online this year, just in North America. I think a big part of that is going to be focused on data centers, and a big part of those data centers would be Bitcoin mining. So I hope, at least us sovereignly, that we're going to be having a big chunk of that, and that's part of our strategy as well.
Well, in some ways, people say anyway that Bitcoin mining has put the AI finance model ahead by about 10 years because of ASICs and then co-location and basically the anchor tenant real estate development model.
Yeah.
Bitcoin really perfected that, and you see AI slipping in on that whole same conversation and learning from what the Bitmains have already done and all these folks. So last question here for you, Alexandre. We've only got a minute to make sure you get to your other stage talk where you'll be with all kinds of interesting people. So just a last bit on that, on the energy front and the energy finance, and whether or not, going back to your European perspective, if they're finally going to click for them on this energy finance narrative.
Well, we are very far from this over in Europe. I think a lot of Europe, at least regulatory-wise, is still stuck within the good or bad, while the rest of the world is within the working or not. I think this story is not new. It seems like we are discovering how scarcity works and what will be the industry that will be built upon Bitcoin, but in reality, this is not new. There was 2 private companies that were founded back in the 1800s and 1900s in England and in France with the objective to accumulate gold. And those 2 companies became the Bank of England and the Bank of France. So I guess that if you want to become the global reserve of the world, you want to accumulate the scarcest asset on earth, and then you will build financial services on top of it, you will build infrastructure, energy services on top of it, and you will build the whole economy on top of it. And so this is the global and the long-term vision of a Bitcoin treasury company. It is not a meme stock that you could have the impression of on the internet. It is literally the foundation for who will have the most Bitcoin and who will be able to maximize what it is able to do around it. Because the use case of Bitcoin is, yes, it's peer-to-peer cash electronic system with absolute scarcity. So it is individual sovereignty.
Absolute scarcity applies to Bitcoin, but also the time on the clock. So time is also scarce, and we're out of it, unfortunately. Thank you, Alexandre. Thank you, Omar. Thank you, Bill. Warm round of applause for these fellas. Thanks a lot, everyone.
Welcome back to the Bitcoin Magazine live desk. We've lost Sam Callahan. This is the What Bitcoin Did takeover, and we've lost Sam Callahan. Apparently he had to go and dilute shareholders, but we've been joined by KG, who's actually building stuff on Bitcoin. KG, welcome, man.
Thank you for having me.
So I want to talk a little bit about Bitcoin circular economies, because we were just in Africa with Eric, and we went to Kibera in Kenya. We saw the Afrobit guys, and there's a real movement happening there. I think one thing is the Bitcoin payments, which is very cool, but Tando on top of that is incredible.
Yeah.
Tell me a bit about what you're doing with the circular economies.
Yeah, so ultimately I'm just the facilitator as a wallet. So I would like to enable anyone who's in that economy to be able to send and receive Bitcoin. Fun fact, I bought this in Kibera as well. This is a bag they were selling, so if you'd like to get one, make a trip down to Nairobi, and yeah, you'll see a few bags. Pick whichever one works for you. And yeah, all I do is facilitate from anyone can send and receive Bitcoin perspective.
Yeah. But what's so cool about what he does, right, is that it's Machinkura, the wallet, can be used on USSD. So you don't need an internet connection, you don't need a smartphone. You can just do star number hash and start sending Bitcoin.
What is USSD?
So it's maybe you can think about it like a text-based website, right? And the USSD code is like the domain, but instead of it being like alphanumeric, it's just a number. And then the telecom keeps a directory of which text-based websites are there, and then it forwards requests from the users to the service, from the service back to the users. And as long as it's within 160 characters and 20 seconds, then the session continues and the user can send and receive information.
And this is because all the telecommunications companies that are in Africa all got together. They're like, let's create this M-Pesa network where people can send like payments over. Is that what incepted this? Or
no. It's in the specification for GSM.
Okay.
So, before websites became a thing, there was WAP. WAP. So it was a part of that, and then the whole idea was how do you do that without a browser? So then this came out.
This was just one of those protocols that was a part of the early phone towers that was going out there. And nobody was using it for anything. And so Safaricom came along later with M-Pesa in 2005 and started using it, but it'd been there since the mid-90s.
So one thing that I thought when we were in Kenya is it might be the best place in the world to be a Bitcoiner. Like, you can live your entire life, pay any bill, pay any shop. Like, do you think that it is the best place to be a Bitcoiner?
I haven't been like everywhere like you, but for us it's really easy. Yeah, I mean, listen, Bitcoin is really easy to use in Kenya because we have different developers there building things like Tando or Bitsako or Minmo. There's a bunch of Bitcoin devs in Kenya. There's some in South Africa. There's some in Nigeria. But Kenya is
wait. Let me name drop the South African ones too. We have Money Badger, we have Bitcoin Egasi, we have Machangura, and but I think Africa is in a great place, regardless of the country you're in. You're just going to see a lot of interest.
The cool thing for me though is like I spend so much time in the US doing the podcast, and like there's the things like the space popping up, there's Bitcoin Park, and they're really cool like areas where Bitcoiners can get together. But in terms of actually using Bitcoin on the ground, it's one of the most impressive things. I've not been to El Salvador. You have, Eric. What's the experience like there?
El Salvador is great, but what I thought was like interesting, like you know, when I was in Bitcoin Beach and everything, you can pay for Bitcoin in different areas. I think like when I talk to people in San Salvador, in the capital city, who are kind of like very removed from the Bitcoin community, like most people were generally not as familiar with it. But what I thought was really interesting was when, you know, Danny got into Nairobi a day before I did, and he got to go see a community out there. And you were making the point to me that like a lot of people are actually using a savings use case around some of it. They really were doing payments of it in a more organic way.
Yeah, I think that's totally growing. We are out of time. We're going back to the main stage. The Falcon stage is coming up.
Really relevant to that quote. And the topic is a millennium of monetary mistakes. How Bitcoin fixes what gold couldn't. Our next session will be moderated today by Stefan Livera, podcaster. Stefan Livera Podcast, give him a big hand. He will be joined by Rahim Tagizadegan, CEO at Ditsets, and of course, by the author of Bitcoin Standard, give him a big hand, Saifedean Ammous. Be louder. The floor is yours. Please be attentive.
All right, we're on now. All right, well, first of all, thank you for joining me, and thanks for having us. We're going to be talking about a millennium of mistakes and whether Bitcoin fixes this. So, is it a straw man to say gold failed? How would you guys explain this?
You should do it first.
All right. Well, I think on some level, before I was a Bitcoiner, I was a gold bug. I was crazy about, before I was an annoying Bitcoiner before I was a Bitcoiner, but my Bitcoin before Bitcoin was gold. So I used to always talk to people about gold, why gold is the future, why gold is hard money, sound money. All of the things that I say about Bitcoin, I used to say about gold. So back then, it would have been sacrilegious for me to say that gold has failed as money. Gold didn't fail as money, we failed it as money. However, after discovering Bitcoin, after becoming a Bitcoiner and figuring out why Bitcoin is better than gold, I think it becomes more, you can become more objective about it, and you look at gold and you can say, well, the fact that we failed in our ability to use gold, if you want to frame it that way, ultimately has to be a function of the failure of gold's property, of the inherent properties of gold that make it essentially unworkable as a form of money in the 20th century, because it failed to resist government control and manipulation. And that's ultimately what it comes down to. So I like the fact that gold supply increases at a low rate. I think gold is better money than pretty much everything that has ever existed except for Bitcoin. However, it does have this fatal flaw, which is that it's very difficult and expensive to move it around in a modern digital economy, which means that you have to resort to centralized services for moving it around, which means it becomes relatively easy for governments to confiscate it and to neuter its monetary role, issuing paper and credit that is supposedly backed by the Bitcoin, but then ends up not being backed by the Bitcoin, and then eventually becomes inflationary fiat money. So by turning into fiat money, effectively, we could say that gold failed. And I think you become a Bitcoiner when you realize it's a lot easier to just build something that actually works out of the box than to try and convince the entire planet that we need to have the political and economic institutions that are geared toward a form of money that is no longer functional. It's very difficult to explain that to people. If you've tried to try and convince people to vote in order to bring back the gold standard, you'll realize, yep, this thing doesn't work anymore, because if it needs to rely on people voting, it's doomed.
Rahim, where are you at?
I'd say gold worked surprisingly well, but was made to fail. I'm not sure it's entirely. I agree that Bitcoin has the superior technical properties for monetary usage, but I don't think that's the reason the gold standard failed. And I think there's only one gold standard that really worked well, and that was the original one. And it is usually not the one we talk about and discuss. There were 5 gold standards, actually. The original one I consider the one used by merchants, and in a bottom-up discovery process discovered by merchants. And they discovered that gold is useful as a money because you can define an algorithmic money. They realized it's not the face on the coins that determines the purchasing power of that money, but you could have a standard that just defines the fineness of the gold and the weight of the gold. And that's a great way to go about a standard. And it's a similar standard that Bitcoin introduces. It's an algorithmic standard. It's not a top-down set standard by an authority, by an agreement, by a commission. It's not an organized standard. It's something you can discover and you can verify. And I think it was algorithmic in that sense. Now, that's not what we usually talk about when we see gold standard. We usually think about the classical gold standard that worked relatively well still, but of course had the issue of being a set standard. In the best case, it's an agreement, again, but that of course led to failure, because gold was never the only money and the only good with monetary use. Silver was of course a contender. Most day-to-day transactions were either paid in silver. And when you want to set that as a standard to define away volatility, that's exactly what broke the back of classical gold standards or monetary unions like the Latin monetary union where they set a fixed bimetallic ratio between gold and silver. And of course, we know as Austrian economists, prices are never fixed. There's always like volatility. In the case is vitality, as Saylor says. So if you fix it top down, then of course you have it break somewhere and you set the wrong incentives. And that's exactly what happened with the classical gold standards. But it got much worse. And it was not through the failure of gold that it got much worse, I think. It's the gradual political process of centralization, trying to abuse anything and plunder anything. The next standard was actually the gold bullion standard, where you say for ease of using that standard, you can only get redemption in bullion, which of course is a lot of gold, and that of course takes it out of the hands of normal people. I mean, even gold coins were kind of upper middle class money because it has a lot of purchasing power. But a gold bullion is like only the richest would ever touch it.
Right.
And that was the step away. And of course, there's a centralizing process. And then you have the gold exchange standard, which is setting ratios between currencies that are supposedly gold-backed and are on a gold bullion standard. So you have a few currencies that are on a gold bullion standard, and then you take those currencies as the kind of backing, and that was the gold exchange standard. And then, of course, the worst form, but still much better than today, was the Bretton Woods standard, where you basically have just the dollar as a gold exchange standard currency. And that, of course, made it very easy to go the last step. And it wasn't really for the fall of gold that the last step was taken. It could have been anything. And it, of course, could eventually happen to Bitcoin as well if it was centralized completely and it was like one paper Bitcoin available in the end, and one government decided to go that way eventually and not accept any redemption of Bitcoin or a different kind of Bitcoin and so on.
Well, yeah, thank you. That's a great overview, Raheem, on as the topic, the millennium of monetary mistakes. So obviously, as Maxis, we like to say Bitcoin fixes this. So obvious steelman could be, well, can Bitcoin eventually centralize in the way that Bitcoin did, whether it's some kind of layer 2 that doesn't have the same full reserve assumptions built in? Now, of course, as Maxis will say, not your keys, not your coins. What is the worldview implied by that? Full reserve, generally. So can you gentlemen explain for us, the steelman case? Could Bitcoin centralize, and could we go back around full circle?
Yeah, I mean, if I were to make the case for it, I'd say ultimately there's a limit on how many on-chain transactions happen on Bitcoin. Currently, it's around maybe 500,000 transactions a day. So that's obviously nowhere near enough for the whole world to be using Bitcoin on-chain. So if everybody wants to buy their coffee and groceries and cars and homes on-chain, then there is enough space on the Bitcoin blockchain for one neighborhood in Abu Dhabi, maybe, one tiny part of Abu Dhabi, not even all of Abu Dhabi. So clearly you can't have all the transactions on-chain, which you would expect then necessarily is going to result to second layer solutions that are going to involve some level of centralization, which is going to repeat the process of gold. And therefore, Bitcoin will be centralized, and then you're going to see the same thing. Governments will issue Bitcoin-backed financial assets, money, say paper and credit, digital currencies that are backed by Bitcoin, but then they'll suspend redemption of Bitcoin, and then you can't get Bitcoin for it. However, I don't think that this is likely to happen with Bitcoin as it did happen with gold, because I think there's a key distinction between the two, which is the ease of transacting outside of second layer solutions. So it might look like it's not a lot, it's 500,000 transactions a day, but 500,000 transactions a day of final settlement transactions is actually a huge improvement over what gold can do. Because with gold, it's really expensive to move gold around, say, from Europe to China, or from China to the US. It's extremely expensive. 1 bar of gold, which is, say, the 400 ounces of gold, it'll cost about 1% of the cost of that bar, maybe, to move it around, somewhere in the 1%. So you move the bar around 100 times around the world, and you've eaten the cost of the whole bar. So if you want to move $1 million of Bitcoin, of gold around, you're incurring significant fees every single time. And if you do it for 100 times or so, you will basically incur the entire cost of it. And it's time consuming because it takes a lot of time to move physical gold around. Now, if you compare that with Bitcoin currently, we have 500,000 transactions that you could do for a few cents per each transaction, and you have final settlement in about an hour. So this is really fundamentally the difference. If you think about how fiat came into existence, it came into existence in World War I when governments confiscated the gold, or they already were sitting on the gold, but they confiscated the gold that was in their central banks, and they took the gold from the banks, and then they told people you can only use the paper to make payments, and you can only use credit to make payments, and you cannot use gold payments directly. You can't trade with the rest of the world with gold. That was really the key thing. International trade in gold was stopped in 1914, and you had no alternative. If you were a French, German, British person, Russian person at that time, you couldn't have opted out and said, all right, well, they don't want me to use gold, they want me to use their paper money, but I'm going to opt out. I'm going to trade with my Russian trade partner using physical gold directly. How are you going to do it? Well, one way to do it, small little advertisement, in my book, my new book, my latest book, The Gold Standard, I imagine what would have happened if that was possible. If you did have a possibility for people to trade outside of central banks using airplanes, and so I develop an elaborate story that you can check out and you can get the book. But in the real world, we didn't have that. In the real world, once the government said you can't use gold, you have to use our paper, everybody in France and Germany and Britain and the US had to abide by that. There was no form of gold trading outside of that. Well, with Bitcoin, even if governments centralize Bitcoin reserves, even if they issue financial assets that are partially backed by Bitcoin, you are still able to go on the Bitcoin blockchain and make a $1 billion worth of transaction across the world for a very cheap fee. And granted, I think the fees are going to go up over time, but they could go up 1,000-fold and still be cheaper than what it costs to move large quantities of gold around the world, which is what you would need to do to have a decentralized form of gold standard. So fundamentally, for me, the decentralized nature of Bitcoin, the fact that Bitcoin mining is open, that nobody can stop you from mining Bitcoin, anybody can build a Bitcoin mining facility, anybody can process transactions, and anybody can put transactions on a block, and the fact that it's so easy to obtain the technical requirements necessary to run a Bitcoin node or to send a Bitcoin transaction. There are billions of devices around the world that are able to do this. All you need is just one of them and an internet connection, and then you're able to buy and sell Bitcoin. The cost of getting into Bitcoin, if you're banned by the government or if you're stopped by the government, is incomparably lower to the cost in the case of gold, which in my mind means that it is practically impossible is a big word, but it's very difficult for governments to be able to stop you from using Bitcoin if they don't want you to. Which means that if they do introduce any kind of inflation or any kind of solution that compromises the properties of Bitcoin, they are powerless to stop people from leaving their platform. So therefore, with gold, they can tell you, well, you have to use our paper, it's no longer backed by gold, and that's it. And if you don't like it, cry about it. But at the end of the day, if you want to trade with somebody in any place other than our country, you need to use our central bank. With Bitcoin, they cannot do that. And the fact that they cannot do that means that people have a fallback option. And that means that we don't need to have every single person do every single transaction on chain. What matters is that we can fall back on chain if we suspect something not good happening in any of our second layer solutions. And the fact that we have the threat of exit is what keeps, in my mind, is what keeps business service providers, Bitcoin service providers in business, is what keeps them honest, what keeps them afraid of essentially messing with your Bitcoin. Because if you suspect that they're messing with your Bitcoin, that they're not backing their financial assets with Bitcoin, you will leave. And in a Bitcoin world, I would imagine you would see bank runs happen very quickly because people can detect on-chain the movements of money in and out, and they'll be able to establish if a company is insolvent a lot faster than you can with the fiat monetary system, which is very corrupt and very liable to manipulation.
Yeah, so go on.
Yeah, let me just where I potentially disagree, because there's a lot of agreement. Now, the bit steelman gold again, historically, the solution the merchants found for the big transportation cost was to just settle in the fair towns So that's a kind of layer 2 solution. And it wasn't exactly that layer 2 solution that centralized. And I think Bitcoin is there even superior, and we already have the layer 2 solutions. I don't think Lightning or Cashew within themselves have the risk of centralization. Of course, there's a trust trade-off, as the merchants had in their settlement systems back then. But as long as they are voluntary, then of course everyone can assess that trust situation and could react to any change of that. It would only become dangerous if we have a regulatory step towards cartelization. If one day, like the Cashew mint, because there's so much usage, would form a cartel and you need to get a permit to become a Cashew mint, and those mints of course use that cartel privilege to enrich themselves, either by fractional banking or by not even having any backing, because they declare, oh, we don't really need that Bitcoin stored, you can trust us, kind of thing. And then, of course, there is a similar risk with Bitcoin. If regulation would become more monopolistic in the future, which fortunately the geopolitical tendency at the moment seems to rather go towards a multipolar order. But if this kind of centralized oversight and control of finance would still increase its power of the people, and more people would in their trade-off say, oh, I need the trade finance access, I need to use a broker because that's how I work, then of course we could see the same risk, and we see it today. Even though Bitcoin settles for very little money 24/7, Bitcoin in the banking world, or if you use a brokerage in between, it may sometimes take weeks, because it's like, oh, it's Sunday, the compliance officer is not at work, we can't process that payment right now, you got to wait. And it gets much more costly, of course. You may say, well, you're not actually settling in Bitcoin, but some actually give you the illusion of using Bitcoin wallets, but they have to pass through a regulatory screen.
Custodial KYC compliance.
Exactly. So if that direction would be similar to what we've seen in history of gold, that of course could eventually be a risk for Bitcoin. So I think it's important to be aware that Bitcoin doesn't solve that general problem of, if there is a more concentration of regulatory power, and I think the main hope we have is more decentralization, and Bitcoin should help with that, and hopefully it helps with that, but it doesn't fix it entirely. We need to work for more competitive jurisdictions, more jurisdictions, smaller jurisdictions, to allow Bitcoin to have its full leverage for liberty.
I see, yeah. And so let me summarize some of that. So as Saifedean was pointing out, there's 500,000 transactions per day. And to be clear, even that, you can have a batch exit. So let's say one exchange does a withdrawal to 100 customers, and that's still one on-chain transaction, as an example. Now, of course, still limited by block space, but the broad point is we have these L2s. Some of them are very open entry. Anyone can set up a Lightning node if you wish. Of course, there are other L2s now, things like Arc, Spark, if you count Liquid and Cashew, and even other things that aren't invented yet. We have all these ways that people can still transact on higher layers without even having to hit the chain each time, at least. You can compress some of that off-chain. And then, as you were saying, Rahim, there's a risk around, let's say, KYC, regulation, compliance, that maybe blocks people if they need to go to fiat. Now, we've got about 7 minutes left. I think we've got time for one more topic, which I think we will find interesting. Let's say we're Bitcoiners, we're maxis, we're right about this, number is going up. In 20 years' time, it's going to be like $10 million per coin. What happens in such a world? Will people just directly transact in small fractions of a Bitcoin or in Satoshis? Or will there be some kind of fiat coin on top of that, it's like hodl the Bitcoin and spend the fiat? Or is it, no, actually, we're going to live in the hyper-Bitcoinized world and we'll spend very small fractions of a Bitcoin? What do you guys think?
If you ask me, I think monetary competition is a winner-take-all process. And so nobody wants to be using the second best money. Network goods centralized towards a winner-take-all dynamic, and money is a network good. So everybody would want to have the money that is the most liquid. This is one force toward one winner-take-all. And then the second one, which is the one that I discuss in more detail in my work, is the fact that the best money holds onto its value better. So it accumulates value while the worst monies will lose value. So even if you would say that people just want to use the crappier money, people like it, people are used to it because of traditions, doesn't matter. People like to use seashells as money, people like to use glass beads as money, people like to use all kinds of archaic little things as money. And it wasn't because somebody organized a campaign to market gold to them that they eventually dumped all of these shitcoins for gold. It wasn't because somebody forced them. It was because of economic incentive. It was the force of economic incentive that compels people to behave in that way. And it compels them simply by making it so that if you don't behave in that way, you don't have any more money. If you put your money in seashells, you don't have money. All the money will end up in gold, whether people like gold or not, whether they like their seashells or not. Your options are get into gold and keep your money, stay in seashells and lose all of your money. So I think this dynamic is likely to continue. And I don't see it stopping because I see Bitcoin's scarcity continuing to be better than everything else. It continues to increase at a lower supply growth rate. So everything else becomes more abundant. Everything else becomes less and less valuable in Bitcoin terms. And people who use other forms of money end up losing more and more of their wealth. So naturally, wealth will concentrate in the hardest money. And naturally, people will want to get paid in the hardest money. So in my mind, I think, it may take a while. People's government indoctrination may keep them tethered to their government coins for a while, but ultimately there's no defeating the force of economic incentive. Government money is going to continue to lose value, Bitcoin is going to appreciate in value. And so at a certain point, I believe governments are going to have a choice to make. Would you want to witness your currency continue to die and fade into irrelevance? Or would you prefer to peg your currency to Bitcoin? So we may continue to be using things like the dollars and the dirhams and the euros and the yens and the yuans, but these things will have to be denominated in Bitcoin because otherwise they will continue to lose value against Bitcoin and nobody will want to use them or accept them. And so in this situation, I would imagine we'd have them backed by Bitcoin, which means they would be redeemable in Bitcoin. And I believe with Bitcoin, as I was saying earlier, there's a lot less room for error. So there's a lot less room for governments to be engaging in inflation when they're using Bitcoin because people don't need to use them. They can use all kinds of other solutions. So ultimately, I think Lightning has enormous potential. And I still think Lightning is still the most exciting thing happening in Bitcoin. I think you can scale Lightning enormously because you can have small little nodes that only serve a few hundred people. And you can have millions of these that grow over the next few years. And that would produce a very decentralized ecosystem of tens of thousands or millions of Bitcoin nodes, none of whom can control the monetary policy, and none of whom can fake transactions on the Bitcoin blockchain. So none of them can really manipulate the chain. All they can do is just serve customers and get a return for it. And I think that's going to be a very healthy ecosystem that's going to lead to a competitive equilibrium where people are constantly providing the service of payment clearance in a centralized way, but a much more decentralized way than Bitcoin, than gold or fiat.
Agreed, very strong network effects for a settlement layer. I disagree. I think it will never be the case that Bitcoin will be 100% of the money supply. Even in today's measures, which I think should have been expanded to look at wealth in general, we see there are very different preferences concerning volatility and risk. And of course, we'll have other wealth asset shares represent assets. We'll have claims representing assets with different maturities. We'll have trade finance. So I think this layered structure overall holds, and for different preferences of people and different contexts, it may all be hopefully Bitcoin layered things, but I think, of course, a Bitcoin world will not be a utopian perfect world where everyone has like the lowest possible time preference and everyone can be trusted 100%. There'll still be tricksters and fraudsters. There'll be business models that afterwards look like scams, but beforehand you couldn't say it, like it could have worked out as a kind of premise thing. And I think market economy is always a discovery process and a bit buyer beware. So I think, of course, there'll be experiments, and some experience may lead to discovery, yeah, that people actually have different trade-offs and different timelines and perspectives, and some would like lower volatility instruments that hopefully have some Bitcoin relation and Bitcoin backing, but may even use derivatives, may even be credit claims where you have to assess collaterals and how risky are different collaterals and what's the maturity of financing. So I think we'd still have that, and I think we'd still need that at least in part.
Interesting. So I get we don't have a lot of time for discussion, but I guess I'm summarizing then. Saif's view is more like it's going to be either just Bitcoin denominated, and Bitcoin denominated
financial instruments.
Yeah, pegged. You know, that governments will just peg to Bitcoin because they'll just sort of throw in the towel. And I guess Rahim, your view is maybe a little more like there may be a role for other kinds of denominated assets because of things like trade demands. Yeah, but I guess we'll have to, but I think we all agree that number is going up and Bitcoin is going to fix this. So I think that's all we have time for. So everybody, please put your hands together for Saif and
Thank
Rahim.
you. Thank you, everyone. Number go up, Bitcoin fixes this.
That's
always.
Fantastic. Another member.
Welcome back to the Bitcoin Magazine live desk. We are joined by the Bitcoin Beach crew. We were just talking about circular economies, and I blasphemed. I said, I think Kenya has the best Bitcoin circular economy. What's your take, Michael?
I haven't been to Kenya, so but you know, everybody knows El Zonte is where it all started, and I don't think there's any place where you can live on a Bitcoin standard like you can in El Salvador. So I'm obviously excited about what's happening in Kenya, and I hope they supersede what's going on in El Salvador. But I think
you guys are the most popular.
Yeah,
far and away the most popular. Yeah. That's for sure.
Well, I've not been out to El Salvador yet.
Which is insane. Because
yeah, what's up with that?
When we asked Peter to come, you know, he jumped on a plane the next day and was right there. And we've been inviting you for 2 years, and you still haven't made it. So.
I will make it happen. Next year, I'll make it happen.
Or probably because you will start spending SAT.
Right. Yeah, I'm just saving my Bitcoin.
Can you be a Bitcoin podcaster and not go to El Salvador?
I think I'm living proof.
I don't know.
I don't think so.
I don't think you
you disqualified yourself.
Yeah, I think you're out of it.
I will fix this problem. But so how long has it been since the El Zonte experiment started?
Started in 2019 was when we first started rolling stuff out. So it's been about 6 years now.
And have you noticed the town change since it started?
I mean, it's like night and day. If you saw pictures, it's kind of like seeing pictures in Dubai when you show up 5 years later, how much stuff's going on. I mean, the town is really transformed.
That's definitely what I noticed the last time I was down there. It's just like I saw all this construction for these brand new like high-rise apartments and stuff that are popping up out there, and it's like, I mean, it's probably just attracted like 20, 30-fold any sort of attention you ever expected.
It's hard to keep up with all the things happening, you know, and real estate is one of the things that you can see. You can see like apartments, buildings.
But the roads improving. Before it was like dirt roads with like open sewer, and now you have like, you know, the roads have been paved, the sewer projects have gone in. It's really amazing to see the trends. And the businesses, the local businesses that have sprouted up and are selling things in sats.
And Bitcoiners that just show up like, hey, I'm here from Europe, I'm here from Australia, I'm here, you know, like it's a non-stop.
Well, that's going to be me soon, I promise. But has this spread outside of El Zonte, or is it still just like this one sort of beach town that is really pushing the boat here?
No, it's definitely spread outside of El Zonte. They have Bitcoin Berlin is a like mountain town coffee area that has basically tried to replicate what's happened in El Salvador, and I think they have a couple hundred vendors now. But even just anywhere in the country you go, almost every city you find several people that are selling in Bitcoin, all the major supermarkets, gas stations, like it really is possible to live on a Bitcoin standard pretty much anywhere in the country.
Mike, what's like your perspective if we were to just like, you know, randomly select somebody out of the population in El Salvador? Kind of like, you know, the average San Salvador resident. Like, what's their perspective on Bitcoin at this point?
Probably, if it's just an average person, they probably just have a little bit of curiosity, but they're probably not using it on a daily basis. If they're on the younger side, then there's a much better chance that they've adopted it. If they're a business owner, then there's even more of a chance, just because they have people coming to them wanting to spend in Bitcoin. But it's still, you know, definitely a small percentage of the population that are using it on a daily basis.
But this is curious because that was a survey that they did, and about like not how many people are using Bitcoin, but about how many people know about Bitcoin.
Yeah.
And El Salvador, I think, is one of the countries that most of the people know about Bitcoin.
Right.
If they're not using it yet, it's just a matter of time, you know?
Well, and it was crazy because there was 99% of the population knew what Bitcoin was, which is more than probably anywhere else in the world.
Right.
But when they asked them how many of them knew what Ethereum was, it was only like 6%.
Zero.
It was like
that's winning.
so it was huge to see the difference between Bitcoin versus crypto.
We only have about 30 seconds left, but one thing I do want to know is how has Bitcoin adoption at the nation state level, the country buying Bitcoin, changed El Salvador?
For me, it's the least important thing. I always think it's the bottom up, that we want to see people actually using Bitcoin as money. Bitcoin is increasing in value because they've seen they bought it at this price and now it's more than doubled. And so I do think it's helped the general awareness that it is the best money.
And you cannot be Bitcoin country if you are not acquiring Bitcoin, right?
This is true.
So.
And are El Salvador still stacking Bitcoin?
President Bukele just bought like 1,000 Bitcoin like a couple of weeks ago.
Tons of Bitcoin.
Damn, let's go. So do you think the smaller nation states around El Salvador, Central South America, need to be following this model?
I think as far as encouraging the use of Bitcoin, for sure, whether or not they have a Bitcoin treasury or they're stacking Bitcoin, I have mixed feelings about that. But actually empowering their people to use the Bitcoin network and use Bitcoin as money, 100%.
The number one thing is taxes. Take away taxable events from it, and a lot of good things can happen from there.
Tell me why you're skeptical of the nation states buying Bitcoin.
I think that when nation states are buying Bitcoin, they're taking money from their own people or borrowing money, and I think that that's not necessarily, I don't want my government investing for me. I think that should be something that people choose on an individual level.
Yeah, I agree with that. Well, thank you guys. We're going to go back to the Falcon stage now.
The floor is yours.
Good afternoon, everyone. My name is Arsh Molu. I'm the head of operations for the Financial Freedom Program at the Human Rights Foundation. I'm joined today by two of my great friends, pioneers in the Bitcoin space in the Middle East region. We'll start with some introductions. Please, Roya first. Just tell us about yourself and your organization.
Thank you very much for having me here. Good afternoon, ladies and gentlemen. I'm Roya Mahbub, and I'm CEO and founder of the Digital Citizen Fund. My organization is a nonprofit which is providing access to education and financial literacy for the girls in Afghanistan. We're building IT centers, we provide robotics education, we provide financial literacy, we also help the entrepreneur to start their own startups.
Yeah, Faisal.
Sure. Good afternoon, everyone. My name is Faisal Mutar, originally from Iraq, and I'm based in the United States. I'm the founder and president of Ideas Beyond Borders, which is an organization that really the ultimate goal is to provide the region with the ideas and the capital to be prosperous. So I consider myself a kind of an accidental Bitcoin user as an organization, because how it really started with us is that our first project was about building Wikipedia in Arabic. I'm sure many of you have heard of Wikipedia. And most of the knowledge around the world is not available in Wikipedia Arabic. So when we started the organization, we started hiring a lot of the translators to really translate content from English, French into Arabic and build the Arabic Wikipedia with content about knowledge, science, etc. Then the second part is Innovation Hub, where we support startups and businesses across the region, but in particular focus for areas where there is not enough of capital. That's Iraq, Lebanon, and some of Afghanistan. And the third one is work related to policy and journalism. And you can see about every aspect of our work, the subject of money transfer comes up. Is that how we're going to be able to pay these people? And that's how we were able to discover, actually through the work of Arsh and Arsh's boss, our executive person, Alex, who really kind of brought all of us to be familiar with the Bitcoin space, be able to utilize it to solve the challenges that are relevant to our organizations.
Yeah, and you speak about these challenges, right? So today we're here to talk about Bitcoin as a tool for the unbanked, a topic that's been brought up in Bitcoin circles throughout the past years through the work and advocacy of HRF and many other organizations. When we look at the topic of unbanking today, right? It's almost 2026. We have over 2 billion people around the world that still don't have access to banking. I think one of the issues here is that it's not quite a technical problem. It's more of an access problem, right? So from your position, Roya, the regions that you work in today, what are some of the challenges that people are facing which causes them to be unbanked?
Actually, just beautifully says that it's not a technical problem. It's all about the accessibility and also this discrimination. I think that many of people thinking if they're putting so many banks and ATM machines, they can solve the issues, but I don't think so, because I think it's all about the identity, access, and permissions. And one of the issues is the gender discrimination. Still many of the women in the region, they don't have a bank account because simply the family members didn't give them the permission to open a bank account, or if they don't have an ID especially in the rural area, when they're born, they don't get a birth certificate, so they might not be able to open a bank account. Or if they have receiving the money, usually the male relatives or the families, they wanted to have access to and controlling the finance. So this is one gender discrimination. And then the second is that identifications. And many, as I mentioned, there are many, almost 1 billion people don't have an ID, but I think that the majority are the women, and this majority of the women are mostly located in the Central Asias and countries like Afghanistan, part of Pakistan, and other places, which they don't have an ID, which is create a problem because they needed to have an ID and documentation to open a bank account. And then another ways is that because the rural area don't have a bank, enough banks, and then they don't have the destination also is a problem because there is not enough bank in a rural area, in villages, so people can have access to the bank. And another one is obviously conflict, and which many of our regions is always there is a conflict and war is going on, which is making it danger for people to go to bank, to distance to get their monies, and inflation. I think that Faisal can talk more about that, and also the cash dependency. Many of our regions are people are mostly use cash daily, and they are really heavily, especially in Afghanistan, we use most of the time cash, and that's another issue that I can see it because it's created when you rely on much of the cash in your society. There is a corruption, there is a thief, there is an insecurity because when you go out, if a woman have a cash, there is always like a risk with that. So there is no safety if you have keep the cash with yourself. So I think that unbanked, as you mentioned. It's not a only technical problem, but also is the accessibility and the discriminations, which is not designed for some people. I think the system hasn't designed to include everybody's. And
you're right on the nail with that one. There's several problems, right? And a lot of times it's region dependent. But for the Middle East specifically, right? Like Faisal, Ideas Beyond Borders does so much work in a majority of Middle Eastern countries, right? So from the perspective of your organization, what is the root problem that you're seeing today with unbanking?
I would like to start with a story. So to show what the kind of good looks like, then to move on to the bad. So I moved into the United States in 2013. In the United States, you arrive, in our case, they give you a social security number. After getting a social security number, you are able to open a bank account. You go to Bank of America or sometimes even the small credit union, and then you get a bank account. And that bank account can connect you to the entire world because the United States is on the SWIFT program. After you get the social security number, after you get a bank account, you're able to start a business. Whether in my case, I was living in Texas, it's so much easier to go to open an LLC in the state of Texas. We'll take that to the Middle East. Well, thank goodness in the United Arab Emirates, we actually have one of the best business formation places in the entire world. So the United Arab Emirates is in a way extremely advanced when it comes to business formation. But that is in a way a bubble. This is not the case for most of the region. If you fly 2 hours north to where I come from in Baghdad, it might take you 3 to 6 months to be able to register a business. That's why most of the businesses are not registered. Most of the economy, as Roya was saying, is cash-based. And the reason most of it is cash-based is because it's based on the informal economy. There is not basic tax collection, and there's a lot of fraud and corruption and all of that. So I think the main challenge, I mean, there's a lot of challenges and obviously differ from a country to a country, but I mean, the region is obviously, I would say, can be put in 3 categories. You have kind of the Gulf monarchies, where they tend to be the most prosperous, or the most kind of successful in terms of the economics. And then you have kind of the places where there is a lot of conflict in Iraq and Syria and Yemen and others. And then you have the kind of the North Africa context, which is kind of very heavy in population. Egypt is now close to 110 million people. So it's the most populated kind of nation in what's sometimes called the Middle East and North Africa. So all of these kind of countries have their own different dynamics, but what's really has been beneficial for the region is that we have places like the United Arab Emirates, and we have places like in which many people can actually register businesses here. So that allowed a lot of kind of ability. So if I am to say starting a digital business in Iraq or Lebanon, I will register my company in either the ADGM or the IFC in Dubai, and then be able to be connected to the entire world. That was not the case 15 or 20 years ago. With that being said, most businesses in Iraq are not financial technology or something that can be utilized kind of where that can be easily transaction. Most of the businesses are restaurants, hospitals, so they're struggling. And that's what I think, I mean, we're in the Bitcoin conference. That's what I think technologies like Bitcoin can really solve a lot of these structural challenges that cannot be solved easily by a strike of a pen.
So let's dive deeper into that, right? So from the perspective of the Human Rights Foundation, right? We've been around for 20 years, since before Bitcoin existed. One of the challenges that we've seen throughout the years was the constant censorship for NGOs, non-governmental organizations, activists, journalists, dissidents from all over the world, right? It was kind of this common theme of, well, we can't even open bank accounts in our home countries. How do we power our movements? And this has naturally led us to start talking about Bitcoin for the better half of a decade. And you two, as I mentioned earlier, are trailblazers in the sort of non-profit Bitcoin world, right? So I want to talk about, Roya, you mentioned all these points, right, on how hard it is for women and girls in Afghanistan to have access to banking. What was your solution to that? Walk us through that.
Our stories with using the Bitcoin is back in 2013. We had a platform that allowed hundreds of women across Afghanistan to use writing the blogs and working for us as engineers or coders. But the issue that we had with these women, many of them, they didn't have a bank account. And if once they open a bank account, as I mentioned, they needed the family permissions and they needed the documentation. And we figured out that to send the money deposited in the mail relatives, which usually they take the money and the whole point was to empower the women. It couldn't help. And then we looking at Hawala, which is 85% of the Afghan at the time, and even at the time that Afghanistan was collapsed, was a trusted Hawala system more than the banking system. It was totally male-dominated. And M-Pesa was very successful projects in Kenya, but in Afghanistan wasn't. So then we heard about Bitcoin, and we decided to use Bitcoin and develop it and building our own wallet system at the time. And with the push of a button, we could send the money directly to the bank account of the women. So I remember the time when you send an international payment, it cost money. And it's also is not only delays. It's not like in an instant you can receive your money. It's 3 days and sometimes weeks you have to wait to receive your money. But now with the push of a button, the Bitcoins appear in the wallet of the women, and we could, bypass the physical and social barriers. And it was fast, it was a low cost, and it was an instant, and it was more secure because the women didn't need to stay in the line in a bank, and everybody knows that they have a cash with themselves they carry, especially when you are living in a conflict zone, in a war, and a poverty. Having cash, it sometimes makes more danger for you. So that's how we started to using Bitcoin back in 2013. It wasn't because we wanted to do investment or like, many of the other people use it like there for trading or anything else. For us, was as a necessity. It was it's a survival tools. That's why we use it.
So you use out of necessity, right? Not because you exactly wanted to, right? And I think what's so special about this is you mentioned 2013, right? What was the price of Bitcoin when you started paying hundreds of women and girls in Afghanistan?
At the beginning, when we started, it was $100, but obviously the price goes up to $800, and we changed our business system on that. And then my sister also helped the girls to, when you receive a Bitcoin, obviously the girls wants to know how to make it cash. So she bought from them the cash and teaching them how, to trade it, the Bitcoins with the cash. And then they make a little bit money out of that as well. And then we also talk with some of the shops, local shops, if they receive Bitcoin, we can give them the cash and then some percentage. But that whole system we created it at the time.
Yeah, and so your sister became like the de facto peer-to-peer buyer of this Bitcoin, and then she ended up using the Bitcoin to finance her education at Cornell, right? So
yes.
This is just a woman from Afghanistan doing that, right? So no other system can do that besides Bitcoin, right? And that's the perfect segue for Faisal, right? Like, how has Bitcoin empowered IBB and all of the research and initiatives that you all do?
So, looking at all of our programs, whether it's the education part of empowering many translators and people who can make knowledge accessible around the Arab region. Now we started with 0 subscribers when we started 2017. Now we have about 8.5 million subscribers across the region, with many people, especially concentrated in Iraq and other places. So I hope one day we can make the Bitcoin conference in Iraq, hopefully the next couple of years. And then the second one is funding the businesses. So really, the way that our organization was structured, and then when we get to know about Bitcoin, is that we give people the choice. It's like, what type of how do you want to receive your payment? Do you want to receive it through Hawala, which we used to do at the time? In few occasions, if they are based in places like Jordan, they could use the SWIFT account or their banking system. If they're based in the UAE, then it's obviously very easy. And then the third option was Bitcoin. And then when we actually start paying people, we start doing surveys to understand why people make these choices. Some of it is structural because, if they are based in the Arab Emirates, then of course you're going to get paid by wire transfer or same with Jordan. But some of it is also socioeconomic. So as Roya were mentioning, of how the price of Bitcoin increased over time, and that really helped a lot of people who are not necessarily Bitcoin traders on a day-to-day basis, but they were a beneficiary of the rise of Bitcoin. And what we found is that people who are in the socioeconomic ladder within our team, who already had, in Iraq or Lebanon and other places, there's no advanced retirement system. You cannot invest in the stock markets, in the US stock market or S&P 500 and NASDAQ and all these places, through many of these countries with no SWIFT banking systems. So in a way, Bitcoin became people's investments. So if somebody is in a socioeconomic level that is middle class or upper middle class, they will be like, don't give me the salary. I don't need the salary because I don't live paycheck to paycheck. But this is actually my investment account because there is no other way for me to access the regular investment accounts that most people around the world have access to. Like if you are living in the United States, which I'm guessing there are many people here, if you're an employee by a company, you have a 401k system, and then your entire retirement is connected to the stock market. Well, if you live in West Iraq, you don't have that option. Yeah. So in a way that Bitcoin became like people's investment account as a result of that. So and at the same time, and especially in cases like Iraq, it's utilized also as a payment method in terms of diaspora communities sending back to people. The challenge has been, I think always the challenge is find the countries that are not on SWIFT or not as advanced, then you have to use exchanges to convert money into local currency in some occasions. Well, many people also don't have biometric IDs and things like that, so they cannot get verified. So there is the need for what some ways we call the human ATMs. Are these people like your sister to some extent, are people who would accept Bitcoin and then convert it to cash? And I think more of these trusted networks needs to exist in many of the region for it to be able to kind of for Bitcoin to take foothold in most of the region.
Yeah, and it's especially exciting in this region, right? In the Middle East and even in Africa. So, this conference has highlighted several African builders who are on the speaker list here, and I think it's worth pointing out that hey, there's more mobile phones in the world than there are bank accounts, right? So the opportunity is especially ripe right now. Even in the Africa region where the unique part is they're building tools. For example, sending Bitcoin without the internet, right? Like these are things that are the first questions of a lot of people in the West. It's like, oh, okay, how do I use it? Like, what's happening? But the barriers are being addressed and developed right here. In Africa, you have 54 countries and you have 46 currencies, which none of them talk to each other, right? So that's why we're seeing the uptick in Bitcoin, and same goes for the Middle East region. So it's clear that people in these regions need the tools, and I know all of our organizations are working on really moving this forward. But just closing thoughts, right? We have about a minute left. What are some of the barriers when you go and talk to people about Bitcoin, right, in the region, and go advocate for it, right? What are some of the barriers that you've seen, and how can people get involved in the work that you do? Starting with Roya.
I think that one of them is the misinformation and fear. Many of people are hearing the news about Bitcoin and trading and a scam that exists, so that makes most people to have a fear about to using the Bitcoin. I think that we needed to fight with the misinformation and giving the right information, created a community within each like a society that they can rely on the right information. And then obviously media is playing an important role on that. And then the second is that the third is the literacy of Bitcoins. So there is not enough education for the people to understand that. It's not only from young generation who tech savvy to knows about Bitcoin, but if you want women get involved, if you want to get your mother involved, you want to get your father involved, you want to get your kids involved, they needed to have a simple education in their own local language to know that simply how they have to save 12, like for example, their secret words, how they making sure about the password, and how they can using the wallet. So all this information are important that we can be available and teaching and touting the every category of the generation that they can be easy. And then the third is that many of the devices and the application that is created is mostly it's not in the localized and not simple as easy. So if I have an uncle in Afghanistan, he can't speak English, so he doesn't know. So he needed to have a simple, easy way to know how to to do that.
Faisal, closing thoughts. We're out of time, but I know the significance of this is just very, very important.
Yeah, I agree with everything Roger says. The second part is trust, really. Building those trusted networks in which the Bitcoin adaptability becomes pretty high, that people can find people that they trust, that they can convert to local currency if they need to. Ideally, there's adoption in most places, so in that way you usually don't need to off-ramp. But I think if we're able to have more adaptability and more trust between individuals on the subject, I think there is going to be a big solution to the region on that.
Yeah.
I think one more thing that I want to add, because we want to provide part of the education, people have to know that Bitcoin is not good for using daily because of the volatility of the prices, and people have to know that if they wanted to use a daily prices, it's good to use the stablecoin, and using Bitcoin as a saving value for overall time. So the time that we bought the Bitcoins was like $100 to $800, and today is 92,000. It's I don't know how much today, but it's in the long term, Bitcoin make a lot of the money. So it's good that people knows that the difference between the stablecoin and using the Bitcoin.
You've heard it here first, ladies and gentlemen. Bitcoin is freedom money. Pass it on. Let's get a round of applause for Royal and Faisal.
Thank you.
This way.
Fantastic. Thank you so much.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here winding down the day at Bitcoin MENA 2025, and I'm joined by two legends, the one and only Ramon Martinez, as well as Mike Peterson of Bitcoin Beach. Gentlemen, pleasure to be with you here. How's the day been so far?
It's amazing. It's great to be back here.
Love it, love it.
This,
yeah, we were here last year as well, right?
Yeah, this is our second year here, and
cool.
it's feel good to be here.
Love that. And you're coming from Mauritius, where you also hosted this Circular Bitcoin Summit. I want to get to that in a second, but I wanted to ask a bigger question. Bitcoin Beach starts as an experiment. Did you ever imagine in this short a time to see so many of these circular economies burgeon around the world? Did you imagine, was this sort of not only on your bingo card, but in this time frame? I'll start with you, Roman.
Definitely no.
Okay.
You know, but I think the most powerful thing that we saw in El Zonte is that if this technology works in our little beach, it's gonna work anywhere else, you know. And we just feel like honored that so many projects have been inspired and have been, they say, replicating what we did, but actually they want to replicate the fact that Bitcoin have been having in our community,
right.
you know?
Yeah. So it's a model, but they're also doing it their own way as well. They're adapting things their own way. Mike, your take, you're in touch with a lot of these communities, you're helping them out. What are you seeing that sort of, maybe some unique examples? What are some people maybe that are doing that's a little bit different than what you did that really seems to be working as well?
I love the fact that everybody has made it their own. And so we've seen some that have really gone after, like, hey, we want to onboard a bunch of merchants and have that drive. But we've seen others that really want to, like, drill down small. Hey, we're going to focus on, 40 kids in this community, like Bitcoin Akasi in South Africa. It's probably one of the smaller projects as far as the number of people involved, but one of the most impactful, and seeing these lives of these people change, like, so dramatically. Now we've been able to have several of the people that have come out of the project travel to these other conferences. Some of them were there in Mauritius. We've had them in El Salvador. And so for me, it's like seeing that impact. Because for us, like, the end goal isn't Bitcoin adoption. The end goal is for people's lives to be transformed. And so that's what it's all about.
Yeah, empowerment. We have Luthando Nabambi, who's been on the ground in Bitcoin Akazi onboarding shops. Last question. We do have to head back to the main stage in about 30 seconds, but I just want to put it out there. It has to be challenging, right? So you're not only cognitively sort of getting people to understand this, but there's an emotional component to talking about money with people. Any recommendations, maybe to anyone out there that's watching that's saying, hey, maybe I want to start a circular economy, maybe I want to onboard more people, any just small pieces of advice for them?
I challenge everyone that need to visit one Bitcoin circular economy, at least one in life, because if you're a Bitcoiner, if we get here and we want freedom, we need to use freedom, and it's there.
I love that.
And I would say to make sure that you're really investing yourself in the community. You're not just focused on trying to get them to adopt Bitcoin, but you're really trying to meet the needs and really understand what the needs of that community is.
And just as a quick backup, you were in El Zonte for years before you actually started working with Bitcoin in that community, right?
we actually brought Bitcoin into an ongoing operation that we had, and that's where we've seen the most success. Like Bitcoin Akasi is an example of that. They had for 10 years had already been working with the youth in that community, and when they brought Bitcoin in, they saw that kind of supercharge that project, because you've already built that trust and those relationships were hugely important.
Appreciate that. So yeah, if you're out there listening, if you're working for a nonprofit or you're working in a community that could potentially benefit from it, you have two people right here who have set a model for you. We're grateful to both of you for the work that you've done, and we are headed back over to the Falcon stage. So keep it with us. Over to the Falcon stage now. We'll be right back here at the live desk after this.
The Trump's administration's Bitcoin year in review. This fireside will be moderated by Tracy Hoyos Lopez, Chief of Staff Strategic Initiatives at Kraken. Give her a big hand. Be louder. And she will be joined by Paul Manafort, former campaign manager, Trump for President 2016. Give him a big hand as well. And be louder. The floor is yours.
Hello, everybody, and welcome. My name is Tracy Hoyos Lopez. I am the Chief of Staff of Strategic Initiatives at Kraken. And this is Paul Manafort. Hi, Paul. Welcome again to Abu Dhabi.
Thank you, Tracy. It's good to be here.
It's very good to be here. So we're going to talk about the Trump administration's year in review, but I do want to emphasize this. It hasn't been a year yet since Trump took office, and I want to emphasize that because everyone always gets a little crazy on, well, this hasn't been done or that has to be done, and the truth is, we're not even a year in. So let's start with this. At the very beginning of everything, so last year you and I took the stage and we talked a little about, the beginning of the movement, what got us into the door, which was you, with President Trump. So David Bailey led this movement of bringing Bitcoin to the president, and we changed the industry, really. We're able to stay in the United States. We're able to work now in our industry. But walk us through when this all started. I think it was back in February.
Right. It was February of last year, as the campaign was just getting into a pace where we were defining the differences between President Trump and President Biden. And as people in this room understand very clearly, the Biden administration was very much targeting the crypto industry and Bitcoin in particular, and going after pushing the industry offshore and trying to criminalize the activity. And Trump recognized the problems that the crypto industry was going through, and made the point to me in some early conversations that he understood this whole concept of the financial system in the United States trying to maintain their grip on control of banking and debanking those who didn't agree with them politically or philosophically. And in fact, he had experienced in the lawfare that he was experiencing with the Biden administration going after him criminally, the problems of debanking, and felt that if they can do it to me, they could do it to anybody, and people would have a hard time. So when we raised the issue of trying to bring the crypto industry onshore, he was very receptive. And David Bailey was one of the critical early people we brought in to talk with him and explain to him the details of it, which he immediately got. And after the first roundtable we had with him, he was all in. And in fact, we were putting together the framework for him announcing his commitment to Bitcoin when he was doing an event in Mar-a-Lago. And while I was in Washington in a meeting, I got a phone call saying President Trump just announced that he's for bringing crypto onshore. And he got ahead of us a little bit because he wanted to get the message out. He was so excited. And he spent the whole campaign really getting more and more involved in what the issues were. And right after his convention in August, when he was nominated, he came to Nashville, spoke at the Bitcoin conference, and laid out a 10-point plan that he wanted to implement as president. And that 10-point plan is in the process now of becoming the law in the United States, and the new financial framework to create alternatives to the traditional banking system.
So I have to say, I'm not a fan of politicians, but I love President Trump because he's like the anti-politician. And the one thing I love the most about him, of course, is the fact that what he promises on the campaign trail, he follows through with.
Well, not only that, he makes his staff give him a weekly update on his key campaign promises of where the administration is now on what's going on. And in his inaugural speech on January 20th, he basically committed in the speech to bringing crypto into the financial system, and that he was going to do that. And on January 23rd, 3 days into office, he issued his first executive order, where he basically said that crypto is now a part of our financial system, and we're going to, through executive orders, he began to bring on board the concept of self-custody, the warnings to the banking system of not penalizing people who wanted to have non-traditional means of financial transactions. That was 2-3 days into office. And then it's been a steady stream ever since then of executive orders that basically in July culminated with the Genius Act and several other pieces of financial legislation, where the Congress, under the direction of President Trump, adopted a lot of his executive order fiats on how crypto was now going to be viewed as as an alternative, but still be part of our economic system. He created a digital Fort Knox, as he called it.
Yeah, let's go through Trump's promises. Let's see. So we've got, so it was the end of Biden's war on crypto. That was around January 23rd. That was the executive order that he signed.
Right.
And they declared it. The war on crypto is over. In fact, Caroline Levitt consistently repeats and reminds us that the war on crypto is over. Then we've got the support for self-custody and rejecting Elizabeth Warren, and that was also on the January 23rd executive order, and which is, it backs private wallets, and there's no statute yet, but that's in progress. Now, fire Gary Gensler, that was, I mean, that got the biggest cheer at the Bitcoin conference. I think he said it twice because he got such a cheer that he wanted to hear the cheer again.
One of the most important things he wanted to do when he took office was to get rid of Gensler and to bring somebody in who understood the dictate of the new administration, which was going to be to accommodate the creation of a digital currency framework, which is what we're in the process of doing right now. But he makes us go through his campaign list of promises, which I think you have up a number of them on the board, almost every week. Almost every week.
So then we got Paul Akins in Gensler's position, right, as SEC chair. And so the crypto crusade has ended, and now we're moving to a regulatory place in which it's much more amicable, and we're figuring things out together, right? The industry and the regulators are working together to build basically the financial infrastructure of the future. Thanks to the president, of course. Then, of course,
that's an important point to understand. He is building a new framework. And the fight's not over. I mean, the banks are still out there doing what they can to throw wrenches into the system. Although, you know, in July, Trump sent a warning across the banking industry, saying that he was going to be instructing the DOJ to look at discriminatory banking practices for those people who want to do self-custody, and he wanted legal actions taken if any of the banks, no matter how big, were doing that. 2 days after he made that announcement, Jamie Dimon had a press conference where he said he's now a believer in stable coins, and he now believes that it's the wave of the future, and he's committing J.P. Morgan to a course where they will be using stable coins and cryptocurrencies to facilitate financial transactions. Now,
well, what's funny about that is that at the same time, Jack Mallers got debanked by J.P. Morgan.
Yeah. So they get the joke, but at the same time, they're still playing games, because in the United States, for those of you who don't know, I mean, we have 50 states. 50 states have their own regulatory structures.
So let's go through. So, okay, so we've got Ross Ulbricht, huge news, right? Ross got pardoned, and that's massive because Ross is, for lack of a better way of explaining it, the godfather of Bitcoin. I mean, he gave us the first use cases of Bitcoin through Silk Road. So that was a really big move, and also that did give the industry a lot of faith in him, because nobody ever thought that Ross would be able to get out of prison. I mean, I know his mother certainly fought against it, and they, you know, with everything, but.
Well, what people who didn't know Trump are starting to understand that when he commits to something, he's already thought about it, and if he says he's going to do something, he does it, and that the Ross situation was a prime example of that.
And then we got a Bitcoin Advisory Council, which is, you know, Bitcoin and crypto. So we've got David Sachs, who's been doing an amazing job at advocating on behalf of the industry, making sure that we stay on track for market structure. We've got the end of Operation Choke 2.0, sorry, which of course, we're not fully out of the weeds, but at least not everyone is getting debanked at the
well, again,
level that it was
it's a
before.
process, and as you said in your opening comment, it's less than a year. I mean,
it's true.
And we're just building a whole infrastructure in less than a year. And while the people in this room are probably very knowledgeable about the industry, people in Washington are not, and they may be legislators, but they don't understand. They've not understood digital currencies. They've not understood Bitcoin. All of the attacks on the industry they've accepted because they know nothing different. And yet at the same time, Trump has made it clear to the leadership in the Congress, who are also Republicans, that this isn't something that's debatable. We're going to do it. And the Genius Act, was passed in July. That was record time, for something that substantial. And I dare say there are a number of people who voted for it, didn't understand what they were voting for, but at the same time they understood that it was going to be something that was going to deal with a real problem with the financial system in the United States, debanking and the controls that that institutions have over our whole monetary flow.
Well, that, and for us, at least Americans in the United States, one of the biggest things also for us was to stop the whole CBDC movement, which was very big. It is yet to become law, but the president did enact an executive order to make sure that we're not monitored and basically just the big brother isn't constantly following people by utilizing a CBDC. So that was very big. He established a strategic Bitcoin reserve. I'd like to just make a note here because I was researching on the promises and I wanted to make sure that I had accurate information on this. So the Biden administration, the United States used to hold about 200,000 Bitcoin, and when Trump announced that he was promising to build the strategic Bitcoin reserve, the Biden administration went and they sold 195,000 Bitcoin. So we don't really know what the US has anymore, but I know that the president, aside from the criticism of not filling the Bitcoin reserve, we're not even a year into the administration, but at least the strategic Bitcoin reserve, the Fort Knox, is formed to be utilized.
What you do know is he said, one, we're creating a digital Fort Knox, as he called it. Two, that government is going to buy Bitcoin. And three, he said, we're not going to sell it. We're going to keep it. So his point was the way the system treats gold, he was going to treat crypto, starting with Bitcoin. And that's had a real effect, talking to some people at this conference, in the way other countries are looking at crypto now as a legitimate means, and Bitcoin as a real fiat, real currency for transactional purposes.
So then we have, okay, I love this one. So the Bitcoin, the mining powerhouse. So this is really interesting. So Ted Cruz, this is in progress, right? So Trump said that he wants to make all the Bitcoin that is mined moving forward from his presidency on to be mined in the United States.
Right.
And Ted Cruz got the FLAIR Act, which is super interesting because so basically it amends the US tax code so that any companies that are installing equipment to capture the natural gas while oil drilling is happening, well, they can deduct that and all of the infrastructure. So it's definitely setting the stage for mining in the United States. Of course, Texas at the heart of it.
Yeah, he said to me one time, he said, look, if this is a serious industry, why are we pushing it offshore? If we think there are issues, why don't we bring it onshore? Why don't we institutionalize it, understand it better, make it work for the purposes of which it can work, and not try and criminalize the use of something that can be a constructive economic force. And as a businessman, he understood that. I mean, having worked with a number of presidents in my lifetime, there was an understanding of economic policy, but it was more of a political understanding of economic policy. Trump has a businessman's understanding of economic policy. He understands how businesses are affected by, the strong arm of the banking system if you're not part of the inside club, and felt the trauma of it when they were debanking him during his criminal cases. So to him, it made sense to bring the industry onshore, not just accept it, but to bring it onshore, institutionalize it, have all the pieces become part of our economic fabric. And 11 months into it now, it's already has roots in the system and is starting to blossom.
Then he accepted Bitcoin and crypto in his campaign. That was thanks to you, of course, and you were alluding to that when you found out that the event at Mar-a-Lago announced that. Yeah. I remember when David and I were freaking out about it, and you're like, yeah, this is what we've been working on this entire time. So that was like a huge milestone for us, just so you know. then the clear rules for digital assets and stablecoins, as you mentioned, Genius Act passed. We're now working on market structure. Market structure is very important because it will give us a lay of the land in one framework.
What the Genius Act and the legislation that passed did is it codified into law the executive orders, and it set up the framework that now has to be filled in of the administrative process, which are the rules of the game. And as I was saying a few minutes ago, because the United States has 50 states that have their own economic systems and their own economic laws, what it's allowed the banks to do, the banking industry to do, is if they can't win in Washington, you go to the state capitals, you go to New York, you go to California, and you make it complicated for the crypto and digital industries to survive in the local.
And we're seeing it. We're seeing that in the blue states, right, the predominantly Democratic states, are again trying to wage this war because they can't do it any longer at the federal level, so they're taking it at the state level. So is this, let me ask you, is this more political or is this more on the banking side of things?
Well, it's both. I mean, and the banks are taking care of the political, using the political process to try and win at the state level what they can't win at the national level, but the national level will preempt the states on these kinds of issues if done the right way, and that's what, you know, the structural issues that are being discussed now, that's the next phase in the regulatory process and the administrative law that's going on now is all meant to build out a dense fabric in Washington that will guide the states as well. And if the states challenge that, Washington will go to the courts to make sure that they can't thwart the initiatives that are being developed, but it's still a war, and the banks, you know, may say yes on this side, but they're working to still preserve their monopoly on the other side. We're aware of the game. We see it happening, and people in this conference, David, among others, David Bailey has been an advocate and a successful advocate in Washington of convincing, educating people as to the why for what they've already said we're going to do.
Now, the president certainly had one main goal, and that goal has been to make the United States the Bitcoin and crypto capital of the world. We're definitely on our way there. What do you think we have to look forward to in this next year?
Well, I think you're going to see what we've been putting together start to blossom. It's going to get easier. You're going to see the world responding now, seeing that this is not just a fad in the United States, but it's something that's taking root, and it's going to open up, and I've talked to a number of countries on this, it's going to open up their eyes to the values of using digital currencies and the value of using Bitcoin for transactions. So I think, you know, everything's going to be out in the open now, and it's in the open. It's going to make things a lot more manageable for people like you and people like what you're trying to do with the Bitcoin in conferences, because it's no longer just a group of people that are not part of the system. It's now the system. It's part of the system, and I think in 2026 you're going to see that framework get deepened and broadened and more understood, and you'll see the banks fighting back as well. But that's nothing that we're worried about. We think we can deal with that. As Trump has already said, as I referenced a minute ago, if necessary, he will use the power of the Department of Justice against the banks if they try and discriminate against private custody or wallets that are part of the cryptocurrency environment. So.
Well, one thing is for sure, Donald Trump is our Bitcoin and crypto president, and he has unlocked a framework that has absolutely not only changed the industry, but it has changed the world. Thank you so much, ladies and gentlemen. Have an amazing day.
Thank you.
Thank you so much, Tracy. Thank you so much, Paul, for sharing so many exciting crypto developments that have been happening in the US for the last year. Thank you so much. And As always, by the way, if you have time, I believe the audience will have questions for you behind the scenes. So thank you once again. Once again, give them a big hand. And our next speaker, unfortunately, was Simon Dixon, CEO and co-founder at banktothefuture.com. Unfortunately, he couldn't be present here, but he has recorded for us a special message, so please enjoy.
Assalamu alaikum, Bitcoin MENA. Today, I'm going to be sharing a topic that is near and dear to my heart on achieving peace in the Middle East, from proof of weapons to proof of work. If we haven't met already, my name is Simon Dixon. I wrote the first published book in the world to include Bitcoin in 2011, spoke at the first Bitcoin conference in Europe when the price of Bitcoin crashed from $30 to $3. I founded a company called Bank to the Future, and we essentially funded many of the largest companies in Bitcoin, from Coinbase, from Kraken, Bitfinex, Circle, Robinhood, Blockchain.com, and many others, Exodus as well. I've been a part of the anti-war movement. The first podcast I gave was called On the Bitcoin Not Bombs podcast, and also part of the monetary reform movement. I've been sharing this concept of proof of weapons. It is really obviously came from the concept of proof of work. And I'd like to share it with you briefly. And then I'm going to go through how this relates to achieving peace in the Middle East, and a very important message around crypto versus Bitcoin and the radically different direction that this could go based upon current research and the current geopolitical environment. So let's dive right in. So what is the proof of weapons network? So it was a term that I coined in order to help people understand how fiat currency works. It's backed by weaponizing various factions of power. You have the financial industrial complex, whether that be the large asset managers, the investment bank, the retail banks that create fiat currency every time they issue a loan, the private equity industry, the venture capital industry. It creates a complex which is able to weaponize finance in order to subordinate countries through organizations like the IMF, corporations through public companies, through the equity capital markets and the debt capital markets, and also individuals through bank loans, whether that be student loans, auto loans, or mortgages are the most common. That's the financial industrial complex. We also have a technical industrial complex. These are essentially the algorithms, the artificial intelligence, the surveillance, the digital IDs, everything that is being built within these large monopolies that are building vast data centers and different types of technologies, you know, whether that be the Googles, the Amazons, the Baidus, and everything else. You also have the military industrial complex. You know, this is the Lockheed Martins, the General Dynamics, the Raytheons, which, you know, are originally, you know, manufacturing weaponry, but also more recently, cybersecurity and artificial intelligence. And many of these factions of power have crossed over. Now, we are in a radically changing time, and the Middle East is really in the center of that, because we've been in this post-World War II Bretton Woods world order, which set the monetary policy and the fiat currency model that came from the British Empire and was handed over to the American Empire, from the Bank of England over to the Federal Reserve. But recently, things have changed. Trump administration 1.0 made America energy independent. That now means that rather than needing energy, oil, and liquefied natural gas, LNG, from the Middle East, America is now a competitor to the Gulf countries. And the Gulf countries have unified around the Gulf Cooperation Council, the GCC, and the biggest customer of the GCC now is not selling oil and energy to America. It is selling energy and oil to China. And so we have had a radically, you know, changing time based upon these energy dynamics. And in the proof of weapons network, where energy flows, change comes. And I'm not sure whether most people have thought about this. And that has led to a radically changing geopolitical environment. While historically, the proof of weapons network has used the forever war model to destabilize the Middle East, and using divide and conquer strategies has been able to stop the Middle East unifying around their resources and entering into relative stability. And that's not been the case ever since, the Sykes-Picot split, when the British Empire and the French Empire split up the Middle East, and then it moved over to the American Empire and the post-Bretton Woods II model that culminated in the petrodollar. But now we have hit this phase. Now, because we have had a rising power to the east, which is China, and the Gulf countries has cooperated with regional blocs in the east, BRICS, we had normalization through China between Iran and Saudi Arabia, which have always been on the other sides of divide and conquer strategies. Now, this has always been military industrial complex aligned destabilization campaigns. And obviously, Israel has been the center of that as a US ally and somebody that is aligned with the US military industrial complex in propagating this forever war model. But what has changed now is that essentially, through these military industrial complex forever wars that have backed up the dollar and the proof of weapons network, it created an alternative power that came from the Federal Reserve in the shareholders of the Federal Reserve. And those shareholders, of course, are the banks. The banks created investment banks and obviously the investment asset management industry as well. But in this change, the financial industrial complex has aligned with the Gulf Cooperation Council countries, the GCC. Why has that happened? Well, because if you look at every co-investment deal that's happening right now, it is essentially the financial industrial complex, let's call them the FIC, and the GCC. Because the GCC, using their energy, build up vast sovereign wealth. And that has changed the order. And we are going through this radical change as we speak, which brings a very interesting partnership that emerged that I'd like to understand in determining how to achieve peace in the Middle East when we transition from proof of weapons to proof of work. Well, the financial industrial complex and the technical industrial complex has emerged into integrating into a multipolar world order. You'll notice that global finance is strategically weakening the dollar when you look at all the different trends right now, because the biggest push towards multipolarity is not just China and BRICS, it's actually the Western FIC, the financial industrial complex. And you can see that in breaking the petrodollar, breaking the euro-dollar, and breaking the Japan carry trade. These are all major campaigns to strategically weaken the dollar, change capital outflows. And I believe that this is because America is now subordinate to the FIC, and the FIC has partnered with the GCC in negotiating regional stability. And so this is really the one piece of research that came out just this week that I'd like to share that kind of goes along with my theory is that media is also weaponized by this proof of weapons network. And there was a media piece that recently came out, and it was by the Carnegie Endowment for International Peace. Now, the Carnegie Endowment for International Peace is historically funded by Rockefeller's financial industrial complex key nodes. But what was the advice and guidance? Now, this is US financial industrial complex funded think tanks, which set policy through their publications. It was recommending that the GCC should build digital asset rails that are compatible with BRICS. So it's asking the GCC to focus on its technical integration into BRICS. Now, as I said, the Carnegie, any of these think tanks, they're deeply integrated into the FIC. This is the banks, this is funds. This is kind of technical led as well. So into the ticks, whether it be AI, digital ID, data centers, surveillance, all the different things that are part of the tick agendas right now. And so when a US bank tells the GCC to build into multipolar systems and to align their economies with China, Russia, and BRICS in a multipolar world, and they suggest that the tool for doing that is non-dollar denominated stablecoins, this is an indication that the FIC is actually actively pushing the world towards this multipolarity and changing the capital flows. And this is a real change in the monetary order that we are witnessing right now. So what happens with the financial industrial complex? So historically, the FIC profits from both sides of a war, whether it's regional stability or whether it is the forever war model. And so in both sides, they can profit because you have the forever war, which requires financing, and the rebuild, which requires financing, and an integration with the technical industrial complex. And so historically, the Middle East has always been on the wrong side of the proof of weapons network. But I believe now the military industrial complex is negotiating its exit and is being led by the financial industrial complex. And this is because the FIC is essentially found that the profits from the rebuild and technical integration is much greater than continuing the forever war model, which is why we're seeing radical change at the moment. That's happening because Gulf sovereign wealth have essentially been negotiating these deals. There's been, negotiations of energy routes, and this is all because there was normalization between Iran and Saudi Arabia, and all of these different trade corridors as a result of BRICS are being unlocked and moving the world to regional stability. So, historically, the model has been that the technical industrial complex in these negotiations can embed themselves through what we're seeing now, which is artificial intelligence governance, digital IDs, central bank digital currencies, programmable finance, and really data-driven infrastructure as a result of this crypto trends that are emerging. Now, the GCC must essentially own their own data centers. And we're seeing that because when the Gulf countries have been investing in the West and purchasing assets within America, it has been doing foreign direct investment. So when the Gulf countries are investing in America, when, recently Saudi came to the White House and said, we'll invest $1 trillion, it was followed up by NVIDIA agreeing to build data centers across the Middle East and give access to chips. And this is what foreign direct investment is. It's like a reversal of the IMF model. The IMF has been subordinating the Middle East historically. China's Belt and Road Initiative has been rebuilding, and the Gulf countries are using their sovereign wealth funds. And so you've got the purchasing of assets in America at the same time as the GCC and America both being energy and gas exporters. And so really, this is the leverage that I believe the FIC has been pushing, and why we're getting this, MIC proxy Israel and the instability campaigns coming towards an end. What I think we're seeing from here is that proof of weapons network, if they could get their way, they'd go through 3 cycles, which is the military, the MIC basically manufactures instability, but now the FIC and the TIC profit from the rebuild, and they're pushing through this Carnegie type of consultation and think tanks that the Gulf countries should be focused on tokenization, artificial intelligence, identity system, digital rails, stable coins, and central bank digital currency. Because in the third phase, nations either become dependent or independent unless they do it with their own data centers and their own infrastructure. And this is what I believe that we're witnessing right now. So tokenization kind of appears in many of the rebuild plans that we're looking at. I studied the Gaza rebuild plan. Now, on the financial industrial complex side, it was talking about deep integration and tokenization as the proposal. Now, Trump came along and put together the 20-point plan that was the 21-point plan, but the original plan was really about tokenization, which gives soft forms of digital colonization. But the GCC have been fighting back with hosting the data centers in order to remain sovereign. And I believe this is the tension that we're witnessing right now. Now, what I want to point out as the final part of this presentation, that it is in building Bitcoin strategic reserves and utilizing energy that you're able to combat some of this crypto tokenization and really digital colonization. And this is where I think people should really be focused in terms of countries. Because if you are a country that is recovering from a war zone, which I believe we will be seeing in Gaza, because Saudi said that there is going to be no Abraham Accords or normalization with Israel unless there is a Palestinian state, then I believe many of those rails are being built right now. And as long as they remain on their own data centers, as well as understanding some of this crypto infrastructure, then countries are able to take some of these negotiated cash flows in the rebuild and make sure that they are tied to Bitcoin sovereign wealth funds for each of the countries. And it is being able to have cash flows connected to Bitcoin sovereign wealth that we're able to ensure that these countries are able to reverse colonize rather than being subordinate. Now, Bitcoin obviously encompasses energy and energy revenues and cash flows, remittances, and some of the diaspora wealth that comes back in. This really comes into either a crypto play or a Bitcoin play. And I put it to you that Bitcoin is the only mechanism for providing the monetary sovereignty in order to really usher in this prosperity that can be built. So all of the war-torn countries, they can use sovereign Bitcoin wealth, and they can have their own independent FIC and TIC rails rather than falling for what is being recommended, which is the subordination through digital infrastructure. This gives the countries the ability to eventually, as Bitcoin is a fixed supply, escape some of the debt traps, increase the economic base so that it cannot be weaponized against them through some of these digital rails. And Bitcoin is the only way to have full digital autonomy within a sovereign wealth structure during these reconstruction phases. Because Bitcoin versus crypto is essentially the next 30 years that will determine whether these are subordinate structures for the financial industrial complex and the technical industrial complex, and we have neo-colonialism through digital rails, or there is sovereign wealth. Because Bitcoin has a fixed supply, they can own it in self-custody, and as long as they own it in self-custody, it allows them to build that sovereign wealth and use it as a national resistance in negotiating away from, these colonization military industrial complex, and free themselves from the proof of weapons network in these post reconstructing rebuilding. Crypto, central bank digital currencies, tokenized assets, if they are not set up correctly, they could be a tool for subordination. They're programmable. They can be shaped based upon foreign interference. And it can be built for surveillance and compliance based upon foreign data centers. This is why I believe that we're seeing this enhanced negotiations right now, because this alliance between the FIC and the TIC and the GCC is ensuring that the data centers, and that is the asset of the future, connected to energy, is what we're seeing right now. And so you can either increase dependency through crypto rails, and crypto plus AI is essentially institutional power, or you can use Bitcoin for national sovereignty. And I believe that we are witnessing the end of the US-Israel destabilization campaign and model, and this is going to be moving over to independent sovereign data centers, Bitcoin mining, and Bitcoin strategic reserves. And so stability is really dependent upon getting this crypto versus Bitcoin right and getting these negotiations right, because the GCC needs to host the infrastructure. I think that the foreign direct investment needs to put the cash flows into these sovereign wealth funds. And if you're Gaza, if you're Syria, if you're Iraq, you're Lebanon, you're Yemen, then all of the rebuilding needs to be done with Gulf investment. It will involve some FIC, co-investment, but the Bitcoin Sovereign Wealth Fund and the Bitcoin Strategic Reserves is the only path to a sovereign and really changing this. I think we're going to see the announcement of Saudi nuclear energy programs. I believe that because Iran and UAE and Egypt have also joined the BRICS corridors, and because China is going through this normalization phase that we're witnessing right now, currency competition and currency war is going to be what we're seeing. And the more and more we see as we move away from currency competition, away from global hegemon and US dollar dominance, the Middle East can essentially sit between these regional powers of China, regional sovereignty with BRICS, and America that is moving more towards a regional power. And Bitcoin sovereign wealth and Bitcoin strategic reserves, combined with Bitcoin mining, artificial intelligence data centers, cheap energy, tax neutrality, is really the opportunity of a lifetime to sit between these powers. And I think that's going to have a knock-on effect on the global south, on the MENA, on the Middle Eastern, North African rails. And I think that Bitcoin will thrive in multipolarity, which will be supporting those Bitcoin strategic reserves in this era. And so that is what I want to leave you with. And that is how proof of weapons can transition to proof of work. And we can usher in an era of regional stability in the Middle East, where everybody in this multipolar world is using their own currencies, and Bitcoin becomes the strategic multipolar world asset of the future. I hope you enjoyed that. And I'm sorry that I couldn't be here in person. I wanted to be, but unfortunately I had some family things to attend to. And I will see you, and I hope you enjoy the conference. Thank you. Assalamu alaikum.
Welcome back to the Bitcoin Magazine News Desk, presented by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left here by Chris, the head of PR at BTC Inc., the one and only Maurizio Grazioli. How you doing, everybody over here? And then F.A., the Crypto Kid. We are winding down the day here at the first day of Bitcoin MENA 2025. It's been a fantastic day thus far. We were just talking off camera a little bit about some of the great talks here, but also about the changing landscape of media, especially Bitcoin media, right? We're seeing people like Natalie Brunell now have podcasts that are as popular as some of the Wall Street Journal podcasts. And at the same time, we're seeing people like Dylan LeClaire of Metaplanet pop up in mainstream media doing interviews with people. Things are sort of changing. What does this landscape look like? Where does Bitcoin media go? And do Bitcoin people, should we be talking about broader topics? Should we be getting off just Bitcoin stories and just Bitcoin focused things? Do Bitcoiners want to hear about other topics from Bitcoiners? I'm going to start with you down there, Mr. F.A. Your thoughts?
Well, I think there was a pivotal moment in the 2024 elections. All of a sudden, politics became a major topic because we had a lot of funding from crypto companies and crypto people lobbying the government for pro-legislation, and it was time we entered the political scene. And honestly, I mean, I've studied politics at school, but from an industry perspective, I was never highlighting politics one bit in my sort of videos, because I do videos for a living. We do breaking news, technical analysis, and until about 2024, there was no discussion of political involvement in crypto. So I think as the industry sort of expands and gets bigger and reaches a much bigger audience, then there are broader topics to include.
To include into the analysis. I don't mean to cut you off.
Please.
I did hear we do have to cut back in about 2 minutes. I want to give everybody a minute there, but I appreciate.
No
I think, yeah, some of these things are naturally becoming a part of the conversation. Maurizio, over to you.
I agree. I think there's a crossover between between decentralization and money, but everything else in between, right? I think we've seen decentralized medicine, decentralized information, decentralized everything. It's like a sticker you put on things.
Let's go.
And they're going to meet somewhere in between. So exciting times.
The decentralization of everything. Chris, over to you.
Yeah, I think who else is better positioned than Bitcoiner to speak about Bitcoin and politics and all the regulation. Bitcoiners have different point of view and different point of view on everything. So I'm really interested in seeing more Bitcoiners speaking to everything else.
Yeah, I want to stop on that point for a second, though, and everyone can feel free to comment on this. But so yeah, Bitcoiners, this isn't apolitical money. It's an apolitical movement in a way, and I think a lot of people, they might be excited to see Trump in the White House, but not necessarily consider themselves to be a Republican. I noticed a lot of this when I was out on the campaign trail. Are people hungry for that? Are there more independents out there than we realize?
I think it's more about the point of view than specific politics or political party. It's more of pointing out the things that are not working in current system.
Okay, I think that's true. I just got word that we're ready to go back to the main stage. So, ladies and gentlemen, we're headed over to the Falcon stage, but stick with us. We're coming right back here at the live desk after this.
Last but not least, Eric Hirschman, CEO at Gridless. Give them a big hand and be louder. The floor is yours.
Thank you. Thank you. All right, everybody. Welcome, welcome, welcome. Marhaba, assalamu alaikum. All right, today I have a very important panel. We are going to discuss one of the most important pieces to me of the Bitcoin future. And here I have two esteemed individuals. I'll allow Eric here to share a little bit about himself, and then Stafford.
Yeah, my name is Eric Hirschman. I'm the CEO of Gridless. I think the way to think about what we do is we make off-grid energy profitable in Africa by putting Bitcoin mining on stranded power. We're in a couple countries now, Kenya, Malawi, Zambia. We have a couple more countries coming online in the next couple months. And I think the takeaway from this is that when you can stop looking at Bitcoin mining as just a way to stack Bitcoin, which is great, but also as a way to finance new energy infrastructure, it becomes super interesting on two levels. So.
Stafford?
Yeah, so I'm the executive chairman of a company called the Africa Bitcoin Corporation. We are a publicly traded company on the Johannesburg Stock Exchange, and what makes us very different from the traditional treasury companies is that we're not just focused on Bitcoin yield, we focused on human yield. So we've taken a private capital engine and we've galvanized it with Bitcoin that allows us to lend fiat money at low interest rates and then deploy that into Africa to black female SMMEs that establishes jobs. So as much as we measure BTC yield, we love to say that we measure human yield. And for us, 1 Bitcoin at the moment represents 5 African jobs in Africa. So the more and more Bitcoin we can raise, the deeper impact we can have on a human level on our continent. So we're very driven by that.
Beautifully said, beautifully said. So, Africa is often mentioned from behind. We need to get adoption into Bitcoin, into Africa through Bitcoin. I'm curious to know what your take is on that. Stafford, we'll start with you first, but just to elaborate, what makes Africa uniquely aligned for Bitcoin? Because on my end, I would argue that the use cases for Bitcoin already exist and are much more apparent. Please.
Yeah, the reason Bitcoin was built are the challenges that we face on a day-to-day basis accentuated in Africa. When I come to Bitcoin conferences, I always hear keynotes and I hear about debasement of 2 to 3% over 5 years, over 8 years. Where we come from, debasement of 2 to 3% happens in an afternoon. Right? So when you live in a world where the money debases at that rate of change, number one. Number two is you live in a world where the general can take away your title deed, where the relationship of your president to the American president could impact your economic situation. When something comes along that represents sovereignty, immutability, frictionless, those core attributes, the basic attributes of Bitcoin for an African is understood within 2 to 3 minutes. I find that my American friends, my European friends that I try to orange pill, it takes them a year or two. When we walk around in South Africa, in the townships where I grew up, I talk to someone about Bitcoin, they get it in 2 to 3 minutes. They get it. So we always say this, Bitcoin was made for us, right? It wasn't really made for the number go up, number go down, folks. It was made for us. From its economic monetary value and its attributes there, all the way through the proof of work protocol. In terms of stabilization of our grids, unlocking renewable energy, representing new forms of opportunities for us. So, you know, if you take a look at AI, and you take a look at pristine capital, and you combine that with the intellectual capital that we have latent on our continent, I mean, you know, we got 1.4 billion people. You know, the average age is 19 and a half. More than 60% of them are below the age of 25. You combine that latent human potential with artificial cognition and proof of work and pristine capital, this is finally where Africa rises. We've always said Africa was coming, it's rising. Well, it's happening. It's happening on the African continent. And people are utilizing Bitcoin as a medium of exchange already. We've got circular economies where people treat it as a unit of account already. So you folks talk about this happening, come to Africa, it's personified already on our streets.
Amazing. Shout out Bitcoin Akasi as well.
Yeah.
Eric, same question.
Yeah, I mean, I think, you know, it's interesting. As Stafford was talking, I was thinking about a year and a half ago in Malawi, we have one of our sites running, and the currency was devalued by 44% overnight. So people who were sitting on Malawi kwacha all of a sudden could buy 44% less than they could the day before, right? So stores had to shut down to reprice things. Air companies shut down to reprice things. That kind of thing happens enough in multiple countries that it's a problem. So it's very easy for Africans to understand, where can I put my money that it's safer, right? Now, and just to pick on Malawi a little bit, you can't have a dollar account. Most people don't have bank accounts anyway. If you have 85% of a population, maybe 90% without bank accounts, on top of that you have the inability to have it in even something a little more stable like the dollar, then all of a sudden you realize that Bitcoin is a very, very interesting and a great vehicle to be in. One last thing is that Afrobit Kibera is one of the most interesting circular economies I've seen, and it's in the slum. And you say, well, how does it actually work? There's 65 businesses who accept Bitcoin. Blink Wallet is like the primary wallet used. And you'll see people walking up and paying for their vegetables, ladies paying for their vegetables with it daily, all the time. Like, it's just happening. It's not staged, people are just doing it. And I think that's the interesting thing. You're saying, what happens, adoption happens sometimes really slowly, but when it happens and when it kicks in, it spreads really fast, like a wildfire across these communities.
Amazing. So Eric, your company Gridless is finding stranded and wasted energy and then turning that into productive infrastructure. Talk about the reality of this type of business and maybe things that people don't necessarily understand about what you're trying to accomplish and do.
Okay, so let me start with Gridless is a venture-backed, profitable company. That's what we do. It's going to sound like I'm talking like an NGO, so I want to preface it with that first. So imagine, if you will, you're sitting in a village somewhere and you don't have any electricity. We don't think about this on our day-to-day lives very often because we're used to Wi-Fi always being on, being able to turn on an air conditioning or a refrigerator, all these kind of things. In their world, it's a little different. Imagine that you can't do irrigation in your fields because you don't have a pump because you don't have electricity, right? Number two, so your yields are less. Number two, you can't go 200, 500 meters down the road to a grain mill to mill your grain. You actually have to pay somebody on a motorcycle to take your bag of grain 15 kilometers to the next town over just to mill your grain, right? So all of a sudden, energy comes into your life. What changes? Well, all of a sudden, you're super happy. You're walking 200 meters down the dirt road and you can mill your grain. You've got irrigation, higher yields. You've got more security because there's more lights out at night. Your kids can study at night without paraffin fumes, messing up their lungs. The local clinic can now have lights on at night for when people are having babies or when you need to keep the medicine cold. All these things happen that are downstream of energy, right? So what we're doing with Bitcoin, and Bitcoin mining specifically, is creating an enabler for energy to happen in the places that need it most. And we make money, they have inexpensive electricity, and the power company is finally profitable. That's what happens.
Amazing.
So my family in Nigeria, we actually grew up with this issue. My mother would often talk about having to warm our clothes on gas pipelines. So we have these flared sites which people are effectively venting gas right into the atmosphere, and it's very harmful for all the people that live nearby. But it becomes reality when somebody you love is then utilizing a gas pipeline to warm their clothes or to cook indomie, without going to there before, but to cook and to take care of themselves, right? So the propositions that you have is, well, let's turn something which was emitting gas and likely leaking into something which is productive and a powerful asset and used for energy.
Well, just real quick, Russell, on that, like anybody who knows about the gas flaring and mining off of that, Nigeria is becoming a real node in that global network now because of that gas flaring. There's 40 and 60 and 100 megawatt deals happening all the time now.
Which is absolutely amazing, and a testament to the innovation which exists when you attach yourself to the Bitcoin network. Stafford, can you talk about the average villager, right, in terms of like how they interact with energy, right? Because we're talking about energy being a stabilizing force, but I think energy can likely equate to growth in civilization.
Yeah, I mean, I think we always talk about like Bitcoin being the battery for AI. I think it was Mark Moss said this. He says, AI generates economic energy. Bitcoin gives you the ability to take your time and energy and to store it somewhere. And I think the biggest challenge for an African villager is, where do I store my time and energy, where it cannot be taken away, it cannot be debased, where I can send it anywhere that I want to send it. Remittances is a big challenge. Where I grew up, people just don't comprehend how money works in African townships. The way time and energy is stored today is in fiat. And the informal economy in South Africa is 20 to 30 times the size of the formal economy, and growing. But when we say informal, we always think about that as something that is not structured, etc. It's highly sophisticated, highly structured. When I grew up and I needed money, at 11 o'clock at night, my dad would send me over to a lady called Madums. I'd knock on a window would open up, and I'd say, my dad wants 100 rand. She'd give me 100 rand. At the back of her, when I looked over her shoulder, were mounds of money. Headache tablets, soap, shampoo, alcohol, and that I could get at 11. An ATM when I grew up was a human being. A bank was a human being. And that was sophisticated. No one touched their money. The community was well structured. She provided loans. She provided funeral cover relative to that. What we see as an opportunity is to unlock that informal economy and digitize it and orange pill it into the Bitcoin world. When you go into that woman's life that owns that shebeen or that stokvel, who builds physical houses to put her money into. But people don't understand it. She's not building a house to invest her money in. She's building a house to physically put her money into the house, because she doesn't put her money into a bank. Right? So what we're doing is we're going into that world, providing loans so she can get more sophistication and draw more of that capital into Bitcoin. And when she does that, her life changes. Everything changes. Right? And that's the economic opportunity, I think, across Africa that lays dormant and latent today.
Very wonderfully said. And I want to hear you unpack the concept of Africa mostly being in a series of different informal markets. I'm curious whether you think people will begin to adopt Bitcoin proactively, or will it be a function of economic pressure?
I think a bit of both. I think what Eric said is it becomes this network effect. It just suddenly happens when it just happens. And what we're seeing in South Africa today, I think before Square made its announcement, I believe South Africa was the place that had more merchants accepting Bitcoin than anywhere else in the world. I think we hit 750,000 merchants. And that keeps growing. So, when you've got a population that's so young, average age 19, they don't care about shiny yellow metal, right? They've seen the 2008 financial crisis. They've experienced money debasement on a day-to-day basis. Bitcoin to them is an absolute no-brainer. They're going to adopt it. There's no friction. There's no skeuomorphic thinking about this asset class. and they're using it. They're using it as money. And when you use it as money, everything changes. In Bitcoin Ikasi, I was talking to Herman, I spoke to the founder of Machankura, and I asked them, what's the thing that you see in the community when people adopt Bitcoin? How do behaviors change? You know, one of the things in Bitcoin Ikasi that I don't know if Herman said it in Mauritius, but the amount of waste starts going down from that township. You know why? Because people don't spend their pristine capital on Temu and Shein. They don't go buy nonsense, because when you've got pristine capital, when you've got money that is valuable, to impart with your money, it has to be a valuable service. So what happens is the person buys qualitative services, the merchants have to provide qualitative services, gangsterism and crime goes down because it's more forward-looking. Kids that have certain skill sets in certain areas can focus on their skill sets because they're getting paid in sats. They don't have to go do 4 or 5 things to fund the thing that they actually love. So all the notion of the Austrian economics that Saifedean speaks about, etc., it's personified. It's happening already on the African continent. And it's a beautiful thing to see.
That's amazing. Absolutely amazing. You know, I want to come back to you, Eric. We're seeing quite a shift when it comes to the Bitcoin mining in the United States in terms of how people are looking at energy and essentially optimizing for its full usage. With the growth of artificial intelligence and the need for energy, we're seeing a lot of the hyperscalers come in and they're purchasing a series of sites and a lot of the power assets. What's your view on that, and how can Africa benefit from that, plus the innovation we're happening to see across the AI spectrum?
Yeah, so I mean, what we're seeing is AI pays more for energy than Bitcoin mining for sure, but also more than most people for anything. And so, of course, it's going to push Bitcoin miners off the shelves, right? And that's what's actually happening. So there's now, if you talk to different public miners, they have different levels of of warehouses full of pallets of Bitcoin miners that are no longer profitable to mine with in the US. And what we already see happening is those miners are going to be pushed to places like Africa who have really inexpensive energy. So as Gridless, we go out there and we do revenue share deals. That means I do not pay a flat fee for energy. I do a revenue share with the energy owner, whether it's a government or a private company, okay? And that means that I can keep mining even when the price is when the hash price is really low, okay? What this means on a global field, as this new emergent grid comes about, which is a mixture of AI and Bitcoin mining and other consumer or retail uses, it's going to make a lot of sense for Africa to be the house of these older used miners, sometime in the future the new ones too, right? Because it's going to be the only place in the world that we have cheap enough power that's stranded and doesn't have enough usage for it to work. And I think it's a natural bent. It's going to happen over the next halving, and I'd say over the next 4 to 6 years, you're going to see a massive shift in miners. So we've already seen that in Ethiopia. I'm not sure if you guys saw how they moved from 0 to 600 megawatts in 9 months and then just kept growing. We're seeing it in Nigeria with the gas flaring. We're seeing it, you know, Gridless gets a lot of inbound pipeline. So we see all these countries reaching out, asking, hey, what could we do with this extra 60 megawatts, 400 megawatts at a time? And so it's only a matter of time until more of those shift across from the West into Africa.
Can I just add to that?
Please.
So what we're seeing too, so I have an interest in Bitcoin mining in South Africa. And what we're seeing
is a small Bitcoin mining enterprise of 500 megawatts.
You're not supposed to disclose that, Eric. So we have quite a big Bitcoin mine that's being built out. It's about 500 megawatts to grow to about 1.3 gigs. And what we're seeing is the hyperscalers actually chase after Bitcoin miners. And they actually make the business case stronger for a Bitcoin miner, number one, because you don't have to sell your sats because they're willing to pay you a premium on the power that you have access to. But what doesn't get spoken of more often is the fact that when we sit down with them and we actually architect the site, they love the fact that the Bitcoin miners can give them a steady state of electricity from the power utility. The power utility loves the fact that the Bitcoin miners are sitting between them and the actual grid, because they don't like the hyperscalers on their grid. What we're finding in South Africa is that hyperscalers fluctuate the grid. They actually have a horrible signature on the grid. So the grid supplier in South Africa, the utility, don't like hyperscalers because the power consumption ebbs and flows, it trombones the entire time. So if you put Bitcoin miners between them and the grid, suddenly the miners have the ability to instantaneously, when they're dropping down, grab the power, and when they need the power back up, release it back again.
Yeah.
And that's so symbiotic. And I think we don't speak about that enough, where you actually have Bitcoin miners allowing these hyperscalers to have a beautiful energy signature on the grid, and then it allows the Bitcoin miner not to sell their Bitcoin, which furthers their business case, which is extraordinary. And overall, we don't want them to sell their Bitcoin because that drives the scarcity. So there's this symbiosis happening, and what Eric's saying is we've got lots of
and what you're saying, Stafford, is what we call Bitcoin mining as the economic shock absorber, right?
Yeah.
And so it can allow for that fluctuation that stabilizes the grid and deals with both intermittent supply of energy, if you're using renewables, and intermittent demand or spiky demand, which is used by AI.
And the problem that we have in Africa, we're jumping all over you.
That's all right, it's okay, that's all right. We can talk all day about it.
And the problem that we have is, like, if you take a look at energy in Africa, we've got generation, we've got transmission, we've got distribution. Big challenge in Africa is transmission. A lot of our utilities haven't upgraded their lines. So what we have is these big funders have come and deployed enormous amounts of wind and PV and hydro and all of this stuff. But the problem is that power just can't get to the distribution to ultimately get to the consumer. And the only way you're going to unlock that bottleneck on the grid is to throw Bitcoin miners down at those points of generation that funds the build out of the transmission lines.
So unpack that some more, because there is a narrative which suggests that Bitcoin mining is more extractive than transformative, right? So can you unpack a little bit more, Eric, in terms of what he's alluding to in regards to transmission and places, countries, if not businesses in Africa being able to fund themselves as opposed to going out and looking for external sources?
Yeah, I think it's interesting, right? Like what we deal with in a small rural village is a microcosm of what actually happens at the state level. The state also has a problem with distribution of that energy. It costs them a lot of money to invest in those power lines, have to go long distances. And they often don't get a good return on that investment right away. And so in a village, it takes them a long time before they move from an LED light bulb and a mobile phone to plugging in a refrigerator or a hot pot. The same thing happens at a country level, where it takes a while to come into to ramp into that full usage of the energy that's there. So what Bitcoin mining allows you to do is soak up that excess energy and make additional capital so that it's not a bad investment to build large energy, which we definitely and desperately need on the continent.
100%.
One more question as we're closing up, guys. One concrete action that can be taken in Africa over the next 12 months. One concrete action that can lead to higher transformation, which can also support Africa rising. One concrete action. Stafford, please.
From an Africa Bitcoin Corporation perspective, it's constant education. Our governments across Africa are skeptical about Bitcoin, have ignored Bitcoin. Example in Namibia, where we just dual listed, Bitcoin doesn't have any legislative framework. It's not legal, it's not illegal. There's just a void. If you go through Africa, you get accentuations of this, where it's either like I just described, or it's all the way, if you have it, we'll kill you. So what action is, companies like the Africa Bitcoin Corporation is formalizing, is doing it within the rules, and enabling stakeholders, legislators, as we lobby them and educate them to see Bitcoin as this incredible asset class that will result in an African emancipation. This is our renaissance. And it's up to us to educate, personify, and show the world that it's not, we don't need to save Africa. Africa doesn't need saving. Just allow us to do what we know we can do. And I do believe the next Twitter won't come from Africa, the next Facebook won't come from Africa. I think the next Twitter of water purification will. I think the next Google of agricultural services will come from our continent. And yeah, that I think is the big action for me. It's legislation and laws and rules.
Thank you. Wonderful said, Eric.
Yeah, just real quick, I'd say that they say the story of human progress is the story of energy. If we want to transform Africa, we need to start with energy. And as energy is invested in, and you'll see wealth grow across the continent.
Amazing. Well, thank you all.
Thank you.
Invest in Africa. Right? Africa is definitely the future.
Thank you.
Thank you, everybody.
Thanks.
Welcome back to the Bitcoin Magazine News Desk. We're here closing out the day at Bitcoin MENA 2025, and my seat is going down without me even knowing it, and now it's back up. I'm Frank Corva, Bitcoin journalist, joined to my left by Phil Geiger, Head of Business Development for MetaPlanet, as well as Juri Watanabe, Head of Community Engagement for MetaPlanet. Pleasure to have you both here on the desk with you. How's the day been so far?
Wow, the day has been incredible. I've been to pretty much every U.S. Bitcoin conference, and this one reminds me of some of the early U.S. conferences.
Okay.
The energy is incredible.
Yeah.
It's nice and intimate, and yeah, it's been a great day so far.
Not too intimate, though. Pretty, 10,000 people here. It's been
I've been spending a lot of time on the deep and then the enterprise
Fair
stage.
enough.
So, yeah.
Appreciate that. Any major takeaways from the day so far, Juri?
It's been definitely electric. First time in MENA for myself. I don't know about you,
Yeah,
Phil.
first time in MENA as well.
Welcome.
Yeah, it's very gorgeous. We were at the Michael Saylor and Simon fireside chat earlier, and one thing Michael Saylor said is people love technology and money here.
Okay.
So the fact that there's so much eyes on this event says something about how important Bitcoin is in this region as well. So
for sure, yeah, it's exciting to see. And speaking of that talk, we will be airing that after our stream here of the day ends. We're going to be airing this talk that was just mentioned, fireside chat between the head of MetaPlanet, or chair of MetaPlanet, Simon Gerovich, and the one and only Michael Saylor. I want to talk about some of the work that MetaPlanet is doing there, not just in providing, obviously, this securitized, this company for people to invest in, to get Bitcoin exposure to, but also sort of capitalizing on helping to spread Bitcoin culture, part of the publishers of Bitcoin Magazine Japan. Why engage on a cultural level with people in Japan? What does that do to, I guess, help the MetaPlanet brand, or what's the thought process behind that?
we want to be Bitcoin everything, right?
Yeah.
And we want, the more people talk about Bitcoin, the better for adoption, and more people who are interested in Bitcoin hopefully will become our shareholders. So
appreciate that. Yeah, final thought. We're going to head back over in just a second.
Yeah, I think MetaPlanet is really a cultural phenomenon in Japan. Over the last 4 months, we've essentially doubled the shareholder base to about 200,000 people. So 1 in every 600 people in Japan own the MetaPlanet shares, and we want to lead the charge in Japan for Bitcoin education, Bitcoin products, Bitcoin services. So not only do we have the amazing Bitcoin treasury strategy and Bitcoin accumulation engine, but we do also have Bitcoin Magazine Japan to help spread education. We have bitcoin.jp, the domain, where we're going to be featuring great products and services for the Japanese audience.
Appreciate that. We do have to head over back to the live desk, so we're headed over there. Stick with us. We'll be finishing up the day here back at the live desk after this.
Is an extremely natural next step.
We'll unpack that. We were having a great conversation backstage, and I really love the distinction that you're making. Brian, I feel like you came from investing more of a digital native first concept, and certainly you've done that with your fund, where you're looking for value within the blockchain ecosystem, which I think is a really interesting distinction. Tell me a little bit about how you landed on that as a core thesis and where you see things going.
Yeah, of course. So my background is I got into the Bitcoin space in 2012. I was completing law school, and when Bitcoin finally clicked for me, which did not happen quickly because I did not have a computer science background, it took me probably 3 to 4 months of very much studying it. And I thought it would become the best performing asset for many decades to come. And I thought it would become the global monetary layer for the whole system of financial infrastructure that we have today. And it would basically replace the existing monetary layer that we have. And I built a venture capital business after law school across technology, consumer products, was running accelerator programs for public companies, the National Geospatial Intelligence Agency, the federal government in the US. And then as I was growing those businesses and working with those entrepreneurs, I thought, you know what, the digital asset is the next landscape of what's going to occur. And so exited that business. 2016, we launched Off the Chain Capital. And what our core thesis is we felt if Bitcoin was going to be the best performing asset for many, many decades to come, which is a core part of our thesis, we wanted to try to have a goal to outperform Bitcoin, which in the early days was very, very hard because there were not many instruments or types of products that you could invest in to try to get exposure to outperform Bitcoin. And then the Mt. Gox bankruptcy happened many years ago. And so our team developed a relationship with the Japanese trustee managing that bankruptcy process and created the way to buy those bankruptcy claims. And that was a huge light bulb moment for us, because in the early days, that actually allowed us to get Bitcoin at a significant discount. And if we can get Bitcoin at a significant discount, that helps you outperform Bitcoin, right? So then we started taking that same strategy and applying it across a variety of different things, such as private equity, liquid strategies, where we're looking for forced or motivated sellers to acquire their blockchain assets at a discount, and put that in conjunction with a portfolio that we hope over time will allow us to outperform Bitcoin. And in that part of our thesis, we've been able to accomplish that 6 of the last 8 calendar years out after fees. And so we think that if you can find very mature growth assets, but take a distressed approach to acquiring them. So we don't look for distressed assets, we look for distressed sellers of growth assets, which is a very important distinction. And that's what we think there's a huge market opportunity for that by merging that traditional asset management. We're very much of like a Warren Buffett, Benjamin Graham style investor, and then integrating into the traditional financial ecosystem.
Interesting. And Andrew, for you, again, coming from the institutional side, when did Bitcoin specifically, but crypto at large, start to really factor into your institutional thinking, and where you were, maybe you had that aha moment where you said to yourself, there really is a home here, and there really is a blind spot that's currently being missed in the market?
It was early 2020. I had been working at Mariner Investment Group for almost a decade, where I was responsible for a synthetic securitization fund. And we spun out from Mariner and formed Newmarket and bought out the GPs. And when we did that, I had the freedom to start to think about new strategies. And also at that exact time was the COVID liquidity supernova that burst over the world. And I just became really focused on inflation and looked at a lot of different ways that you sometimes hear, oh, you can beat inflation. We looked at timber, we looked at gold, but also Bitcoin. And the more that I got involved in Bitcoin, the more, I mean, I'm sure like many people that were here and who are listening, the more conviction I developed. And not just conviction, but to your point, the light bulb moment where I said, well, we can build with this as an element of credit. And that was when it became very interesting.
So walk me through that, because you were explaining to me where you're actually basically tethering the Bitcoin performance to the credit risk profile, which I think is just such a novel approach, and I could imagine the appetite's probably unlimited.
The appetite for borrowers is off the charts. I mean, it's incredible. But, you know, a lot of investors, you go into a meeting and they'll say, Bitcoin presents the risk. You know, what if Bitcoin goes to zero? But I think that that's not really a rational question, because we have 16 years of history, and the number of times that Bitcoin has gone to zero over that period of time is actually none. In fact, over any 4-year period, the worst performing compound annual growth rate is around 7%. And by the time you get to the 10th percentile, you're over 30%. So this is a very, very well-performing asset for understandable reasons. To me, the biggest risk by far is what if inflation persists? And there, if you look over the course of the last 15 years, every single year that's gone by, what has happened? Asset prices have gone up due to inflation. The cost of living has gone up due to inflation. Financial conditions have become more challenging. And so for credit investors, like large pensions, sovereign wealth funds, insurance companies, where they maybe have 25, 30, 35% of their portfolios in credit, to me, that's actually the biggest risk in those portfolios, is the possibility that they only get repaid, and that the value of getting repaid is much lower in real terms. And so the insight that we began to work with was, if we add Bitcoin to the structures and then share in the upside of the Bitcoin with our borrowers over the life of the loans, that we can significantly outperform inflation-adjusted returns while still delivering income for credit investors. So that's really the mission that we're on.
It's a laudable mission. I mean, unfortunately, I think some of that cohort group would have what I'd call contempt prior to investigation. But if they're willing to do the due diligence, I think the opportunities are absolutely profound. Now, Brian, obviously you come with a different lens. And so for me, I couldn't imagine that you're probably up against, investors who sometimes say Bitcoin has lack of fundamentals or crypto has lack of fundamentals, but you're not necessarily concerned with the tokens per se. You're looking at more the infrastructure side and the assets that support the crypto ecosystem. How are you valuing those?
So there's a variety of ways that we do that. So on the traditional private equity businesses that we acquire, some of our portfolio exposure there would be businesses like Digital Currency Group that owns Grayscale or Kraken the Exchange. We're looking at fundamentals. We're looking for revenue, growth opportunities, and then if we can find a business that's very mature like that, and the core thesis that we look for with those is they got to be profitable, minimum to no debt, and on a 1 to 3 year pathway to liquidity with positive free cash flow. Because that allows us to filter out the failure risk in those situations. And if we can buy a very mature business, but we can acquire it from a motivated seller at seed round prices, we just bought ourselves 5 to 7 years of time, basically, because we de-risked that from a venture stage investment to something that's much more mature. So that's how we would look at valuing fundamentally for some of the businesses on the discount side with private equity. And when it comes to the liquid type opportunities that we look at, we have a series of models that we use. Like, let's use Bitcoin as an example. A lot of times people will say, why does Bitcoin have value? Bitcoin has value because it's the most advanced monetary system I think that's ever been created. It's the ability to be able to take an asset off the internet and move it freely around the globe at your own choosing. It's the ability to be able to move money through time and space instantly at the speed of light. And most people, it's such a huge paradigm shift, especially for large traditional asset managers, to really get their head wrapped around it because it's so fundamentally different than what they're used to investing in and how they expose capital. But if you look at it from something that aligns with them, like models, that helps them get up the learning curve. So one of the things that we do every month on our website is we publish these models updated for free that we use to help us value Bitcoin. So for example, basic trend line analysis using algorithmic curves based on the historical price of Bitcoin, mapping that out linearly into the future. That today shows Bitcoin should be worth around $220,000. And we know where it's trading. It's significantly undervalued. We use things like stock to flow that takes the existing stock. This is often used for gold or precious metals. And that takes the existing stock of an asset and it takes the issuing circulation of that asset coming in to the market, and that allows us to map out as well what an asset could be worth. So we have models for that both in dollars and using gold as the monetary unit. And another one that's really important to remember when it comes to valuing these token assets is how do you value a network? How do you take a business like Netflix and has the network effects of this, the more that it gets, the bigger it becomes, the more valuable it becomes. You use Metcalfe's law is the name of how you value that network. And what you do is you take the number of users in the network and you square it, and then you multiply that by the transactional value that flows through that network. And that helps you get an estimated fair market price of what that network should be valued at. And that even today shows Bitcoin is also very, very undervalued. So these are some of the things that we would walk through to learn about to see from a liquid asset perspective if we think it's under fairly valued or overvalued, and in the same concepts that we do with the private companies that I noted.
Interesting. Now you brought up near instantaneous settlement, cross-border settlement. That leads me to talk about regulatory framework. Obviously, the US has started to work its way through putting more regulatory clarity in place, although we've stalled out a bit in that regard. The EU to a great degree as well, but we still see other jurisdictions that are not as receptive. We were talking about Saudi as an example, where it still can be challenging for especially institutional level players to get involved. What signals are you looking for, or what changes are you closely watching that you think could accelerate or potentially derail institutional adoption?
Yeah, so the regulatory framework is incredibly important because if an institution doesn't know the regulatory sandbox they're playing in, they won't play in the sandbox at all. And that's what we've seen take so long, like using the United States as an example. We still don't have the clear regulatory framework in place. We're getting there. We had stablecoin legislation was passed. The next is going to be hopefully market structure legislation. But places like the UAE were very, very advanced. They put regulations dating back, I think, to around 2018 timeframe where everything's a digital commodity. And that's huge because look at the talent and the entrepreneurs and the insight and the brilliance that's been brought to this region by putting clear regulations in space, having the entrepreneurs understand where they're building, having the institutions understand what they're allocating to and where it's governed. And so that's the biggest hurdle for big institutions, in my opinion, is if the regulations aren't in place, they look at it as way too much as a reputational risk for us to come into early something like this until those are in place and the infrastructure is there. And once that infrastructure is clear and they understand what they're getting into, then the capital flows.
Now, Andrew, you're having a lot of those institutional conversations. What are you seeing, and from your perspective, when you're engaging with them, what are the most common misconceptions about Bitcoin or crypto that you encounter, and how are you addressing them or having those conversations with allocators?
I think that there are a couple of different flavors. One flavor is people that really actually are quite knowledgeable about Bitcoin. I mean, I'm focused on Bitcoin, Bitcoin only. I think it's the signal amid a sea of noise. And so one key message that I try to bring to an institutional conversation is let's talk about Bitcoin, especially if you're looking to allocate a large sum or if you're looking to take a multi-year view on the asset. I mean, the world is becoming much more digital. Surely other digital assets will succeed over the course of the next 5, 10, 15, 20 years apart from Bitcoin. But as a lender, with the mentality of a lender today, I don't have a view on the longevity of any particular asset apart from Bitcoin, and I have a very strong view there. So the first thing that we talk about is Bitcoin, Bitcoin only, and then of course a lot of the properties associated with that. But you have many people at these institutions that really do understand a lot about it. What they have to overcome are their own set of institutional incentives, or probably put more accurately, institutional disincentives, where the desire is not to rock the boat, or the desire is to just keep things, you know, as they're going. I mean, it's challenging because if you're a credit investor and you say, I'm taking the risk of inflation seriously, I'm going to invest in this strategy that protects against inflation, then a very natural question is, well, what does that mean for the rest of your portfolio? And few people want to invite that type of scrutiny. But you know, Bitcoin incentives change people's frame of mind, and I think it's had that effect on a lot of people that I know, a lot of people that I've personally seen, and I believe that we'll see that more and more throughout the institutional community over the course of the coming months and years.
So for both of you then, walk me through what successful institutional adoption really looks like. Is it X number of dollars? Is it on-chain, off-chain? You know, is it based on holding on corporate balance sheets? Do you need custodians? Like, how do you see this playing out long term?
You want to start? Well, for me, it's all of those things, and it's really conceptualizing Bitcoin as a financial tool to accomplish your goals. I mean, you know, why should a corporation hold Bitcoin on their balance sheet? It's not for the sake of keeping score. It's for the sake of adding to the balance sheet of the corporation an appreciating liquid asset that gives them a lot of options, either in times of challenge or in times of opportunity. Ideally, the Bitcoin is going to enable them to finance their future growth trajectory much more effectively. Ideally, the Bitcoin is going to make them a more attractive merger partner with other corporations. It's going to make them be more efficient in different ways. For institutional investors, our prescription is think beyond a standalone, long-only allocation to Bitcoin. Whether it be through Bitcoin as it is or through an ETF, think beyond that. Think instead, how can Bitcoin be a tool to reshape the risk-adjusted returns of different asset classes? Like what I was mentioning for credit earlier, I think credit is extremely vulnerable right now due to inflation. And that's the key issue, is that long-term credit investors, if they just get their money back, they'll have real losses. But if you add some Bitcoin, you can reshape that. You can improve the quality and reshape that. And so I think thinking of Bitcoin in this way how can adding a little bit of it dramatically reshift the efficient frontier of investing in other categories of asset allocation is ultimately going to lead to a more durable, more significant, more widespread adoption of Bitcoin than a long-only allocation on its own would stand to do.
Yep, I agree with everything that was noted, and I think that some additional components is that Bitcoin, in my opinion, will get bolted onto every single investment strategy. So you will have real estate funds, which we're already seeing that are Bitcoin-backed, credit funds, anything you can think of that's traditional asset management will have a Bitcoin integration component to it. And I think one of the ways we're seeing the fastest newer on-ramps and newer interest in institutional adoption of Bitcoin is what's happened with Bitcoin treasury companies, right? So what Saylor did with Strategy, who figured out this amazing mechanical hack, in a sense, in the market, that there's all these institutions and insurance companies that because of their own investment mandates can't go buy and custody Bitcoin direct, but they can buy a public company stock or they can buy convertible debt from a public company. And so it created this massive new on-ramp. And so one of the things that we've been very bullish on in our portfolio is we've been investing in Bitcoin treasury companies all over the world now. So we have exposure to ones in Brazil, in the Netherlands, out of Europe, the largest one to go live on the London Stock Exchange coming up, a bunch in the United States. And the way we look at that is in each of these jurisdictions, you're going to have these institutional on-ramps to hopefully get their first exposure to Bitcoin via these publicly traded vehicles that trade under the regulatory infrastructure of those respective jurisdictions. And so as that occurs, I think that's a huge step in the right direction to help people start getting exposures to buying those things. But eventually, it's going to get integrated into absolutely everything. And I think, like for me, long term, I've done this for many, many years, is I very much think in a Bitcoin-denominated fashion. So when I got into Bitcoin early on, I'd always had this mindset, which was, if I'm going to invest in something, I have to justify that this investment that I'm going to make can generate me more units of Bitcoin than I would just buying Bitcoin itself over the timeline I want to hold it. And 95% of the time, you don't make the investment, it's better just to hold Bitcoin. And that's what the performance has seen over time. But that 5% of the time, there is times for outperformance of new opportunities, and we're seeing more of those. And I think Bitcoin treasury companies is one of those. I think institutions will start to recognize that properly executed Bitcoin treasury companies that develop, whether it's a pure play, depending on the jurisdiction, or the right products and services suite that are Bitcoin native in the space, can generate that alpha over Bitcoin's performance. And I think there's so many other ways to think about it too. Like imagine if you have the family that owns the predominant collection of Rembrandt paintings, which I believe right now is in the side of a vault in a mountain. Imagine if you could take those Rembrandt paintings public, bolt a Bitcoin strategy on top of it, and then all the markets could get exposure to owning some of those valuable Rembrandt paintings with Bitcoin bolted on. I think we're going to start to see really novel, unique applications. Imagine a music label that has some of the most popular artists in the world, and you take that artist's collection of intellectual property, and you take that public and you bolt Bitcoin on top of it. That's a brand new way that you could have integration in ways that we're not seeing today, but I believe we will see these types of use cases and applications play out over time, which will just enhance the institutional adoption in a variety of ways.
I think that's fascinating. I think you're spot on. The caveat being properly executed, 100%. So in our closing moments, I'd love to hear from both of you. What gives you conviction about Bitcoin today? Not just price action, but something that will look out the next decade, 3-4 decades, not just the next cycle.
You want to start here?
Yeah.
I think that the biggest source of conviction that I have is everyone who's here in the audience today. And every time that I come to a Bitcoin conference or I listen to a Bitcoin podcast or I really engage with the community, I find it incredibly inspiring. I mean, the builders that are at work here are ambitious, they're focused, they are have significant integrity, intellectually honest. I think that there's a lot to look forward to based on the things that folks here in this room and in our broader global community are building today.
Yeah. I agree. In my opinion, I think that seeing the growth of this space over the last 14 plus years that I've been involved, going from very small Bitcoin meetup groups where there was 5 people in the room to now seeing conferences like this where there's people and now all around the world. And I think last year at the Bitcoin conference that we had in the United States in Las Vegas, there was 30,000 plus people. I think there's going to be close to 50,000 this year, and then we have them in all these new jurisdictions popping up. Yeah. It just goes to show people are starting to get it. People are starting to understand that we need an escape hatch. We need something that we can store our value in over years into the future to not only hold value for ourselves, but for the generations to come and the people that we want to pass it down in our lives that are important to. And institutions need this as well. They need new ways to accrete value to outpace the rate of inflation and all the other crazy things that happen around the world. And so it makes me excited to see just the massive expansion of understanding. Like each year, more and more people get it. More and more people are starting to wake up to what the opportunity is. And not only the opportunity, but the need. It's incredibly, incredibly needed. And one thing that I'll end on is, our team put out a movie last year, our CIO at Off the Chain, called God Bless Bitcoin. I actually spoke about this at Bitcoin MENA last year. And if you haven't had a chance to watch it, please go check out that film. You can watch it for free at godblessbitcoin.com. We had it translated into Arabic as well. And it just teaches people, like, what is the importance of Bitcoin? Why is it so important as a technology, as an asset? And then it brings it back to ancient scriptures and how monetary systems are defined in ancient scriptures. And it's actually very similar to what Bitcoin's become today. So it gets me excited that we have foundational principles from the world's major religions all around the world in ancient scriptures on how a money system should work. And it's really, really close to what Bitcoin's become today. So it gets me very excited about now. It gets me excited about what's to come in the future, both on the retail side and the institutional adoption.
If I could just, Brian, I found your comments today to be actually really interesting. I want to talk to you about the music and the art, and the way that you brought in ancient religious philosophy is very inspiring. Because here in Abu Dhabi, I think that we're all seeking for a more virtuous structure of monetary systems. And with Islamic finance, there's a lot that we can point to there, which also has a strong tradition in Judaism and in Christianity, lending at interest, sharing in the risk. It's a very interesting model. But I was inspired to re-enter the conversation because you made a little shameless plug, and you were saying, what gives you the most to look forward to in Bitcoin today? And I would say, if you haven't had a chance to take a look at the 1031 team, it's really worth taking a look at 1031.vc. They've built, full disclosure, Battery is one of the portfolio companies, but they've built a tremendous portfolio of builders in the space. And they're really thinking about it from a point of view of first principles and philosophy. So I'd highly encourage anybody who wants to be inspired to take a look at some of the portfolio companies that 1031 has built over time and really begin to think about how to broaden the aperture of what it means to build in Bitcoin.
I love that. That's a great closing note.
In just 16 years.
Okay. Let's thank these gentlemen for their time and their knowledge and for what they're doing in this space.
Thank you, everybody.
Welcome back to the Bitcoin Magazine News Desk, presented by Crypto.com. We're here at Bitcoin MENA 2025, closing the day out. I'm Frank Corva, Bitcoin journalist, joined to my left by Phil Geiger, Head of Business Development at Metaplanet, as well as Juri Watanabe, Head of Community Engagement at Metaplanet. Juri, I want to go to you first. You were just telling us a very lovely story about how Metaplanet, you heard the story of Metaplanet, it inspired you to move back from the States where you were living to Japan, which is your home country. Please let the audience know a bit more about your journey and how Metaplanet has taken you back to Japan.
Yeah, I mean, you said it. I was living in the States, and one of my trips back to Japan, I met Simon, our CEO, and Dylan, and we had a chat about their vision with Metaplanet. And this is before all the buzz around Metaplanet, so it was a very, very new company, obviously, adopting Bitcoin standard. But I loved the story that they were sharing and what they want to preach to our Japanese community and the global community. Essentially, it's just to help our people secure the future, right? And with Bitcoin. And with that talk, with over coffee, I was like, okay, I'm in.
That was it?
Yeah, that was it.
All
that was
right.
it. And the journey has been great ever since.
All right, Dylan and Simon, quite convincing. I like that. Inspiring. Very, very
definitely.
cool. Dylan and Simon were over in the Bitcoin for Corporations hosted. We had the day over there today from a lot of the different treasury companies that are affiliated with Bitcoin for Corporations. Any big takeaways from today? I think you were alluding to something that Michael Saylor had to share. Maybe hint at that a little bit for the audience.
My mind has just been buzzing since the Simon and Michael Saylor fireside chat on the Bitcoin for Corporation stage. I don't want to ruin it for the audience, but some of the ideas were so big. I think Michael Saylor said, if you enact this idea, you will attract $20 trillion of capital to your one company. So yeah, it's absolutely worth a watch. Very bullish. And I do think, a lot of the Bitcoin treasury companies out there are doing something really important, kind of potentially a little bit removed from what your average end user or saver might benefit from. And those were some of the ideas that Saylor put across.
Okay, appreciate that. Jerry, back to you. In terms of, you mentioned, you just touched on this, but I want to dive in a little bit deeper.
Sure.
Securing the future for Japan, setting an example for what Bitcoin is. We're in a shifting global landscape. We're watching currencies across the planet lose value at a rate that most of us alive today have not seen before.
Yeah.
When it comes to Metaplanet's messaging with Bitcoin at its core, this vehicle for Bitcoin to get exposure to it, how do you carefully craft that, right? Because that could also be scary to people, right? That we're going through this shift. So how do you do it in a way that's sort of gentle enough to kind of get people's attention, not scare them, but also urgent enough to say that this is the time to be doing something like this?
Ooh. So I think our story hasn't changed from the beginning, and I think that's what makes it a strong story, right? Ever since we've adopted the Bitcoin standard a year and a half ago, our story has been, okay, Bitcoin is the money that is going to fix the broken system. And that is the single currency that we are believing in. And that story has been the same ever since. And I think we've done very creative ways, being the culture hub of Bitcoin in Japan, and that's helped the audience feel like a little bit more approachable to this concept. And I think, I don't know if Phil wants to speak to a little bit more about what Bitcoin can do for our Japanese people or the global community. But
I do want to hear it, Phil. I apologize. We do have to actually go back to the main stage for the last talk of the day. Don't need to do it, but hopefully we'll have you back here tomorrow. We appreciate both of you coming on. We're headed back over to the Falcon stage for the final talk of the day. We'll be talking about retaining Bitcoin cypherpunk values in this age of financialization. Over to the Falcon stage. We'll be right back here after this.
Book, and I'm joined on stage by Bruce Fenton on the right, or your left, Obi Nwosi, I'm saying it right? And Andre Machen. So for those that don't, there might be people in the room that don't quite know this, but in the 90s there was a group of activists and hackers, programmers, cryptographers, and they foresaw sort of the potential of the internet, but they also saw the potential risks of the internet as something that could evolve into something of a sort of digital panopticon, where everything anyone does online can be traced and tracked and analyzed and potentially used against you. What they set out to was to sort of prevent that future by building tools, code, that gave people the opportunity to reclaim their privacy. And as part of their efforts, they really wanted to create a form of digital cash. And Bitcoin, Satoshi kind of took technologies that were developed by these cypherpunks and sort of put them together to create Bitcoin. Now, fast forward to today, and today people are, the sort of dominant narrative is about institutional adoption, nation-state adoption even, treasury companies. So the question we're going to be discussing on this panel is how much of the original cypherpunk values are still alive in Bitcoin today, and how important is that? Okay, I already mentioned you by name, but let's start with a short introductory round. Bruce, do you want to tell everyone who you are?
Sure, I'm Bruce Fenton. I started in TradFi a long time ago, and then I got into this space about full-time by 2013. and we host the Satoshi Roundtable event, and I've done some investing and other stuff in this space, and consider myself a cypherpunk.
Yeah, my name's Obi Nwosu. Again, similarly, I got into the space as a company on an official basis in 2013. I ran a Bitcoin exchange in the UK. It went on to become the UK's longest running Bitcoin exchange. But sold that approaching 4.5 years ago now because I saw a need to make it easy for people to get off exchanges and be able to take control of their own money, their own communication. And I set up Fedi with a number of investors in the Bitcoin space, and we make a private Bitcoin wallet. So it acts like any other wallet that you expect, but you get perfect, cryptographic perfect privacy using a protocol called Fedimint, which is based on eCash, which is the protocol that precedes Bitcoin by 25 years. It provides perfect privacy, but it had a flaw. It required a trusted intermediary. It was based on USD, on fiat. Now we base it on Bitcoin as the base protocol, but you have the privacy and scalability on top.
Andre. My name is Andre Meitzen. I'm a co-founder of Bitcoin Swiss, which is like the oldest and largest crypto financial intermediary in Switzerland. We also started 2013, myself more or less coming directly from university. We had the idea to make crypto accessible to everyone, and that's also then how we started our business back in the days, and ever since we have been advocating for like adoption of crypto and Bitcoin, of course, in particular.
Right. Yeah, so I mentioned cypherpunk values. So what that means, things like privacy, censorship resistance, very strong anti-government ethos, right? Self-sovereignty. To what extent are these values still alive and important today in Bitcoin? Let's start with you, Andre. What's your view on that?
I mean, it's a good question, and I think the underlying technology, of course, represents all those different values and has it, as part of its technology. Of course, what we're seeing nowadays is some sort of a trend where we take this beautiful, young, still fairly young kind of technology and innovation and try to wrap it into as many layers of TradFi as possible, right? And this is a little bit what we currently consider as institutional adoption. That goes, of course, in a different direction than the original kind of ethos that the whole industry was standing for. But on the other side of things, I think it can like coexist because one thing is the technology layer and the other one is like what institutions are doing with it. And one doesn't necessarily contradict the other. So that's my point of view.
Okay, Obi, one doesn't contradict the other. Do you agree?
No, I agree that they don't contradict each other, but I think we need to work out on levels here. Bitcoin only exists because of the cypherpunks. It's not the other way around. And if you lose the cypherpunk ethos, you lose Bitcoin, and everything else that's built on top of it, where many people are generating a lot of value, will also crumble. So if we look at the Cypherpunks manifesto, it's very interesting. Most people take away this statement, cypherpunks write code. And a lot of people think that cypherpunks are just coders and so on as a result. In fact, if you actually analyze the manifesto, the word code and writing code was only mentioned 3 times in this manifesto. Privacy was mentioned 22 times. And it was never mentioned self-custody. And it didn't mention self-sovereignty and censorship resistance. These are implicit requirements, but the key thing was private is key. And even the first line is that privacy is necessary for an open society in the digital age. They had incredible foresight. They understood that this is absolutely essential. If you lose that with Bitcoin, then it's actually worse than the existing system. It goes from being this incredible freedom technology to being panopticoin, 1984 coin. I would prefer the existing system over that. So you must make sure that whatever happens, we maintain these ideals. Even Eric Hughes, the writer of the manifesto, 3 years later, when asked about the writing code part, clarified that actually I want to clarify that. Unless you have privacy and it's accepted in society, writing code isn't enough. So yes, it's essential, and everything on top is great, it adds value, but they're a multiplier, while privacy is an additive. Zero multiplied by infinity from treasuries and so on is still zero. You need something there already, and that's a privacy-preserving token.
Bruce, how do you see the tension between institutional adoption and the original cypherpunk values? Are they in conflict?
Yeah, they are in some ways. I'm not a huge hater of the institutions. I wasn't a huge hater of altcoins. These are just kind of altcoins. You know, people go make their money, go do your thing, but it's not Bitcoin. You know, an ETF is not Bitcoin. And these centralized projects, you're not getting the core values of Bitcoin, the control, the censorship resistance, in some cases privacy. You're putting it in a centralized wrapper, and if you put it in a centralized wrapper, you lose everything that's good about it. And it's not Bitcoin. It's just it's an affinity marketing thing. It's hey, you like Bitcoin, go buy my other project. You know, just like hey, you like Bitcoin, go buy my altcoin. It's not the same thing, and I think in many ways it's a step backwards. Like I say, I don't hate these people, but they certainly shouldn't be celebrated. It's not forwarding our industry. If we do treasury strategies, we do ETFs, we cheer for BlackRock and Cantor. That's a step backwards. It's not something to be cheerful for. It's not a victory, in my opinion. A victory is having more people have direct ownership of real Bitcoin. We now have millions of people who've been onboarded into this fake paper thing that's a claim on a claim on a claim of something that has Bitcoin in the words, but it's not actually Bitcoin. And they're never actually holding a wallet like many of us did back in 2012, where somebody sent us that first $1 and you say, wow, this is cool. I didn't need to give my ID, and I'm able to control and hold this money for the first time. You now have a whole generation of millions of people that they don't have that. They have some junk fiat products sitting like sludge on their centralized brokerage account at the centralized clearing firm, traded on a centralized exchange with a centralized transfer agent and a centralized custodian, and they have to trust 6 levels of people on a claim for something that has Bitcoin in the word. It's not a victory. It's not a step forward. I don't think it's something that should be celebrated at all.
Obi, I want to dig into something you just said a little bit, and maybe you touched on it. But so there's on the one hand, you can make sort of an ideological argument about why we should care about privacy, why that is important, why that's an important property of Bitcoin, from an ideological level. But I'm just sort of gonna riff here, and I'll let you guys respond. Like, can Bitcoin even work if it doesn't have these cypherpunk properties? Because I think these are also what makes Bitcoin unique. These are some of the unique value proposition. It's the censorship resistant and level of privacy is something that actually makes Bitcoin useful. So it's good that it's scarce, but it also needs to be useful, I think. So if you lose that, I don't know if Bitcoin can even succeed at all. Who wants to? Let's start with you.
I think Bitcoin can work without privacy.
What's that?
Bitcoin can work without privacy. The problem is that what you've effectively done is created effectively it's got a name already. We call them CBDCs.
Right, but Obi, why wouldn't people then just use the CBDC?
Well, it's just a CBDC without people realizing. The reason why is because when you create CBDCs, all votes tend to suggest that people don't want them. And so this could be a very clever way to get people to adopt a CBDC without them realizing they adopt a CBDC. The same thing happened with the Federal Reserve in the US. Multiple attempts were made to have all these independent banks around the world, around the country, cede their power to a centralized bank. And every time that was attempted, the US citizen said, why would I do that? So eventually they got them to do it by suggesting that there was a war and this was needed to fund the war, to protect the great United States. And then they finally, after multiple attempts, got the people of the US to agree to the central bank being set up. So the same will happen with Bitcoin. If you lose privacy, you lose the thing that made it very significant. It will still work, but you've just gone out of the frying pan. You have this potential incredible future, but then you've just said a bait and switch, and you're into the fire of exactly the same system, but without realizing that you are. So it can work, but the existing system sort of works as well. But we're looking for something greater. We're looking for something better. We have an opportunity of a lifetime, and so we should make sure we stick with it and make it happen. And for that, privacy is key. Private is key.
Okay, Andre, what do you think is the best, or do you want to respond to this? Because
no, I probably would even go beyond just like the privacy argument to answer your question.
Yeah.
I mean, the inherent value at the end of the day of Bitcoin is not just like the scarcity, but of course everything that you just like described, right? It's a decentralized system that gives actually power to the people away from centralized systems. Privacy is of course an important element from it, but I mean,
essential.
It's very essential for sure. But on the other side of things, you can be like your own bank. You can, I mean, the networks work in itself, right? You don't depend really on any kind of third party. On the other side of things, the reality is still out there, and that's probably one of the critics to the whole industry, is that a lot of the adoption nowadays is happening through centralized kind of institutions, right? Because not everybody directly wants to interact with like the blockchain itself, because I mean, usability improved a lot throughout the years, but I mean, it's still like a long way to go in order to make it more accessible to like everyone, right? So, and there, of course, the centralized platforms, including like what BlackRock has been doing and the ETFs and so on, have fulfilled some sort of a role. But of course, it's very absurd to like have something that is tradable 24/7 and put it into like a TradFi product that is available during bank opening hours, right? And I think there we have quite some improvements still ahead of us. But of course, the technology in itself, I mean, that's the value goes beyond the scarcity of just Bitcoin.
I wonder what Bruce would think about that, because is it really adoption if it's not even related to Bitcoin Rails in any way?
Yeah, I don't think it's adoption. I don't think it counts if we do this. And if we strip out the decentralization and we make this asset centralized, or we put it under centralized wrappers where 50, 60% and deca millions of users are just using a centralized wrapper where we've stripped out the privacy, we've stripped out the decentralization, then we're really left with nothing. We're left with a store of value-ish, and all due respect to the gentleman, Mr. Saylor, a store of value is very boring if you don't have the underlying technology. It's a beanie baby. It's a tulip. It's all of the things they used to make fun of back in the early days. And the way that we would counter that is we say, no, this is not a tulip. This is a new invention. It's a invention that is decentralized, that is not controlled by anybody. But if you have it all controlled by BlackRock, then you lose that narrative. And you're not really onboarding. And it's important. I think it's very key for our industry right now as we're looking at this. Because as we move forward, there's this idea that we're going, BlackRock is going to onboard 20 million people, and then all of the sudden, at some magic day in the future, 5 years, 10 years from now, they're just going to suddenly move over and come over to private wallets and start holding their own keys. I don't think that's the case. I think we've already lost some of the technology that we had when we started. Local Bitcoins is gone. Many of the wallets are gone. People are paying for things less. Where I live in New Hampshire, everybody used to pay with Bitcoin. Satoshi Roundtable 1 was 100% Bitcoin payments. Now it's almost zero. People are using it less. And if you build this fake artificial system around this artificial narrative that's all centralized by banks who are frankly evil actors in many cases, then you're not building that other infrastructure. You're wasting the time that could be building to make self-custody easier, to make payments easier. If you want to lobby governments and work with governments, you could say, let's get rid of the taxes. Let's get rid of the AML KYC requirements. Let's make this frictionless rather than trying to get governments to put more centralized control. I just think it's not a victory. I don't think it's real onboarding, and I think it runs a risk. At best, you end up with everything that would make this money work as money like it's supposed to and have self-sovereignty gets replaced by centralized actors, and one industry rises and all of their legacy, and they use their lobbying power. There's countries right now that say if you hold Bitcoin, it must be in an exchange. Next it's going to be if you hold Bitcoin, it must be in an ETF. And these powers rise, and all of those entrepreneurs who would have been doing cool things, cypherpunk things, fall by the wayside. And that's best case scenario. Worst case scenario is they end up with 60% of the Bitcoin, and then they decide they're going to do some stupid AML KYC BlackRock fork, and they say this is the real Bitcoin, and if you don't, we're going to dump everything on the open market, and they co-opt developers, and they make a fork of it, and you know, a few of us shout from our very, very small voices, and the industry goes, and the masses, all of these 20 million people who are in there say, oh no, don't talk about that terrorism coin, the original Bitcoin, that's not what we want. We need the AML KYC, or BlackRock and Saylor are going to dump it, and then the value is going to go way down. And we don't want that. We don't want that centralization. It's not a victory. It's not what we're here for. We're here to replace these guys. We don't need them. They came to this kicking and screaming after a decade of making fun of us. They're not here because they liked this. They're here because they came and we beat them year after year after year after year for a decade. We said, we have the best performing asset in the last 100 years and you're not allowing people to do it. They didn't come here for cypherpunk values. They came here to grift and make a buck. They don't care about our values. They're not a victory. They need us more than we need them. Personally, I recommend that everybody tell them to go pound sand and go and take self-custody and self-sovereignty and replace them, grind them into the dust. That's what we were supposed to do with this industry.
Yeah, I mean, so you said something, if you strip out the sort of cypherpunk values, then Bitcoin does become the digital beanie baby or the digital tulip that the critics 10 years ago said it was, and they were, yeah, that's exactly what I also think. So what is, now that we've established that this matters, what is the best way to actually save this, further this? Is it just technology, or are there other ways that we can sort of protect, defend, champion cypherpunk values? Andre?
I think usability is one of them. So, I mean, in the early days when we started, I mean, it improved a lot, every kind of wallet and so on, and interactions, but still, I mean, all of us in here in this room, I mean, we're like the insiders in the industry. It's still like 0.3% of global wealth that is like in crypto, which is still, I mean, it's peanuts, right? It's super small. So we have quite a long journey still ahead of us, and then you can compare it with, let's say, the market cap of gold or like global bonds and so on. The good thing is, I mean, obviously centralized systems, they have a lot of deficiencies, right? So I don't think the Bitcoin needs to solve every problem. The other side of the chain is going in the wrong direction anyway. So I think we will have an easier game in the future, but of course we also need to improve in the industry, and the industry has been full of also like bad actors as well, like all the scams and meme coins and altcoins and whatnot, which is also like diluting the attention of the industry just for like let's get rich quick and all those kind of schemes. It's also wasting the resources that could be allocated into actually developing the technology in a direction where it makes sense to like really improve usability of the technology, to do education as well and so on, try to embrace more people to join the ecosystem for what it really stands for. And at the end of the day, it should be like decentralized, right? The power should be with the people and not centralized institutions. And at one point, you have like a huge kind of bulk risk when Saylor holds like 3.whatever% of Bitcoin. Same with BlackRock and so on. So this centralization is, of course, going in the wrong kind of direction. But I think you can only break it by embracing more people to directly interact with the blockchain, and usability is key. But if like the average person out there is scared to like do a Bitcoin or like a crypto transaction in general because something could go wrong, or their neighbor got scammed with some sort of a weirdo platform and all of those things. They don't know how to handle, I don't know, forks, airdrops, and all the like the gimmicks of the industry, right? It needs a lot of education, but you also need to embrace like new people to use and interact with the blockchain directly and decentralize it again.
I mean, the reason Fedi was set up was to give privacy to as many people as possible, as easily as possible. And so the answer to the question is, it's two parts. One is you need to make the user experience so easy that privacy is invisible. Because even though privacy is key, there's this thing called the privacy paradox. When you interview someone directly and ask, do you want privacy? Do you want people to see you going to the toilet? Do you want people? Most people say, yes, I want privacy. It's very clear. But when you actually look at their actual behavior, people will easily and frequently give up privacy for convenience. And this is called the privacy paradox. So the answer is you have to meet people where they are, and you have to make it so that privacy is there by default. It's like the medicine that the kid needs, but you don't want to just explain medicine to them. You just mix it in with the sweet. And the actual experience has to be as good and ideally way better. You use privacy in your user experience to make the experience way better than the alternative. And so we spent several years and with various UX professionals to try and do that. The other thing is you have to meet people where they are, and you start with the people who right now, today, understand the need for privacy, because they're sort of living in the future, and provide them a solution. So we work with various people around the world. We operate in multiple countries, but a lot of the stuff we do is people who are living under the yoke of authoritarian regimes. So if you're in an authoritarian regime and you're a journalist, or you're someone who's in opposition government or to that regime in Latin America or Africa, then it may be that if you don't have privacy, you're someone who's thirsty. If you're thirsty, you know what water looks like. And if you don't, in those cases, not having privacy can land you in jail, tortured, or even killed. So they very quickly understand the need for privacy, and they give us incredible feedback. And that's what, over the last few years, allowed us to build this product. And we've helped people who were dissidents escape countries where, if they use the banking system, it'll be traced. And it's not just, by the way, if you fix money and privacy there, that's not enough. You have to fix communication and privacy. You have to fix accessing the internet and privacy. All in one simple-to-use package, which is operationally and experientially simpler to use than the alternatives. And that's the approach. So we have people on the ground, in country or where it's not possible, near country as well, working with the people on the ground, plus we build the product based on the requirements as well.
Bruce, I want to ask you a more specific question, because you're the politician on stage. and in the US, right? So what we're seeing in the US, I think very clearly, is that on the one hand, Bitcoin is sort of being embraced by, the powers that be, or the president, Trump, for example. On the other hand, we see Bitcoin developers and privacy developers specifically actually going to jail. So there seems to be a very parallel or contradictory thing going on, where they embrace one part of Bitcoin, but really actively fight still the cypherpunk side of Bitcoin. How important do you think it is that governments, politicians also embrace this part of Bitcoin? Or is, speaking as a cypherpunk, should that just not even enter the equation? It doesn't matter because it's supposed to be anti-government anyways.
The only interaction that we should have with governments in any way is not lobbying them to buy Bitcoin, not lobbying them to do treasury strategies or support this or that, or issue their own coins or get regulatory clarity. The only interaction we should have with them is to say, please get out of the way. And if you don't get out of the way, we're going to build things that make it so you can't get in the way. Because we don't need them, and it's immoral. The job of government, and most governments fail miserably at this, the job of government is to protect people's life, liberty, and property. Most of them can't even do that. They can't stay out of wars. They can't keep their own budgets in place. They can't keep their people safe. They really don't have any business or authority or anything else, and they certainly don't have the moral authority to go after people who write down words and numbers that they don't like. It's completely immoral. It's completely unethical. They have no moral right to do it. All of these laws should be scrapped. AML KYC is a very new and very stupid thing that was created in my career. I'm not that old, but in my career in the United States, when I started as a financial advisor, you could buy a stock without an ID, and you had a week to pay. And when they first did it, the older brokers were like, they couldn't believe it. They said, what are you going to need an ID to buy shoes and lettuce? And now, like a frog in boiling water, an entire generation thinks this is some sort of birthright of government. It's not. It's ridiculous. It's immoral. It's unethical. It's backed by violence. It has no place in a civilized society. If you're a government and you're demanding that developers follow any rules, you're a thug. You're a thug, and you're doing something that is immoral and wrong and violent, because you're backing it with violence. You're basically saying, if you write down words and numbers that I don't like, I'm going to have somebody point a gun in your face and put you in a cage. Well, you don't have that authority. And I would prefer if everybody in our industry ignored government and didn't talk to them. In every case, from the ridiculous bit license in New York all the way through to things that are just happening now, we have well-meaning Bitcoiners who go out to government and say, oh, please give us regulatory clarity, and they bite you. It's like the old parable of the scorpion. It's in the nature of government. Nothing against any particular politician. The nature of the beast is to sting you. You're playing with rattlesnakes when you play with government, and you should not have them have any involvement whatsoever in this. So that's what I would say. I would say, please get out of the way. Let people peacefully interact. Just like every single one of our ancestors going back since the beginning of time, none of them had AML KYC. Do you realize this? Every ancestor we have is sitting laughing at us, saying, why do you need to have your ID when you trade? That's a very new and very stupid idea, and I'm sorry that my country has pushed that out on every other country in the world and said, we're gonna hit you with a stick if you don't have this gray list, and we treat 2 billion people on Earth as if they were all criminals, and you have to ask and get permission and present an ID if you wanna buy a motorcycle on the internet. It's preposterous, it's ridiculous, it belongs in the dustbin of history, it has no place in a civilized society. And if they won't do it voluntarily, we should make technology that makes it so that they can't do us. Because all of the tanks and guns in the world can't stop math and code. And that's the beauty of this technology. No matter how tyrannical a government is, no matter how much they want to interfere, they can't break math, they can't break physics, they can't break the reality of code and the reality of these laws. And hopefully we can make a system that makes it so it's government proof. We don't need them, they don't add, they don't help. We're better off without them, and we build a more peaceful world.
Okay, we have about 2 minutes left. Maybe Obi, do you agree? How should Bitcoiners interface with the government, if at all? What's your view on that?
I think, I spent time doing that when I was running a regulated exchange. I had an afro when I started, and now I'm bald as a result of that. So it's incredibly stressful. Some people make progress, and everybody is going to choose their own path in how they add value. So I'm horses for courses, but my personal view is that you have to make sure the foundations are in line with cypherpunk values. Bring it back to the original question. It has to be something that this is something so essential it needs to be like water or like air. And so it needs to, and we're working on making that happen. There are a few other people in the space working on making it happen, but way too few. And I hope that more people look at doing this.
Andre, final words for you.
Quick one. I mean, on the other side, I fully agree, by the way, with what has been said previously. But of course, the reality is as well that it's not always that easy. So if you want to build up a business, if you want to pay salaries to your employees and so on, and then on the other side is the regulator that threatens you to be thrown into jail or kill your company or so on. I mean, either you comply with that and you survive and continue building your business, or you play the mad guy and then you face the consequences. So that's where I don't see it that radical, so I think you need to find ways to work together with regulators on reasonable regulation, because that can be reasonable, but the risk that is being over-regulated is extremely high, and in most jurisdictions that's exactly the case. So yeah, I think we're over.
All right. Well, that's our time. Please, everyone, give a hand for Bruce, Obi, and Andre.
Good job.
And see you all tomorrow.
What a fantastic session to finish the day one. Thank you so much.
Back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're closing out the day here, day one at Bitcoin MENA 2025. I am Frank Corva, Bitcoin journalist, joined by none other than a man who needs no introduction, Saifedean Ammous, author of the Bitcoin Standard, as well as Stafford Massey, CEO of the Africa Bitcoin Corporation. CEO, did I get that right?
Executive chairman.
Executive chairman of the Africa Bitcoin Corporation. Gentlemen, very excited to have you both on the desk. You broke some very cool news today, so Stafford, let me pass the mic over to you.
Well, it's a privilege and an honor, first of all, to sit next to this man.
Yes.
And the fact that he accepted to join the team. So this is our Bitcoin strategic advisor.
Okay.
So he's on the team, and we just love the fact that he accepted the invitation, and it's an honor, and I think it's a validation of what we're trying to achieve.
Could we actually rewind a little bit to maybe give a little bit of context for what you're doing with the Africa Bitcoin Corporation?
Yeah,
Yes.
so we're a Bitcoin treasury company and listed on the Johannesburg Stock Exchange. I think what makes us different from the rest that's out there is we taking Bitcoin, galvanizing our Bitcoin balance to go off and raise capital at a discounted rate, and deploying that capital in a private credit engine into African SMMEs. So as much as we measure BTC yield, BTC per share, we measure human yield.
Yep.
We've come up with the stat, and we're trying to do back of a matchbook math, but we think 1 Bitcoin equals 5 jobs through our private credit engine. So
every Bitcoin that you acquire comes out to,
5 impact jobs. And I think that resonates with a lot of the literature that this gentleman has written. We've read the books. We're trying to personify that vision in Africa, and I think it's going to play itself out in Africa in a very unique way, and it's already starting, and we're quite excited about it. I mean, just recently we announced we've raised 150 million rand of a Bitcoin treasury that's quite anemic. But the point is the capital allocators are liking the strategy. They're buying into it. They love the notion of taking Bitcoin and going to Switzerland, going to Japan and lending at 4 to 5% and deploying it in Africa at an average of 20%. That arbitrage feeds back into the Bitcoin treasury in a very unique way, in a very flywheel way. And that's our story, that's our play. And we have him on board to guide that and give us insight and make sure that we're not doing any shit coinery. But we made sure we didn't do that because we actually, we're the only ones that put Bitcoin in our name. Right, so we're an Africa Bitcoin Corporation.
Yeah, and you got a good guy. He guides presidents as well, Nayib Bukele in El Salvador. Saifedean, we talked a little bit on the Bitcoin Amsterdam live desk about when you wrote the Bitcoin standard, how things would play out. We're now at this place where we see companies like this doing what they're doing. You're a part of it. Just wanted to hear a little bit about your thought process about why you came on board.
Yeah, well, they bribed me with a lot of South African beef. That's the honest answer.
He's a Biltong
fan. I was going to say Biltong. Yeah.
So at Amsterdam, we met at the dinner the day before the conference, and they had a bag of Biltong, and they kept feeding me Biltong and telling me about their project, and they won me over. No, but more seriously, the really compelling value proposition for me here is that I really think that their business model is right for benefiting from deploying Bitcoin in their treasury, because what it does is that it makes them more credit worthy, so therefore it allows them to borrow at a lower rate. And from what Stafford was telling me, they are in South Africa, Bitcoin is really becoming an everyday currency that more and more people are using it. And so I see this this dynamic developing where small businesses that would usually be locked out of credit are able to borrow because they hold Bitcoin, or because this company is able to secure capital at a relatively low rate because they hold Bitcoin, and that helps bring down the interest rates. So people who are locked out of credit can get into credit markets, and then I think really the long-term strategy here is that this is going to help bring down interest rates. It's going to make borrowing cheaper for people in South Africa, and this is what really makes it so interesting for me, because in my work, maybe one of my more controversial ideas is the idea that on a Bitcoin standard, in a Bitcoin world, in an economy with hard money, you're going to witness the interest rate decline. Interest rates are going to continuously decline, and I even argue that eventually interest rates will be eliminated, because the driver of interest rates from the Austrian perspective is time preference. So if people have a high time preference, they discount the future heavily, they demand a high interest rate, and they may be willing to pay a high interest rate if they're desperate to get money right now. So high interest rate is essentially a phenomena of high time preference. And I argue that hard money brings down time preference. Your ability to save for the future, your ability to provide for your future self helps you think more of the future, and therefore it makes you more future oriented, therefore it lowers your time preference. Therefore, it would be reflected in a decline in interest rates. So I think this is a great place to see this, because we're seeing Bitcoin becoming, as Stafford is saying, people in South Africa are using it more and more and more daily. Some surfer kids, he tells me, they don't want to get paid in dollars. They will even not take your dollars or your rands.
In Bitcoin Akazi, for everybody, we had them on earlier. We had Lutando Nabambi from Bitcoin Akazi. They don't like fiat in Bitcoin Akazi. They just want Bitcoin.
Exactly. So if you combine the fact that you have this grassroots adoption, and then you have a company that's utilizing Bitcoin treasury in order to be able to borrow at a lower rate and offer lower rates, I think we're going to be seeing what I would argue is the argument of my work playing out, which is declining interest rates, increasing savings, more and more future orientation, and I just really am excited about seeing this play out in South Africa. And I'm looking forward to going there in a couple of weeks.
Amazing stuff. I want you to actually, for the audience, let them know what are interest rates in South Africa right now. They're quite staggering in my humble opinion.
I mean, if you're lending now on a micro basis, it's 18 to 20%. You know, that's cheap. That's cheap capital. You go to Zimbabwe, it's 20 to 25% per month.
See, that's on.
You go to Botswana, it's per month. So what we see happening is enormous informal economies driven by cash that we believe is an incredible latent potential that we can go into with a Bitcoin play. Because it's not just about giving them fiat. You know, what's very clear to us is if I'm going to lend you 5 million rand, I'm going to take 1 million rand and I'm going to buy Bitcoin with that, and we're going to hold on to that Bitcoin. And if you opt to do that, I'm going to even lower your interest rates even down because you're securitizing with the Bitcoin. So now your fiat becomes cheaper. We're watching you consume that very closely, and at the end of the term, we're going to split that 50-50. So we'll do a little bit of a bit bond. We're going to say, hey, you don't have life insurance in your company, you need insurance for your assets, why don't we do Bitcoin-backed insurance? So this flywheel goes deeper and deeper into giving people the tools that they need, but ultimately orange-pilling them.
Yeah, it seems like you're also fiat is kind of folding into Bitcoin along the way. Is that a good way to
look at it? Yeah, we're bringing it to its knees.
Yeah, okay, fair enough. Slowly,
that's exactly
slowly and steadily. Really, really interesting stuff. I want to shift gears a teeny bit. Saifedean, you were just you were counting some dirty fiat that you've acquired from people coming up to you and buying your book today. Not everybody was paying with Bitcoin. That's not this man's problem if they want to pay him with dirty fiat. But anyway, a little bit about the book, The Gold Standard.
Yes, I will confess, I will take your dirty fiat off of you to give you Bitcoin enlightenment and help usher you into the Bitcoin age. Throw your sins at me. I will purify them and turn them into Satoshis. Yes, I have been selling my books. That's what I like to do at conferences, and sell and sign books. So I've got copies of the Bitcoin Standard and the Gold Standard, the new book, as well as some Fiat Standard as well. So come pick them up, including Bitcoin Standard in Arabic as well, for the Arabic speakers around here.
Yeah.
And
A quick overview. We talked about this a little bit on the live desk in Amsterdam, but just a quick overview for people who aren't familiar with the Gold Standard, because some might be confused. Like, this guy already wrote the Bitcoin Standard. Why are we writing a book about the Gold Standard now? It's a little bit different than the Bitcoin Standard, though, if I'm not mistaken.
Yeah, well, you know, a lot of people who read the Bitcoin Standard say that a lot of that book is about gold, and so now there's a Gold Standard book. So you might wonder, well, what is that going to be about, since we already wrote about book? And the answer is, basically, it's a Bitcoin book. Even though it's a gold book and it's an alternative history, it's a fictional book. It's different from my previous books. I'd never written fiction before. But this is about a third fiction, a third real-world history, and a third economic textbook, basically. And it's an alternative history in which fiat money dies in 1915, and we go back on a gold standard again. But it is a lot better than the previous gold standard. It's like a modern gold standard. It's industrialized. It's all built around the fast clearance of money using modern industrial equipment, like airplanes and so on. So because of airplanes, because of the fast clearance of gold, we are able to have a decentralized gold system that doesn't allow central banks to create credit and finance war. And so war falls apart in 1915. The World War I ends early in 1915. And then we live a very different century. Imagine if we didn't have money printers during the 20th century, if we had hard money and that maintained its value, would have appreciated in value over time. And then it's an elaborate thought experiment to think about the economics and the politics and all facets of life under a world in which the money increases in supply.
Okay, and you probably had some fun with that. I can see by the smile on your face.
Just imagine what South Africa would have looked like. I mean, we're the biggest producer of gold in the world. If we won the gold standard, imagine what Africa would have looked like. Imagine what the Congo would have looked like. Imagine what Ghana would have looked like.
But I have to go back to what you were saying about this Bitcoin adoption in South Africa, because I feel like you're getting your second chance right now. So you have, I think is it called? It's either Pick and Pay. It's a grocery store. Pick and Pay, right? So Pick and Pay accepts Bitcoin, if I'm not mistaken.
Well, I mean, engine garages, Pick and Pay. We got coffee shops, everyone now. We've got over 700,000 merchants
that are accepting Bitcoin. And now Money Badger is another thing that we can add to this. Can you explain to the audience a little bit about that? That just happened in the last few months. No, that Money Badger. So can you explain how that works? It's a little bit different than just accepting Bitcoin, if I'm not mistaken.
Yeah. So what they've done is they've integrated their technology with QR code-based payments.
Okay.
So essentially, the merchant can accept payment from a Bitcoin wallet. So it's coming in, and then it gets converted to Rand into the merchant.
Okay.
And they've literally just opened up every merchant terminal to accept Bitcoin.
So it allows those who want to live on a Bitcoin standard to do so, whether or not the merchant accepts it.
Correct.
Essentially, yeah. It's a different. It's we're seeing that with Tando in Kenya, the Bull Bitcoin wallet.
Well, Square's doing that.
Square's doing it as well.
Yep.
Yeah, and actually the inverse as well. You could pay in fiat and turn it into Bitcoin upon receiving it. Quite exciting stuff. A final question to both of you. You know, I think when we talked about this in Amsterdam as well, Saif, you had some ideas of what things would look like. You thought maybe it would be more adopted by everyday people first, Bitcoin, but we're seeing adoption amongst governments, amongst corporations. And there's a lot of people who sort of say that they feel like they need to fall on one side or the other. Like, I'm just a cypherpunk and I just do this, or I'm just into the Bitcoin treasury stuff and Bitcoin's just a financial asset. But I think what we're seeing with what you're doing in South Africa, plus when we look at Bitcoin Akazi and Pick and Pay, and we could see that it's all of it. It's the whole thing, and it has to be the whole thing if Bitcoin is ever going to work. So I just wanted to sort of end this conversation with thoughts on that. If Bitcoin is going to get into every crack and crevice of society, you know, is all of this sort of grist for the mill? Do we need to see everything that we're seeing at conferences like this?
Let me take this one
Yes,
first.
please. Yeah.
I think if we see what we see happening in Bitcoin treasury land, I think this gives the Bitcoin maxis and the cypherpunks a reason to dislike what we're doing.
Okay.
So what Saylor's doing is incredible. The guy there's no longer gravity. He's left the planet. He can attack fixed income markets, and we love seeing that. He's the ultimate. But I think if you're sitting with a couple thousand or thousands of Bitcoin on your balance sheet and you don't have an underlying business, I think TradeFi is looking at you and asking the hard questions. I think the Bitcoin maxis are looking at you and asking the hard questions.
Yeah.
And I don't know how many Bitcoin maxis are actually on the boards or running these organizations. So I'm on the fence of looking at this as a Bitcoin treasury company inside the yard.
Yep.
And I'm worried. I'm worried because I'm concerned. And I think what we've done as when we started off was to focus on the human impact.
Yep.
And I think we need to go back to basics again. You know, what was Bitcoin made for? Now in Africa, we do get up when we say Bitcoin was made for us.
Yeah.
And when we do a Bitcoin treasury company, we're not just interested in getting on a Bitcoin leaderboard. We're not interested in just hoarding thousands of Bitcoins and doing a pipe deal. What we're constantly asking ourselves is, can we take this asset and truly have the impact on the black African female woman trying to do something with that tractor, trying to do something with that Nguni cow, trying to do something? We want to have that impact. When you approach it from a human perspective, then you go back to the original reason Bitcoin was made. Bitcoin for us is not economic emancipation. It's economic oxygen for us. Right? For us, it's not a plate. When Bitcoin goes up or down, you guys, it's an inconvenience. When money doesn't work in Africa, people die.
Right. For
us, it's life or death.
Yeah.
And when you approach it from a life or death perspective, then everything that he's put into his books becomes something that we want to personify. When he talks about the gold standard, when you have pristine capital in Africa mixed up with the average age 19 across the continent, more than 20%, more than 60% of the continent below the age of 25. So the latent human potential mixed up with pristine capital, access to AI, artificial cognition, pristine capital, latent human potential put into a smoothie. I think this is where you see Africa rising.
Appreciate that. Yeah. Saif, your thoughts on the Middle East, Bitcoin adoption in the Middle East? We'll end it here. But is it a similar effect that you believe it'll have? Where are you seeing the most adoption? Where would you like to see more adoption?
You know, it's interesting. We were discussing this in Amsterdam, and I said it's institutions that have taken the lead almost when I thought it would be the other way around. And I think perhaps in Africa we're going to see this reverse based on talking to Stafford and hearing about how things are going there. And it's a similar dynamic to what happened with cell phones, in that once cell phones became available, it didn't make sense for many people in Africa to just even try to get the landlines. And in a sense, you know, you can live your life without much of the infrastructure of landlines because everything is so much, everything's becoming digital and wireless anyway. So in this case, you can see how it's an extra incentive for the adoption of Bitcoin, because all of these people who don't have access to regular financial institutions, well, now it just becomes even so much more inconvenient. It's not just that you can't get it, but even if you were to get it, it's a lot of work and it's a lot of hassle. And downloading a wallet on your phone is just infinitely easier. Just like buying a phone is infinitely easier than arranging for a town to have all of its wires and connections in order that people could have landlines. So it seems we're witnessing this kind of leapfrogging happening, and I really hope it takes off. And I love to be part of it. That's why I'm joining. Here in the Middle East, it's also a little bit mixed in terms of the picture. There's, I'd say, more adoption on the rich side, people who are buying as investors, people who have portfolios, people who own stocks and bonds and sophisticated financial products. They seem to be more likely to be the ones that get into it. But on the other hand, of course, because of the political problems in the region, more and more people are getting into it the hard way. You know, places like Syria, Iraq, Lebanon, and in Palestine, you see more and more sanctions and problems and war. And because of that, people figure out that the only way out of this is to just
route around it,
route around it by using Bitcoin. And, you know, this is, of course, it's usually very life-changing, but it doesn't really move the needle in terms of adoption because, you know, you're talking about desperate people in desperate situations and refugees, and it's not really building up for a kind of economic movement that can be sustainable as much as you would like. But I think there is a change. I think there's, in this region, I think there's plenty of positive signs. Where I live in Jordan, they just passed a law to regulate digital assets, and now the government is going to become a lot more involved in the industry. I think it's going to be easier for people to buy using their bank accounts. I'm hearing rumbling that Saudi Arabia is also in probably in the later stages of probably approving something similar to the laws that were adopted in Jordan, which is similar to the ones here in the UAE and in Bahrain. And, you know, I've been invited to speak at one of the big conferences in Saudi Arabia this year, the Future Investment Initiative, which is one of the major investment conferences in Saudi Arabia and in the world, actually. So I was invited this year and last year. So that, to me, suggests, you know, there's a growing openness toward listening to here. And I think here in this region, we don't actually have a very bad history of inflation. The currencies here have generally done well. If you look at the Gulf currencies, they've basically been flat against the dollar in long term. Some of them have even appreciated against the dollar. So people don't really have the incentive to go and look for a problem of inflation. And I would say it's even less of a stated problem than in the West, because in the West, the real disadvantage of inflation is all of the financing it allows government. Government has an enormous amount of money that interferes in everything and allows them a lot of power. Here they're much more financially responsible because they don't rely on inflation. So people don't really have a reason to be all that agitated about it. However, once we see a governmental shift, once governments are open about it and governments are encouraging and regulating their citizens to do it, I think these are the sort of societies that would swing probably pretty quickly. I think, you know, people generally here, there is a respect for authority. There is some sense of loyalty to the government. And so if the government is saying this is illegal, if the government is saying this is gray area, we're not sure, people are just going, a lot of people are going to stay. Obviously, you know, I'm painting with a broad brush here. A lot of people will break laws. But I would say that it probably makes more of a difference here once you get a regulatory green light. It would probably make more difference than in many other places where people would do it on their own, regardless of what the government says. So I think if we see more of the governments of the region move in that direction, I would expect it's going to pick up pretty quickly here.
Okay. Well, we appreciate both you gentlemen for joining us. Best of luck to both of you as you create this endeavor together. Stafford, amazing work that you're doing. Very, very cool to see this next stage of it with Saifedean. Quite legendary. So, yes, speaking of news, I think that news was broken over at the Bitcoin for Corporation Symposium today. We're also about to air a conversation between Michael Saylor, the man himself, speaking with Simon Garovich, the head of MetaPlanet. So we're going to cut right to that right now. We want to say thank you to all the listeners, to everybody who tuned in today. Be sure to keep it locked here, 9:30 a.m. tomorrow local time, which I believe is GST, Gulf Standard Time. We'll be doing this again all day, so join us. We'll be back here tomorrow, everybody. Take it easy. Good night.
Good afternoon, everyone. It's an honor and privilege to share the stage with you, Mike. It's the first time I think we're doing this together.
Yes, it is.
I hope it's the first of many times. I think I wanted to really start and thank and acknowledge you for the inspiration that you've had on MetaPlanet and really on so many other Bitcoin treasury companies out there. Wouldn't be possible without your leadership. I'm reminded of a conversation that we had at the beginning of the year ahead of our shareholder meeting. And you said that our companies are cheerful revolutionaries in the capital markets. And I think now that rings louder than ever, particularly as we are looking to embark on our own journey for perpetual preferreds following Stretch and Strike for the Japanese market. And I think at that time you said that traditional equities are valued based on the capital that they hope to have in the future, future cash flows, where we now have an opportunity really to be valued based on the capital that we have, digital capital that outperforms the cost of capital. And so we're on this mission together. It's inspiring to see you do all that you do in the US and beyond, and we hope to have an opportunity to do the same in Japan.
Thank you. Thank you. So Simon and I have something in common. We're the two largest Bitcoin treasury companies in the world. So our company pursued a strategy of accumulating digital capital. Bitcoin is digital capital. And what do you do when you have capital? You issue credit against it. And we started issuing credit. And Simon's company has accumulated the largest amount of digital capital in Japan. And they're the largest digital treasury company after us. And they're also now starting to issue credit against it. So I guess, Simon, I think the most interesting thing for the audience would be if you describe Metaplanet, but primarily describe the balance sheet of Metaplanet and describe the capital markets in Japan, like the credit markets in Japan. What's the state of bank credit, treasury credit, corporate credit, junk bond credit in Japan, mortgage credit in Japan? And then talk about your latest credit instrument you just did and your plans in the future, because I think that'll be interesting to people here.
So the Japanese capital markets are relatively sleepy when it comes to anything like a perpetual preferred. Yields are incredibly low. Japanese investors virtually have no options. Money market funds are finally returned to the market recently, and people are incredibly excited about 50 basis points. And so the opportunity we have is really to connect the Bitcoin world with one of the largest pools of savings in the world. There's $7 trillion of cash sitting on personal bank accounts, bank balance sheets earning nothing, and corporates have another 4 or 5 trillion. And so there's a ton of capital there that has been, I suppose, accustomed to deflation for a long time. It's okay to keep cash in a bank account because next year you're still able to buy goods and services for the same price. But that is now beginning to change.
So Simon, if I'm a Japanese family and I put my money in the bank, so what kind of yield do I get?
0.
You get 0. Did they ever go and invest in foreign markets, like in US dollar markets, to try to get 5 or 6% or something? What's the thinking in Japan about, do I leave the Japanese currency to chase after yield, or do I just sit on 0? And by the way, can I buy corporate bonds? Are there any ETFs in Japan, corporate bond ETFs or junk bond ETFs or mortgage-backed ETFs that pay more than 0? And what are those like?
The highest yielding products now are effectively REITs, so you can buy those. A real estate investment trust, the REITs. If you're a sophisticated Japanese investor through your broker, you're able to access foreign markets, but it's relatively kind of few and far between. People just like to invest in local companies. And the main function of that is because the disclosures are in Japanese. And so
culturally, and then they're probably afraid to take currency risk too, right? Because that could really hurt you.
Yeah, I think there's definitely an element of that. And so there is an opportunity really for us to transform that market, to offer something which is different to what.
So does that mean that a typical retail investor or a treasurer in a corporation in Japan is pretty much settled for 0?
Yes.
0.
Yes, they're accustomed to 0. I think they're now desperately looking for yield. And so being able to offer an instrument that pays them 10 times better than the money market rate is something that will definitely resonate very well.
Tell us what you're planning and what you're thinking.
Sure. And so we announced a couple of weeks ago our version of Strike, which we're calling Mercury. It's a perpetual preferred. It pays 4.9% in yen and has convertibility into equity. We think right now it's probably one of the cheapest call options on Bitcoin out there. And in the meantime, you get paid a nice 4.9%, which may not seem as attractive in the global context. But when you're competing against bank deposits in Japan that are earning nothing, or money market funds that are paying 50 basis points, this is 10 times higher than that, and also has the convertibility into equity. I think the real product market fit is Stretch. And I wish, Mike, you had launched that only a month earlier, because then we would have done a shelf registration for that sooner. We have a shareholder meeting coming up at the end of this month, and that's when we will be doing a shelf for our version of Stretch.
And what are you going to call it?
We're calling it Mars, the Metaplanet Adjustable Rate Securities.
So I wish I had the name Mars. I think that's really cool. MicroStrategy Adjustable Rate Security. So if I had done it earlier but not changed the name, we could have stolen Mars, but probably it's better that you have Mars.
We are leaning into the planetary theme, so there are quite a few other planets that you could take first.
Our ambition will stretch all the way to Mars.
Indeed.
Okay, so tell us about the preferred stock market in Japan and the regulatory issues and how deep is it or not deep and what you're thinking and what you've learned along the way.
If I shared too much with you here, are you going to try to do the same in Japan?
No.
You've heard it here.
Not in the next 12 months. I'll give you a 12-month head start.
Well, I certainly think that if we do the hard work of educating the regulator and get our preferreds launched, it will be easier for you to come to the market. Hopefully you can welcome us to the US at some point as well.
Absolutely.
So currently there are only 4 listed prefs in Japan. Incredibly sleepy market. It's a massive capital market, and why is there only 4 listed prefs is a big surprise. There has been one other company, ANA, the airline, that has announced their own pref. They'll be the 5th, but our goal is to be the 6th and the 7th with Mercury and Mars. It's an incredibly exciting time, really, for us to be that bridge between all that cash sitting there and the Bitcoin market. We have shareholder meetings that we convene probably more regularly than we otherwise would. We really want our shareholders to buy into to the pivot that we made from last year. We've had 5 shareholder meetings since April. And each of our shareholder meetings are literally like rock concerts. There are 3,000-4,000 people in attendance. And a typical Japanese shareholder meeting, no one attends. It's what we call a kabuki theater. There's 5 or 6 people that show up, no questions are asked, management doesn't want to answer any questions, and before you know it, all the resolutions have passed. But we really want to embrace the fact that we're onboarding Bitcoiners into Japan. We now have 212,000 unique Japanese individual shareholders, and these are people that didn't know about Bitcoin before they discovered Metaplanet. And so we feel we have this really important goal, a higher calling to bring the love of Bitcoin to Japan. And again, it's thanks to you, Mike, for all that you've done. It makes it very easy for us in Japan to be able to point to strategy and say, this is what a large, successful company in the US has managed to do in the US, and Japan wants to be an American ally and do the same in Japan.
A funny aside, before we discovered Bitcoin, we had a shareholder meeting and we had 1 shareholder show up. 1. So if you're wondering how far we've all come, the big innovation of digital credit is putting together a number of innovations. The first innovation is use digital capital, Bitcoin, to back it. The second innovation is you put it in a preferred equity instrument that's perpetual. The third is you take it public. And the fourth is you put a shelf registration on it so you can continuously sell it. And if you do all 4 of those things, then you've created this perpetual liquid digital credit instrument that is 2 to 4 times better than traditional credit, and you can sell it without the credit risk. In the US, we've got pretty well-defined regulatory paths to do shelf registrations. Our company, by the way, we were writing in the preferreds, and there were already thousands of preferred stocks because banks issue preferreds, and so there was a much bigger preferred stock market when we launched. Although the reputation in the industry was very sleepy, and they were like stodgy. And I don't think anybody had ever put, it was almost never heard of that you put a shelf registration on a preferred stock. So we were combining an equity idea with a preferred equity idea. And as I've gone to other parts of the world, I've noticed there are some regulators where they'll say you can sell the preferred stock, but you can't implement the shelf registration until a year or 2 years after the preferred is trading. And that would cripple the adjustable rate security. So it's very tricky. You've come up with pretty creative ways to actually implement continuous selling in Japan. You want to describe how you do that and how you think about it? And then also, what is your time frame to launch Mars? I think that's interesting.
And so we were looking for a way to execute an ATM in Japan after Strategy was doing that successfully in the US, and we sadly discovered that there was no ATM structure in Japan. And so we came across a fundraising mechanism that a lot of small and medium-sized companies in Japan avail of, which is effectively a moving strike warrant. And so that's how we've raised most of our equity kind of so far over the past 18 months. And that is something that you can theoretically do on a pref as well. And so we would be looking to do a moving strike warrant on our perpetual preferred. We just announced a pre-IPO of our version of Strike. So our Mercury, we've now issued. The goal is to get that listed in Japan early next year. I'd like to give you an exact date, but as you know, with the regulator, there are a lot of steps that one needs to jump through. But I feel quite confident that we can tick all those boxes and get the instrument listed in due course. As I said, the best product market fit is Mars. That's something that we'd like to do kind of closely thereafter. It is something that I think the Japanese market would really, really like, having a high yield bank account, something they can purchase in their securities account, and have something that has a stable price that pays a yield that is far higher than they're used to seeing.
So ultimately, the appeal is if you can put together digital capital with a preferred, make it publicly traded, find a way to feed liquidity in the market, adjust the dividend rate variably, and then manage the shelf registration to provide liquidity but trim the volatility. If you put all those things together, you can create this magical digital credit instrument. Mars would be the third. Strive created SATA, the second, and Stretch was the first. My impression is, there'll be over time a dozen or a few dozen treasury companies that'll create this kind of credit, and it'll be good for the market because the more people offering it, the more enthusiastic the credit investors will be. How are you going to market your credit instruments in Japan? And do you have any thoughts about will you issue credit instruments in the US or anywhere else? What's your idea there?
I think the Japanese market is, it's one of the largest markets in the world. We would like to be, the player in the Japanese capital market. That's our primary focus at this point. Maybe there's an opportunity for us to expand in Asia. But I do, and maybe this is an unpopular opinion, but I don't think there is a need for that many Bitcoin treasury companies and that many issuers of digital credit. The most important thing is having a substantial balance sheet of Bitcoin. And you now have more than 3% of the global supply. Our goal is to get to 1%. Still, quite the way to go from here. But we've said we want to get to 210,000 by 2027. It is an important thing that we're all doing here. It's
So your focus is going to be to provide digital credit in JPY, in yen?
That's correct.
And dominate that market. And if we ever want to provide bank accounts that pay 6% or 5% or 7% in yen, you're going to need that digital credit instrument to do it. And that it's like marketing, working with regulators, building the capital base, getting the instrument listed on the exchange, getting it liquid. And that you have to be laser-like focused on that, which I applaud. So I asked you a lot of questions, Simon. Do you have any questions for me?
So I'm one of your followers on your X account, and I see over the past 3-4 days, you somehow have managed to be in pretty much every country in the region, taking a nice selfie with a beautiful backdrop. Can you share with us a bit about who you're meeting, the types of conversations you're having?
You know, I think that this entire region is much more pro-digital assets and pro-digital transformation than most other parts of the world. The two things about the Middle East that stick out, they like technology and they like money. And so if you believe in digital transformation and digital technology, and if you're interested in money, then the digital transformation of money and digital transformation of capital markets and equity and digital banking ought to be very interesting. So I've been meeting with, I've been obviously meeting with all the sovereign wealth funds. I've been meeting with, I don't know, 50, 100 different investors, hedge funds, family office investors that are interested. I've been meeting with banks and people that own banks or run banks. I've been meeting with fund managers that offer financial products. I've been meeting with regulators in every jurisdiction. And I think, and my message, by the way, is very, very straightforward. My message is, we now have digital capital. Bitcoin is digital capital, is digital gold. On top of digital capital, we have a new asset class called digital credit. Digital credit strips the volatility from the capital and provides yield, income. So the simple idea is, if you have a 5-year-old kid, you can give them $1 million worth of land in Manhattan, that's capital, and tell them wait 30 years and then maybe they'll be rich, but there are no cash flows. Or you can give them a credit instrument that pays them $10,000 a month forever, starting now. And so most people want the credit instrument. They don't want the capital instrument, even if the capital appreciates at 30% a year, and even if the credit only pays 10%. That's okay. They'd rather have 10% non-volatile than 30% volatile with no cash flows. A treasury company like ours, like Metaplanet, like Strategy, exists to convert capital into credit. Once you understand that, then you have 3 ideas: big, bigger, and biggest. The big idea is you take your sovereign wealth or your wealth and you buy digital capital. If you don't trust anybody, you buy digital credit. If you think Bitcoin is a real thing, but it's too volatile for you, you're just going to get 2 to 4 times as much as traditional credit. And then you get the first 10% of the return risk-free. Just buy the credit. And then if you believe in the idea of digital credit and you want amplified Bitcoin and amplified exposure, you buy the treasury company. You buy the Metaplanet, you buy the Strategy, you buy the equity, and you strap on for the rocket ride. It's going to be very volatile, and you're going for the next $1 trillion stock. And so if you want that, you buy the equity. Otherwise, you buy the capital or you buy the credit. So that's the big idea. The bigger idea, there's a bigger idea, which is you have a bank, and so have have the big Emirates Bank, First Bank of Abu Dhabi, Bank of Bahrain, you know, the Kuwait Bank, have the bank custody Bitcoin, custody. Everybody talks about self-custody for the bank in the country. Buy Bitcoin, have your bank custody the Bitcoin, and then start to offer credit networks on top of the Bitcoin. And if your bank offers people SOFR plus 50 basis point loans on Bitcoin, then there are $2 trillion of digital capital going to 20 trillion, and you will attract 5 or 10% of it, and you can attract $1 trillion or a few $1 trillion to your bank in your country, because right now, most big conventional regulated banks don't handle Bitcoin. They don't extend credit on it. So integrate digital capital into your banking system. That's the bigger idea, because then you're going to have big Bitcoin holders wire $27 billion of Bitcoin to your bank overnight. They're all going to come to you. And then I end with the biggest idea. The biggest idea, instead of getting 10% of $2 trillion, why don't you look at the traditional credit market, which is $200 trillion? Look at bank credit in Japan that gives nothing. Look at credit in Europe, gives nothing. Look at Swiss credit, gives nothing. Look at the money markets in the euro that pay 150 basis points, or the money markets in the US that pay 400 basis points, or the corporate bond market, which wouldn't exist if people weren't so disgusted with their bank account. The only reason you buy a corporate bond or a junk bond or private credit or mortgage-backed security is because your bank account doesn't pay you 6% or 8%. And so the biggest idea is create high-powered digital money. You might have heard that phrase, high-powered digital money. It was used by Satoshi. He said the future is corporations holding Bitcoin to create high-powered digital money. The way to create high-powered digital money is take digital credit, whether it's Mars or SATA or Stretch, and create a fund which is 80% credit, 20% currency, lay a 10% reserve buffer on top, strip away all the volatility, take it to vol of 0, and offer someone, you don't have to offer them 10% dividend in Stretch, offer them 8% dividend in a bank account, do it with a regulated bank, endorsed by the bank regulator, and now I just wire my money to the bank of whatever, the bank of Dubai, the bank of Abu Dhabi, the bank of Bahrain, the bank of Kuwait. I wire you my billions of dollars or tens of billions of dollars, and you pay me 8% interest every day, 0 vol, in a regulated bank, powered by digital credit, which is in turn powered by a treasury company with 5x as much digital capital, over-collateralized. So if you offer digital bank accounts and digital money accounts, then you could presumably attract $20 trillion or $50 trillion. Why wouldn't everybody with all the money in Europe or Africa or South America or Asia or Japan or Australia or Canada or the US just send all their money to your country? And your nation will be the digital banking capital of the world. Your bank will be the biggest bank in the world. Your customers will be delighted. And you can decide if you want to keep 50 basis points or 100 basis points or 200 basis points. You can even adjust the risk and the yield and the liquidity by increasing the currency from 20 to 30 or 40, or you can play with the buffer. But you know, if the banks in Japan are offering 0, and you offer 400 basis points, and if the banks in Europe offer 0, and you offer 500 basis points in euros, and if the banks in the US offer, they're going to be offering 300 basis points in a money market or 200. offer 100 to 300 basis points more. And what I would say is, what is the perfect product? It's not the iPhone. You need to be awake and be able to see and hold the iPhone. The perfect product is a bank account with zero volatility that pays you 400 basis points more than the risk-free rate in your favorite currency. And if you're a financial engineer, the Sharpe ratio is the return minus the risk-free return divided by the volatility. And when the volatility goes to zero, the Sharpe ratio goes to infinity. If you want the lightsaber of money, the laser beam of money, the nuclear fusion reactor of money, it's going to be a digital bank account. And the innovation's going to be digital capital, digital credit, a digital fund plugged into a digital account blessed by a regulator. I don't have a country. It's above my pay grade. I don't have a bank. But you have a bank. The people I'm talking to have banks, and they have countries, and they have regulations. So I'm not saying they're going to do it. It's really a free-for-all. The question is, who wants to be the Switzerland of the 21st century and attract all the money in the world? And the answer is going to be whoever appreciates money the most, wants the money the most, that understands technology the best, that is willing to take a courageous stance of conviction with a degree of clarity. That is the opportunity. And that's all the conversations have been extraordinarily energetic, enthusiastic, and I couldn't be more excited. I think it will happen somewhere in this region. We'll see where.
Well, it's wonderful to be front row of innovation as we see a transformation in the capital markets. I think our time may be up, but it's been a pleasure sitting alongside with you, and look forward to doing a lot more together.
I'm delighted to be on the journey with Metaplanet, with Strive, with all of the Bitcoiners and all the Bitcoin treasury companies and everybody that supports the space. Everybody buying our stock, everybody shorting our stock, everybody buying the credit, everybody arbitraging the credit. We love you all. Thank you for your interest.
Thank you very much.